BT500 is one of the most prestigious business rankings in India. Since its inception in 1992, Business Today has ranked India's 500 largest listed companies based on a bunch of factors. Market cap, establishing itself as one of the most comprehensive and credible sources of information on the Indian corporate sector. Through this particular Wealth Creators Summit, we aim to delve deeper into the pivotal factors that drive growth among the BT500 companies. We'll be exploring the finer aspects that go beyond traditional metrics, like valuations and earnings growth, to uncover the innovative strategies and forward-looking practices that can help businesses thrive in this ever-changing economic landscape. Now, the first session is aptly titled, The Secret Sauce of Wealth Creation. Now, I know you've all come out from your lunch straight to this particular hall, but we have a secret sauce that we'll be talking about. In this session, we'll be uncovering the elusive elements that propel companies to wealth creation as we delve into strategies, innovation, and unique approaches that set the stage for enduring success. Our speakers on this panel are Ramesh Iyer, Vice Chairman and Managing Director, Mahindra Finance; Ashish Gaikwad, Managing Director, Honeywell Automation India; Anas Rehman Junaid, Founder and Chief Researcher, Hurin India. This session will be moderated by my colleague, Siddharth Zarabi, Managing Editor at Business Today TV. Can we have a huge round of applause for the next session?
Good afternoon and a very warm welcome to all of you here in the hall and those who are tuning in live across various Business Today platforms, the multiverse as we call it, and a wonderful panel here. And since Ayush has introduced the topic as the secret sauce of wealth creation, some of you might be wondering at the choice of the panelists, but this is a deliberate choice. You have one of India's largest companies when it comes to tractor finance, for example, who is here, so they know the pulse of Bharat. You have one of the most storied names when it comes to electronics, manufacturing, a whole lot of control systems, multinational corporation with a very strong set of IPs, stable, solid stock, if you were to say in stock market parlance. And we have somebody who understands who are the wealthiest people in India. So I'm going to try and keep this as interesting as possible, and Ramesh is my choice to start today's session. You sell tractors, but I think you sell dreams in rural India for going up the value chain. I want to ask you, have you met a farmer who has purchased a tractor or two from you who also wants his children to do the same thing? Or have you met more farmers who aspire not for tractors, but Mercedes and Lamborghinis for their children?
Good afternoon, and thank you for having me on this panel. We all the time meet all kinds of people. Have you met is not the question. How many have you met is the real question. When we first went into the rural market, traveling from one location to another location by itself was a challenge. And now if you go there, you sometimes get a feeling, have you reached an urban center? And some of our urban roads are making it look like are we in rural market. But the fact is that, tractor plays dual role. One, of course, it meets the farming requirement. But I don't know, I'm sure most of us are aware, 40% of the cash flow in a tractor comes from non-farm application, which is haulage application. So it's a misnomer sometime when we think that only farmers buy tractor. It's also Mercedes owners buy tractor because they are contractors who are doing extremely well in life, and therefore they add tractor for their contracting business.
Or because of their tax returns to show farmer status.
That's not the direction I may want to go because they are our customers and they make us be in business. But the fact is that you will, as you asked, the aspiration is always to progress further. So if you really look at What initially used to be just a tractor purchase, today it's substantially increased to a very different level. They actually buy with harvester, with various other equipments. And therefore, the overall project cost of buying a tractor itself has gone very high, right? And the children, whether they want to come into farming or otherwise, I think they're all very educated and they are actually bringing in what are the other ways of doing farming, right? And not just depend on the traditional way of doing it. And that's the contribution the youngsters make into that industry. And therefore, they are continuing to be very interested in wanting to be in farming. It does not stop them from being aspirational to wanting to do more things. But again, my belief is that while they're educated, they may be even employed elsewhere, etc., etc. But I've seen many of them take leave and come during that harvest time or the sowing time and participate in farming. Because they don't look at it anymore just as a profession, it also, in some form, an excitement for them and regain their energy to probably go back and do their work.
Absolutely. I'll come back to a couple of pointers that you have given in your first answer. Ashish, I'm coming to you, and just to further explain to our viewers and the audience here, you do stuff that most ordinary folk perhaps don't realize. You are behind so many things behind the screen, and many touch points in our lives as consumers would have a Honeywell product somewhere. You have a long history in India. You are a listed company. What, according to you, have companies like yours done when it comes to India and its economic progress? And I ask this from the point of view of the value that you have created in the high-tech space.
Sure. First of all, thanks, Siddharth, and hello, everybody. I represent Honeywell here, as Siddharth introduced. And Honeywell is in the high-tech sectors. There are essentially three things, if I have to really simplify this highly diversified organization. One, we are focused on aerospace technologies. So everybody, nowadays takes flights. Any flight that you take, Airbus or Boeing, the avionics and the pilot assistance electronics is from Honeywell. The second area that we are working on for many years now is automation. And this automation goes into the infrastructure and building side. So airports, malls, metro stations, you take hospitals, stadiums, etc., etc. All the automation. And then also the same kind of automation in the manufacturing industries like oil and gas, refining, petrochemicals, pulp and paper, minerals, metals, mining, etc. And then the third one, which is really becoming big now, is energy transition, because of the climate change factors, etc. Of course, Honeywell used to be very much a name in the conventional fossil fuels, but now with the whole aspect of we moving towards renewable fuels and the whole circularity that we want to bring in for saving the planet, I think that is another area that is a big part of our technology. Now, coming back to the question, Siddharth, you asked, a lot of companies in the past, let's say a couple of decades ago or even more, came to India with the purpose of leveraging the cost arbitrage, the labor cost arbitrage. I think that is one thing Honeywell did not do, and I'm glad they did not. And Honeywell has been in India now for almost 9 decades, so which is a long period. It didn't happen overnight. But the thought process always was not just to look at the lower cost of labor, but also to establish itself as a local company, not as an MNC. That's important. It's subtle, but it's important because that's when we started investing into people development, taking people from here for global assignments, bringing those people back, a lot of churning that happens. And this is the thing behind the curtains that makes the value that you see getting created, because that sort of fuels innovation, that instills confidence that makes it seamless whether you work here or let's say, Des Plaines in Chicago or in Houston, etc. So I believe this is a big factor of not looking at India for only the low cost. And also nowadays people look at India as a consumption market because of the 1.4 billion population. But again, that may be a mistake because you need to leverage India for its holistic advantage and not just the captive market or the lower cost, right? So that's what is different.
Absolutely, and Honeywell is a listed stock. You can go and see the kind of value that they have created, and it's very important to take into account the fact that employment also leads to wealth creation, and for a country of the size and nature of India, this is a very, very significant aspect. I'm coming to you now on your understanding, and I'll request you to give us the sort of summary straight away. Who are the wealthy in India? And from all the data that you keep rigorously collating and then analyzing, what is the shape of the wealthy in India? Is it Baap Dade ke zamane ka paisa, or is it being generated by knowledge, by new sectors? Give us the crux of that.
Thank you for this opportunity. It's lovely to be here with all of you. I think from a rich list is all about promoting transparent wealth creation. And India is just a fantastic story from a wealth creation perspective. And over the next decade, you would, based on our data, you would see a lot more wealth creation happening specifically from 4 categories of people. The first is, of course, traditional family businesses. I mean, they would continue to grow well. They continue to consolidate. That's going to continue to create a lot more wealth. Second category is professionals. And I'll tell you why professionals. If you look at Hurun India Rich List, almost 65% of the Hurun India Rich List is age 60 and above, which means the next...
That number once again, you said
65%.
65% of the Hurun India Rich List 2023 Rich List is
60 and above.
60 and above. So this is a good data point. 60 and above constitutes a significant majority of the rich list in India.
So next,
and what's the size of people when you, that would be how many?
The rich list is about 1,300, 1,400 that we know of. And
so only 1,300 people are rich in a country of 1.4 billion people?
That we know of.
That you know of. Ramesh, you wanted to interject before he goes?
I just wanted to ask, is 60 a criteria? Then we can hope to become rich. Instead of waiting.
No, I'll tell you the...
Ummeed ki kiran baki hai.
No, I'll tell you the importance of that number, which means next 10 to 15%, India is going to witness possibly the biggest intergenerational wealth transfer in its history, which means 2 categories of wealth creators will happen. One is, of course, the next-gen entrepreneurs, and second is professionals. Because professionals are going to definitely play a huge role in terms of creating wealth, like the likes of Sundar Pichai or the CEO of DMart. You would see a lot more of people who are sitting on the dais who would possibly feature in the rich.
As long as you exclude me for that, you can point your finger everywhere else.
Then of course the third category of individuals is of course startup entrepreneurs, because wealth creation for startup is very much required for an exponential wealth creation. So a lot of founders from startup ecosystem will continue to create. Of course, there's a funding window right now and so on, but then a lot more interesting sectors and founders will come from that side.
So I want to interject here. Startup founders becoming wealthy, mostly paper wealth, right? Or just notional wealth?
No, India is a very young country, right? I think our first unicorn came in 2012, right? Unlike most of the other established economy. So what would happen in the next, possibly, I also run a venture capital fund. So what would happen now is you'll see a tapering or more reasonable valuations or some of these sectors which are hyper valued coming down. But once the liquidity becomes even more available in the next 2 years, when the Fed lowers the interest rate, you would see a lot more super amazing startups coming from India.
So what are the top 3 sectors which are currently maximum wealth creators from the list that you do? You know, there are various ways to measure it.
Correct.
But from your perspective, what are the top 3 sectors?
So just to add one more segment of people, and then I'll go to that question.
Sure.
The last category of people who generate wealth in India is also capital providers, the fund managers, private equity fund managers. You would see a lot of them coming into the list as well. So that's broadly the 4 category. This year's rich list is very interesting because for the first time, the top 3 sectors who contributed to maximum amount of wealth creation in the country was from manufacturing. Before there was software and services and so on. There were chemicals is there, pharma is there, industrial goods is there. So you would say very heartening to see a lot more manufacturing based entrepreneurs creating significant amount of wealth in the country.
So are we going back to the 60s and 70s in a way? And Ramesh, I'll come to you with that question because IT-enabled services, 25 years, fantastic run. Yeah. And now it's manufacturing, which is old. I mean, its techniques are modern, but manufacturing is ages old.
I did not say IT came down. I said manufacturing went up.
Okay.
So I think it is not. It clearly shows the potential and the growth path that India as a country have. It is next 10 years, just to give you a number, when we put out the list in 2012, when the GDP was about 1.9 trillion, we had about 50 billionaires. Now, we are at GDP of about 3 trillion. We have about 260 US dollar billionaires, right? Number of startup founders in 2012 who were in the rich list was 0. Now it's more than 100, right? So number of individuals who were born after 1990s, let's put it this way, the youngest in the list in 2012 was 35 years old, now it's 19. So you could really see wealth from across all the sectors, and this indication that the manufacturing is really controlling, it really shows the growth potential that India as a country have. And for India to hit 10 trillion GDP, the number of billionaires or billion-dollar companies, or number of companies, the overall valuation of BT500, all that will at least double or triple in this next few years.
Ramesh, I'm coming to you. This is a very interesting perspective of how India is changing. And, it's said that compounding is the real secret sauce behind long-term wealth creation. But from you as a financer's perspective, what is the transformation that is happening all across India in this regard?
So, when we started, if somebody bought one vehicle, that itself was thought to be, how is he investing 25% buying such a high-cost vehicle? Today, if you see the number of fleet that is getting added in the transportation segment, it's because infrastructure is doing well, logistics is doing well, and therefore the fleet operators are going up, and substantially going up. I mean, if those days we used to think if somebody had 25 vehicles, he was a very large fleet operator. Today at 500 vehicles, we think, is he large enough? Right? I was yesterday there in the construction equipment exhibition in Bangalore. If you see the range of cranes and excavators and things like that that have been displayed, that tells you what's the future of infrastructure in the country is likely to be. Right? And to use that kind of an equipment. Now, each equipment is costing some abnormal value. And if people are willing to invest in that, look at the bet that they take into future and then correlate it to that he's saying, what's likely to be the wealth creation in the next 3 or 5 years. All this comes from on-ground reality of what's happening. Right? I mean, you travel across rural, you see how houses have transformed. From a kacha house in the past, what we used to call, have all become beautiful looking houses. People are willing to invest. I think what we see over a period of time, people are sensibly borrowing. Earlier, people borrowed for a very specific need that they have shifted further to say that, if I can repay this loan, I'm willing to borrow. So the need plus some sensible method of borrowing for a better future is very clearly emerging.
One quick follow-up, Ramesh. A lot is said about the K-shaped recovery. We'll leave that for the macroeconomists. But there is also this statement that one hears कि गरीब गरीब हो रहा है, अमीर अमीर हो रहा है. From a financer's perspective, what do you see really happening? Because if this is the level of aspiration in rural India, something else must be actually happening on the ground.
No, so the fact is, the first-time borrower or a first-time buyer of vehicle is not declining. See, while the large fleet operators are adding further fleet and becoming bigger, that nowhere tells you that the smaller ones are not aspiring. right? So we are continuing to see 30% of people even today are first-time borrower or first-time buyer of vehicle.
It's also because companies like yourselves have actually enabled and taken finance and put it in the hands of people. 15 years back, the accessibility to finance, and today must be.
So let me add a very quick perspective. You go 5-7 years back, we could lend only to people whom we could reach or people who could reach us, right, in the branch. Now with the digital intervention, this has been bridged. Now a credit decision is still to be taken. Just because you're able to connect to somebody digitally doesn't mean you have to lend to that person. Now add to that the kind of data that's available on everything, including proxy data. One is an individual data of about individuals and also proxy data available. The credit decisioning is becoming much, much easier. The third is, with the same digital enablement, the ability to repay and recover is also improved. Now, this is what provides the strength to any financial banks or anybody to be able to participate in that. And therefore, what started off as a financial inclusion maybe a few years back as a coined word, today truly playing that role when that expansion has substantially improved. So therefore, you add it back, and I mean, you look at the number of people even from the semi-urban rural market who are going out to get educated. Now, they may not be investing their own money already. They must be borrowing against it. But this borrowing comes with a very definite purpose written around it and the confidence and capability that they can service this. So I think the overall level of confidence on every individual's ability or belief in themselves that they can do something to be able to earn to service these loans is actually expanding the overall market, and which is where I'm able to correlate. I still don't know the definition of wealth. Who he calls as wealthy. When he says only 1,300 people, that's a challenge. But then if it defines wealth means minimum 1,000 crore, then I can understand. Is that the number?
Yeah.
Okay, great.
Mike.
Then I would never come in that list. Don't
No,
worry.
just elaborate on that. What is the definition of wealth as per the Hurun India Rich List?
Ours is basically a wealth of 1,000 crores at an individual level. That's the definition of wealth.
No, there will be a lot of people who will say even Crorepati is wealthy. But Ashish, I will take the point about manufacturing. And you know, I have a follow-up later on for Ramesh on cost of capital, because India still remains one of the highest cost of capital countries, and there's an enormous compliance burden as well. But on the manufacturing, can you offer us a perspective for all those who are tuned in of how different or sound is India's manufacturing story? Because, you know, we have seen cycles of it. The industrial clusters from the 60s and 70s, the activities driven by public sector undertakings, and now once again, especially in electronics and other high-tech areas. What is this manufacturing story all about, according to you?
Yeah, that's a very good question. And sometimes we quickly compare ourselves with the already developed countries. But we don't take into account the time it took for them to get there, right? So if you compare the time and the expertise and the rest of the ambience for manufacturing, my personal opinion is that we are very good. And why I'm saying that is today...
So I'm sorry to interrupt you. When you say we are very good, what is it? Are our people good, or are we able to access the best technology? What is it? The Japanese talk about their total quality management, Zen practices. What is it that makes us good?
So if I have to pick one factor, we are extremely good at adapting and quickly learning and therefore scaling it up. Where is the largest oil refinery in the world today? It is in India. Which country produces the largest number of tractors you just talked about? It is in India. Which country produces the largest number of two-wheelers? It is in India. There are many such surprising things in the manufacturing sectors which have not been highlighted in the past, in my view, right? And we need to make that more and more prominent and underline them as we go forward. Also, we have been extremely good at backward integration. So I was talking to a few colleagues, and some people are happy about the way electronic manufacturing is coming to India. Some people are criticizing it by saying, oh, but this is just the assembly line. So for example, we don't make chips. But how many people know that a lot of chip design goes from the Indian minds? How many companies are involved in the very basic aspect of the value creation. So where is the value created? Value is created when you are designing a new chip. Then you go through the value addition. So you make circuit boards, you make, let's say, a cell phone, and then you go towards the service end of it where you add applications on top of it. So at the two extreme ends of the spectrum, which is the design of the chip and then the applications, is where the maximum value is created. And where is that getting created? A lot of that in India, I would like to argue. Right? So you have to change the perspective a little bit. And if we start doing that journey towards a backward integration, today we start making the assemblies of the high-tech gadgets of electronics. I'm sure it will lead us to the path of getting into the chip manufacturing as well. So, and that's how I genuinely believe India can move, and much faster leapfrogging than some of the other countries which have done in the past.
This is a good perspective because, you know, we all end up comparing ourselves with China. We get compared with China, and last year when I was interviewing someone at Davos and I said China plus one, he stopped me there. He said, you shouldn't be asking this. You should say India plus. You should not say China plus one, and that's the kind of confidence people have. I'm coming to you, Anas, and you know, why is it just 1,000 crore? Because not to sort of go on a socialist point of view, but even 10 crore would be very, very wealthy. If somebody were to generate 10 crore of wealth and aggregate that over a lifetime in India, that's pretty wealthy.
So if my company is VC funded plus I have 100 employees, definitely I could do that research here long. But I think this could be, from our perspective, we kept it 1,000 crores to do a benchmark on a year-on-year basis. And we believe that story of these entrepreneurs tell the story of modern economy. You know, and this number is more like a sane, rational number for us to do a benchmarking on. I mean, that's about it.
But the sort of more serious question, for a country of the size of India, can you approximately, top of your mind, just say how many people are actually wealthy? And if what's, you know, as per a global benchmark, how much of India is actually wealthy?
We did publish a macro study on India's wealth, and we found out that about 700,000 millionaire households are there in India.
Okay, let's get that right. 700,000 millionaire households.
Right?
That means 10 lakh rupees per annum and more.
No, US dollar.
US dollar.
Yeah, based on assets, not on income.
So 700,000, and that's 1 million US dollars.
It was an assets,
Asset,
not the
complete.
Not the, and this number, we tried to corroborate that with some of the real estate players asking, look, this kind of number, one in every X number of households, does it make sense? And they kind of made sense to us. But then, from the way I look at this whole thing is, it's even the rich list, right? What we say is for every one person we found, we would have missed another three. So size of the rich list with 1,000 crores net worth and above should ideally be around 5,000, but we could only find 1,300, 1,400.
And why do you miss them?
Lack of data. For us, we need to be sure about the data that we put in. So if we don't, our principle is when in doubt, we leave out. So we have to see that data.
That's an important point, because we always remember the Business Today 500 list, and Saurabh Majumdar, the editor of the Business Today magazine, is here, and during the rest of the evening today, you will get to hear much more on that. But it's actually of organized companies, and there is, of course, this argument about unlisted jewels, the unorganized sector and the economy, and it's tough to tap into that, and that's where perhaps Ramesh has deeper insight. Concluding comments, Ramesh, the cost of capital, and I would say that the cost of capital is holding back even better, faster, and more evenly spread out growth when it comes to, let's say, housing ownership, vehicle ownership. The cost of capital for the average Indian, and I'm deliberately not confining to organized sector companies, which you deal with, is that a big issue, and do you see that changing over time?
Honestly, I don't see that as a big issue. And the reason I'm saying that is, you know, if there is a need, cost is never an issue. It's only when you aspire and you want to acquire more, then you think of cost. For example, if I want a house of my own, and that's my first house, It doesn't matter to me at what cost it comes. Yes, of course, I'm conscious about it.
But at 8.5% floating.
I would still borrow, right? Because I want to own a house. How else otherwise I will? But if I'm buying a second house which I want to give it on rent, then I start thinking about at this cost, is it worth acquiring? And this is exactly applicable to vehicles and tractors as we just talked about, right? You look at people who buy vehicle for own use as well as for putting it to commercial use. For commercial use, they will finally, some consumer will pay for that cost, right? The freight will go up or whatever else will happen, or the resale price will protect it at the end of it. But the fact is that if it is a need-based purchase, I think cost definitely people are conscious about, but they don't give it up.
Okay.
But if it is aspirational, then people do think twice.
And that's the key thing about India. My Ashish, final question today. Where do you see the maximum wealth being created in the next 10 years in India?
Wow, if I knew the answer to that, I would not be here. So, but yeah, I think wealth creators as a title is a little flattering to me.
Okay.
Honestly, I don't look at us as wealth creators. Wealth creation is kind of a result of what we do, to be honest. And that's the way I see
So,
it.
okay, let me try and make it easier for you. Will a good idea actually win in a country like India, or will it be great execution, great processes, or a mix of both?
If it is not hyped up just for the sake of hype and it will really have an impact, it will just absolutely sustain and scale in India. I'm very strong believer in that. And we wouldn't just take an idea just because it's nice sounding and it's becoming very hyped up. It'll die. And we've seen that many a times. .com came and went, and then really after a period of time, then the digitalization took up. Same thing on AI. A lot of discussions on AI right now, but its true application and its impact may happen over a period of time. So I guess for the paucity of time, I believe that things that will be really useful and additive in that wealth creation, they will absolutely survive and scale in India.
Perhaps Bill Gates, who is not here, would have been able to answer that question very well, because I fundamentally believe that ultimately great ideas and equally good execution is what matters for companies as large as those in the BT500 list, and for everyone else, including young, aspiring Indians. Ramesh Iyer, Ashish and Anes, thank you very much for your time with us today. With that, it's a wrap on this session. Thank you.
Thank you, gentlemen, for setting the bar high with that session. In the next session, we'll be talking about the dynamics of the IPO landscape. Yes, IPO has been quite a buzzword for the past few months here in India. We'll be exploring the trends, challenges, and opportunities that define the rush towards initial public offerings in today's market. Our esteemed panelists for the next session are Salil Pitle, MD and CEO at Axis Capital, Manisha Girotra, Chief Executive Officer, Moelis India, Pranav Haldia, Managing Director, Prime Database Group, and Dheeraj Relly, MD and CEO at HDFC Securities. Can we have a huge round of applause? This session will be moderated by my colleague, Shail Bhatnagar. Ladies and gentlemen, I've only come back to ensure you settle down and also start this session with a warm round of applause, please.
Good evening, ladies and gentlemen, and a very warm welcome to this wonderful session of wealth creation. And what better way to start this discussion than to check out the already soaring temperature of the IPO market. And to quicken all your pulses, I'll tell you where IREDA closed, 112 rupees. It's a 250% appreciation over the last 10 sessions on what was a very muted kind of an IPO. I checked the data over the last 1 calendar year, and we have about 50 IPOs that have got listed, out of which just 5 are below par. So that's, ladies and gentlemen, the kind of bull market that we are facing in India these days. And it's a wonderful, wonderful panel here. For all those people who did not get an allotment in the IPO, you now know who to blame. Okay, we'll begin this discussion, and we'll start with the lady. What a pleasure to have you again, Manisha. And let's just try and understand how structurally the IPO market has changed over the last 10 years or so. You've been watching this space over the last 2 decades. What has changed from the point of view of the issuer?
Thank you. Thanks for having me. I think if we just step back and see structurally, the Indian economy has changed a lot. You know, when Amit Tandon was sitting there and I started our careers, to do a 50 crore or 100 crore IPO used to be a challenge, right? There just wasn't depth in the market. You had to go to an LIC or some of the other large domestic institutions, couple of FIIs, and hope that at least 2 to 3 of them subscribe the deal, and then you bolt on the other investors. Today, we're a $5 trillion economy, market cap of 4 trillion, 5th largest in the world, very deep markets. So that has basically resulted in larger equity issuance, larger IPO issuance, and a greater appetite for equities. Then I think also what's changed a lot is the reforms that the regulators and the government has done, right? There's so much more transparency, corporate governance, proxy advisors are at your toes, you know, saying what are you doing. So I think all of that is excellent because it gives comfort to the global investors that this is a market that's serious about the business of business. And lastly, I think just what's happening domestically, there is so much inflow into the equity markets. You know, till my parents' generation, you had to invest in gold or real estate. As interest rates fell, as more of the professionals joined the formal economy, as real estate became less attractive, investors started to come into the equity markets, especially during COVID. There's about $2 billion of, we all know $2 billion of capital coming monthly into SIPs, $35 billion of domestic money that came in last year. So what that's done is that it's countered basically the foreign inflows. As I said to you before, when we started our careers, if one FII pulled out, you know, the 250% you mentioned would be the other way around. You know, it was literally as anemic as that. Today it doesn't matter because there is so much domestic resilience, there is so much domestic capital, and you know, I think Axis will tell you more about that than I will. That there's so much resilience that, you know, equities have become so much more attractive, and as people are going up the risk curve, they're coming more into the IPO market.
Okay, what we'll do is we'll touch upon Manisha as far as the other side of the equation is concerned, but to you, Salil, I just want to understand how thick is the pipeline as far as Axis Capital is concerned. Of course, over the last 43 IPOs that have come in over the calendar year, Salil has helped 9 get listed. So I presume that this year's bonus would be fantastic for investment bankers.
I wish the last part was true.
I'm sure it will be.
But no, I think pipeline is pretty strong for markets as a whole. I mean, for keeping Axis Capital aside, even after the flurry of IPOs that we are seeing right now, I think between IPOs which are filed with SEBI, which are approved and awaiting approval, we have between them another 65 IPOs in the pipeline as far as India is concerned. About half of them are with the SEBI approvals. This month itself, we are seeing 2 of them which has just opened. We do expect at least 3-4 more to happen before the end of the month itself. And more important than the numbers is just the quality of issuers that we see coming around. I think a point that Manisha mentioned about governance standards, about how the regulator has been proactive, has all ensured that the names that finally reach the marketplace are quality names. Governance standards are very high. Investors are extremely clear about what they want to invest in, what they don't want to invest in.
Absolutely.
That makes a big difference. For every IPO that happens, there are a couple of them which don't necessarily happen. The markets don't necessarily see that. That's because investors are selective. That's resulting also in correct pricing. And that's why, 90% of the IPOs that have happened in the last, in this current calendar year are all above water and doing well. I think what has also helped the pipeline per se is the sheer amount of domestic capital available around the place, which to my mind is only getting stronger by the day. Manisha talked about the 50 crore, 100 crore IPOs. Yeah, we all started our careers when the book buildings in India started with a 100 crore size, and today 100 crore is not a size.
And the largest issue that you managed was 4,300 crores for Mankind Pharma.
In the current year, and prior to that, the LICs and the Paytms have been 18,000, 20,000 crore issues.
Absolutely.
And they have got done properly with Indian investors putting that in. One last statistic which is very important is there's a lot of dependency on FII investors in India in the past. If you take the current statistics of all the institutional book, an institutional book is split between domestic and foreign. There was a time when almost 75% of the institutional book used to be foreign. And so if one foreign investor decides to go away, the book looked weak. This time, across all IPOs, 60% of the institutional book is domestic. And therefore, the resilience of the markets is very strong, and domestic flows have been really very strong. So all in all, great pipeline, more importantly, good quality pipeline, and underlyings are good, businesses are doing well. So we do expect that, this kind of comfort around the marketplace will remain sustained for a bit.
Okay. Let's look at the retail angle to this, and we have Dheeraj Relly with us. He's a part of HDFC Securities, probably the brokerage with the largest retail reach when it comes to IPO applications. Dheeraj, to you, what has changed over the last 12 to 18 months? Do you see more IPOs being applied to online? In fact, I tried applying an IPO about 2 weeks ago, and unbelievably the process has become so smooth. What has organically changed for providers such as you when it comes to applying for online IPOs, and what is the granular data telling you?
So, good afternoon, everyone. Thank you for having me here. I think the whole ecosystem has changed dramatically. It started with having more trust on the capital market ecosystem. That's the start point for retail participation, and that's where we see that there is a disproportionately higher comfort of investors, particularly retail investors, in the market ecosystem. They believe that it is quite robust. Then on top of it, I think technology have been a very big enabling point. Now you can do IPO with just one click.
Absolutely.
Okay. Most of the brokerage houses have an execution created in such a fashion that you just go and just with one click you can execute your IPO also. The third piece is that the awareness about the companies and their details through social media, through media players like you, I think that has also increased the participation. And right now the information arbitrage is very limited. Earlier the information arbitrage was very high. Institutional investors, whether it is FPI or domestic, were having an edge over information. But now through the social media platforms and brokerage houses or many other players, including media, the information is easily accessible to the retail investors. So it's not just the one piece. I think it's the whole ecosystem, the culmination of technology, regulatory framework, ease of doing investing, ease of doing business, the trust, all that has enabled a greater participation.
Right. So what we'll do, ladies and gentlemen, now, the young gentleman that you see seated 2 seats to my left is Pranav Haldia, and Prime Database, for all those of us who've been in the market for about 30 odd years, you would know that it's the pioneer when it comes to listing IPOs. Mr. Haldia, what a warm welcome to you. I just wanted to understand over the last decade or so, what has changed for service providers such as yours when it comes to getting IPOs listed? I distinctly remember about 2 decades ago, we used to source data from Prime Database when it came to forthcoming IPOs. At the moment, this data is very easily available on all websites. So how do you differentiate yourself now?
Well, I think, one biggest change from the 90s till now is just in terms of sheer numbers.
Absolutely.
So, you had years in the early 90s where you had upwards of 1,000 IPOs in a year. Now we feel very happy if there are about 50. But at that time, there were 1,000, 1,200, 1,500 IPOs in a year. And a commensurate number of intermediaries to handle those IPOs as well. So the number of merchant bankers that you have, the number of brokers that you have, is a tiny fraction of what you had in the 90s. So I think that's been one big change. Of course, even in terms of the quality of companies which Salil spoke about, at that time you had a lot of fly-by-night operators as well. In fact, one of the ongoing arguments which I keep on hearing about is, if an IPO is a OFS IPO, then investors should not invest.
Yes.
But if it's a fresh capital IPO, they must invest. I keep on remembering the time of the 90s when all the IPOs were actually just fresh capital.
Yes.
In fact, they were absolutely greenfield companies which did not even have a manufacturing plant. Everything was on paper. And yet, and you saw that a lot of these companies ran away with investors' money. So they were all fresh capital, but they made for terrible investment.
You're talking about the 93, 95 IPO bull
That's
run
right.
that we saw.
That's right. That's right. So I think that's one major change which has happened. Talking more recently, I think, one of the biggest changes that we've seen in this last 1 year has been in terms of the, broad basing of sectors. In 2023, the kind of companies that you've seen from manufacturing, I think even in the previous session, they were speaking about, the pickup of the manufacturing sector. So 2023, unlike the last 5-6 years wherein you've seen a lot of companies coming from BFSI, I think one big change in 23 has been, the rise of manufacturing sectors as, IPO companies. The other is also in terms of the size of the companies themselves.
Yes.
I think this year, the average issue size was about 900 crores, which is down from about 2,000 crores 2 years back. Which is a very interesting data point because it kind of says that, slightly smaller companies, relatively smaller companies also now have the confidence to come to the market. And, since we are at a Wealth Creator Summit, I think, it ties on, very well with that.
Right. Manisha, this one comes to you. When you look at how regularly we've changed when it comes to managing the, the legal part of the IPO, as also the fact that it used to take anywhere between 3 to 4 months for the IPO to get listed in the bull run that you talk about. Now it's less than a week, and probably it's going to narrow down further. What are the other regulatory changes that you're looking forward to that will make this particular market more robust?
So, if you speak to any of the global investors today across geographies, they say India is one of the markets which is the highest on corporate governance, regulation, etc. And the settlement point that you made is going to be transformative because I think that was, as Salil will tell you, that was a real blocker for a lot of investors because they didn't want to block their capital. Forget retail investors, institutional investors didn't have the mandate to block their capital for that kind of period. So I think the fact that we're able to settle much faster is a big positive. I think the fact that SEBI's mandate, SEBI has huge strict rules on how the board should be constituted, women on board, regulations on ESG, climate change, etc. All of these things basically show that we are very serious about making sure, ensuring that the companies are very high on corporate governance. Then also, as you know, in the last 10, 12 years, we've had private equity come in. The point that Pranav made, why is it that a 900 crore IPO happens now, and previously it was 2,000? One of the key reasons is that because a lot of these companies have had private equity investors in them and have got used to the quarter-on-quarter treadmill, right? I mean, when you get listed every quarter, the investor expects to hear something new, wants full disclosure, and these companies today are already prepared. So with the combination of government, regulation, and external investors, the companies are very different from what they were 15 years ago, where it was just the promoter, essentially. Yes. I mean, with one business plan, and those were the frothy markets. I don't think you can do that now. Firstly, your own investor base won't allow you to do that. And secondly, you're used to the level of governance that the market needs. So, I remember when we used to do IPOs earlier, it was such a challenge because you pretty much had to change the entire management team. Literally, the munshi of the promoter used to be the CFO and say, "Yes, CFO," and you're like, "No, this cannot be the CFO. This is a serious, there are some serious disclosures."
And promoters are now more amenable to those changes.
Correct. Yeah, absolutely, because they know that's the only way you can come to the IPO market. Accounting firms, all of that, everything, all of the different pieces. So it's not just regulation, it's the fact that all the different pieces have come together, which make the company far more easily IPO ready than it was a while ago, where we would take literally a year to get a company IPO ready. It used to be a business, just restructuring, advising companies for about a year. It's not the case now because a lot of the work has been done. To be fair, a lot of the promoters have second generation children who've gone and studied internationally, who understand the importance of governance. There's a lot more exposure. And even today, domestic investors are demanding, a lot more disclosure. So I think a combination of all these things has resulted in the companies that are coming through across sectors, right? Earlier, I remember the companies that we all used to like and we all used to go running to pitch for were basically export-oriented companies like pharma, IT services, because we were like, these are the companies which naturally have high governance. So, we would all steer to those companies. No longer the case. Across manufacturing, renewables, traditional companies, new age, e-commerce, tech companies, you're seeing a lot of governance driving these companies. So I'm quite optimistic on our regulatory and governance standards, and all my global clients tell me the same, that we should be proud of what we've done, and the small time that we've done it, thanks to technology and the digital public stack that we've created. I think the kind of way that we have instilled these changes and brought in new investors into the market is a record.
Okay. Salil, this question comes to you. When you talk to promoters, and I'm talking about, say, a decade ago, the big ticket or the aspirational theme used to be to get listed on the NASDAQ or the NYSE. Somehow, that particular trend is now more or less dead. And the preference is, of course, Indian equities, and this theme of OFS. I speak to so many retailers, I speak to so many brokers, and they tell us that, there's a bit of a question mark when a 2,500 crore IPO has 2,300 crores as an OFS. It seems that, the retailer is being taken for a ride. What does the promoter at that point of time think? Pricing an internet company which, more or less sells automobiles on the net, being priced the way it is, and all of it being an OFS?
So first, let's take the myth out of the OFS being negative. Frankly, the OFS being a large component means that the company which is going to the market doesn't need the capital, and therefore it's not unnecessarily taking capital inside, which means that they've built a business out using either promoters' money or private equity money, built it, taken all the risks of building the business out, and once the business is well built, it's only when they're coming to the markets. So please, the market should look at it this way, that quality businesses, well built out, risk of building completely taken care of, and now it's ready for an IPO. There is a regulatory requirement that 10% needs to be diluted, and therefore a lot of companies have to do either a combination of fresh or a secondary. A lot of times the secondary comes into picture. Many a times this OFS is not only about the promoter selling. We do see a lot of private equity, who are the people who've taken the risk in building the business out, selling through the offer for sale route. And therefore money goes to private equity, which anyway has a limited amount of period, right? They're typically 5-year to 7-year funds, and they've taken the original risk, they're monetizing, they're returning back money to their LPs, and that money comes back into the markets because they fund newer businesses. So I actually think that the fact that built-out businesses are hitting the markets is actually a big strong point.
Yes, and I think that's the dramatic change that has also happened over the last 2 decades. As Pranav was mentioning earlier, if you had an Excel sheet and you were able to get a DRHP done by SEBI, yes, you could sell that IPO and it would also get listed. But now it's the established companies, and perhaps your point on OFS is very well taken. Tata Technologies has done fantastically well. Yeah,
all of this. And the other thing about primary capital is, Pranav mentioned about people raising primary capital on a business plan and disappearing. Today, SEBI is very clear about the monitoring mechanism. For every 100 rupees that you raise, the clarity on what you want to put it to. The end users has to be clear. Merchant bankers like us have to validate it. None of us will take the risk of validating something which we cannot validate. So we will ensure that only something which is completely kosher is out there. So therefore, no point in raising general purpose capital wherein there's no end use. So that's good news for market. I will actually look at it from every investor's point of view, that the fact there's been a good quality set of private equity sitting inside means that there is a business plan which has got validated. There's a strong regulator which is ensuring that end use of money is monitored, means again that it can't be misused in any way. Then it comes down to business growth risks, which is what equity markets is all about, and that's perfectly fine to take care.
Okay. Dheeraj, this one comes to you since you have probably the best known digital platform in India when it comes to the financial banking part. How much of these IPOs are now being applied for online from the tier 2, tier 3 cities? We sit in Bombay, and there was a point of time that 50 to 70% of the IPO used to be filled by investors in and around 200 kilometers of Bombay. Has it changed now?
Dramatically. I think we are getting more and more investors to participate from not only tier 2, tier 3, I think even tier 4, tier 5 cities also. So as I said earlier, the information, access to the information is easily available, and the risk appetite of the investors have also changed over a period of time. They have seen many cycles. In last 2.5 decades or so, there has been a dramatic change in their risk appetite. They understand that the fraction of their investment must go into the equity or equity-related products to make optimum return on the portfolios. So for the new investors, there is a fancy for IPOs. They think that this is their way to participate in the capital market, particularly in many family accounts. Like when you have 4 or 5 family members who are eligible to apply, they may not invest in secondary market in all 5 names, but when it comes to IPO, they think that this is the way they can participate, and that's where we see more inclusion when it comes to the number of unique investors participation in the capital market. So that is something which is driving the market. It used to be a phenomena in Gujarat particularly, or maybe Maharashtra, more dominated by these 2 states, but it is now well spread, and I think we are getting participation from such small pin codes and such small cities that it's difficult to fathom that how the information has reached to these places and how they are able to participate in the equity or IPOs.
I think you will have to thank the media for that. And
yes, absolutely.
We'll pat ourselves.
And technology as well.
Absolutely. Technology has been the game changer when it comes to the entire financial space, and all of us on the table will recollect time when the open outcry used to be in Bombay, and it used to be a great sight. But remember, everything was limited to Bombay when it came to retail as well as institutional participation. Pranav, we've talked in detail about the mainline IPOs, but it is the SME sector which is, the Wild West, so to say. This is the same theme that we discussed a bit earlier, the 93-95 bull run in the IPO market. Do you have any benchmarks or pain points when it comes to the boom that we are seeing in the SME IPO sector? Is it going to sort of continue for a while, or you see some kind of headroom being filled?
Well, so before I come to that question, I would just like to add on to what Dheeraj had said. I think somehow this impression about IPOs to give positive gains until perpetuity has been continuing from the times of CCI. So still, what he said in terms of a lot of new investors coming in through the IPO route, that continues till date. And, most retail investors continue to come in from a listing gain point of view. And you find very few investors really coming in from a long-term perspective. So I think, that is something which kind of needs to change. Even the data that you alluded to at the beginning in terms of the number of IPOs which hit and how many are trading above issue price, the point is that at what point in time do we say that, do we judge the issue price of IPOs? Is it 6 months down the line? Is it 12 months down the line? Is it 1 year, 5 years? Because the day a company gets listed, it becomes like any other secondary market stock. And the share price will go up and down on the basis of the company's performance, the sector's performance, the market's overall performance. So in my view, it's a bit unfair that we kind of expect IPOs to not just give positive returns on listing, but also until perpetuity, whatever that timeline be.
India is one of those countries where you hope to make money on a regular basis in the markets, and perhaps, that is where that sentiment comes
Yes.
from. Till about 2 decades ago, IPOs were, decently priced. This is not to say that investment bankers are to be blamed or, it's just the environment. The data that I give you, if we had this discussion about 10 months ago, it won't be as rosy as it is today.
Exactly, exactly. So it is at what point in time do you look at the data, and on that basis we make a statement on how good the issue price was. Anyhow, to answer your question about SMEs, yes, of course, 23 has been a stellar year in terms of SME IPOs. I think over 4,000 crores has been listed. My view is that, and you've seen some, action from SEBI, the regulator, as well of
absolutely.
late. I think it's a bit of a mixed bag. There are, some high-quality companies that you are seeing coming to the, SME segment. You also find that a lot of institutional participation has come in. If you look at the anchor book of some of the SME IPOs, it includes some of the world's largest hedge funds as well. So I think it's a bit of a mixed bag. Retail investors especially should approach with extreme care.
Absolutely.
I think it's also time that the threshold of 1 lakh, which was set in about 11 years back when the segment came up, needs to be looked at purely just from an inflation point of view. I think the minimum threshold for retail investors must go up, and it's buyers beware. The liquidity is very less. The trading is also very low, so I think investors need to be very careful while dabbling in these stocks.
Manisha, to you, any warning signs that you see from the SME sector? What should retailers, what should investors with, basic amount of money to deploy in IPOs should look at when they put in money in an SME IPO?
So I think pretty much the basics, like what we were taught in the kindergarten of finance. Look at the DRHP, look at the financials, look at the balance sheet. There must be a path to profitability at the very least if there isn't profitability. Ideally, if you're a retail investor, go for sectors which are well researched and not something which is, just a new idea, something in the Gen AI space, which you don't, because not for any other reason, but we don't understand that there isn't enough of a track record. So I think go look at sectors. Most companies, and Salil will tell you this, will come and settle in the same valuation range as the other companies in that range after the initial euphoria. Yes. So, try and go for sectors which are well researched. Please look at the balance sheet. Look at the bankers that are advising on the IPO, right? High quality, reputed bankers should be putting their name to it. The accounting
Someone like
firm,
Access Capital to your right.
Absolutely, that's fine. I don't do IPOs anymore, so happy to. Yeah. So I think that all of that is very important because, while I feel that a lot of the valuations are justified in the SME space, because what the investor is seeing is that this is a 5 trillion economy going into a 10 trillion economy, and what they're seeing is that these companies with a lot of efficiency are going to grow very rapidly, but at the same time, some do slip in, right? In a frothy market like this, as you said earlier, there are some companies that can tend to slip in, and it's really important that we either, invest through SIPs if we don't understand the market, be patient around companies, and if you're investing directly, invest in companies after thoroughly reading the balance sheet, looking at the board of directors, the management team being good. When these boxes are ticked, only then go in.
Right. So we have 1 minute, 50 seconds left, and now comes the most important question, which I'll ask all panelists, starting with you, Salil, because you've managed the maximum number of IPOs here. What is the magic bullet to get a confirmed allotment in the IPOs that are in the pipeline? I have the answer, I'll tell you last.
Just look around for the nearest temple. Siddhivinayak is not too far.
Okay. Visit a temple, a church, or a masjid. That's what Salil says. Ma'am.
My 85-year-old mom seems to get all the allocations, so I'll ask her and tell you because I haven't figured it out at all.
Okay, okay. So since he's talked about mandirs, we'll also look at her astrological chart.
Yeah, blessings from the parents.
Absolutely. Pranav, you've been listing IPOs since 1980s. I'm sure you have an answer.
Well, apply in every single relative's name that you know of.
Okay.
That's one way. But, seriously, with the kind of oversubscription that you find, the chances of allotment are low. And even if you get an allotment, you only get one lot. So aajkal, to move the needle, it doesn't really do anything. One lot of allotment.
So I presume the three of us, the three of you haven't been as lucky as you have been in getting business from IPOs, right? Do you apply?
You're not allowed to apply. So.
Acha, chaliye. Okay. Dheeraj, the last one comes to you.
I think investors should invest post IPO, immediately after the IPO. That's a better way, because if you look at some of the IPOs, how they have performed the post listing also, carrying on what Pranav mentioned also, you should look at which are the good businesses and stay invested in those businesses. I think that's very important.
They get listed at 80% premium, but we'll take your word for it. At least you have given
There are
practical
examples like Arida also, which is after 32 rupees, now it's almost at 100 rupees in 10 trading sessions.
112, I'll just put in the right number.
Just to add
Salil wants to add.
Look at the anchor books, because the anchor books reflect the quality of names that have validated it and feel comfortable about it. The best of insurance companies, the best of mutual funds, when they participate, you know that somebody's done a lot of homework. Even if you do not get, stock in the IPO itself, these are the companies wherein there will be follow-on buying post-listing. And that's also, there's a time for a lot of investors to also get more, skin in the game at that point of time. Plan for the long haul. As Pranav said, there is no point judging a company on an everyday pricing basis. Plan for the long haul, invest in a good business, stay put for a long period of time. Wealth will get created by compounding and not by a, selling trigger on day one.
Okay, so don't wait for the listing pop, buy it on the listing day. And my final 2 bits, if everything fails, please come to Delhi. There is a Bengali Baba who actually assures allotment in IPOs. So I'm going to meet him, do a story on that one. That will be on Business Today Television. Ladies and gentlemen, a very warm applause for our panel.
Thank you, Shail, for that scintillating session. A huge round of applause, please. And especially for that tip right at the end of the session. All right, as we prepare for the next session on stage, let me give you a little bit of a heads up. We're going to be talking about something which is imperative in the current business and finance landscape, the 4 pillars of corporate governance. In the next session, we will delve into the foundational principles that uphold robust corporate governance, focusing on transparency, accountability, responsibility, and fairness. Can we please request everyone to settle down for the next session? Because we're ready. We're hoping you are as well. Thank you so much. Our speakers for the next session are G.N. Bajpai, former chairman at SEBI; Amit Tandon, founder and managing director, Institutional Investor Advisory Services; J.N. Gupta, co-founder and managing director, Stakeholders Empowerment Services. This session will be moderated by my colleague, Saurabh Majumdar, editor at Business Today. A huge round of applause, please.
Good afternoon. I doubt any of the BT500 companies, the people who are running those companies, would be wondering who these 3 gentlemen are on the left of my, here on the left. Everybody who is anybody in the Indian corporate sector would be aware of who they are. To my left is Mr. Bajpai, who I know for about 3 decades now almost. Of course, Amit Tandon, and who's been a ratings expert and now runs his own, proxy advisory firm. And of course, the redoubtable Mr. J.N. Gupta, who has been in SEBI as well, and running investigations where the biggest companies used to be fearful of him. As I said, these are people who know what corporate governance is, and what a privilege to have all three of them here on this panel. So I will start with you, Mr. Bajpai, of course, of the seniority and the experience which you carry. The first question to you, and then I will go to Mr. Gupta, because both of you are from the market regulator. From your time at SEBI and now, what are the key 2 or 3 changes you see in the corporate governance standards in India today in the top companies which you follow or you know about?
Thank you, sir. Since I have worked for SEBI, first there is a disclosure. According to my own definition, I'm a fossil. Because 5 years you become stale, next 5 years you become obsolete, and thereafter you become a fossil. You may ask me a question, then why am I here? There are some people whom you can't say no because they don't take no for an answer. Here is one, so don't bother about it. Now, SEBI has been focused on corporate governance significantly a long time. In fact, I had the honor and privilege of joining Security Exchange Board of India when the market was going through, I use the word called animated suspension because of a major market misconduct that had taken place. And there needed some kind of a wholesale reorientation of all market practices. And therein came the corporate governance. Before me, my predecessor had got Kumar Mangalam Birla Committee, which had brought about it. Then Narayan Murthy Committee was appointed, which brought in significant amount of improvement in disclosure, accounting standards, and the boardroom practices. Now, over a period of time, successive chairs and their teams have improved upon these, and eventually it has landed significantly on a very high standard on disclosures and accountability. Currently, if you have seen, and I would say the SEBI is probably ahead of the curve on other regulatory bodies, having got BRSR report, which is basically a corporate governance new framework, how the company should be evaluated. And in any case, as you are aware, the whole world is agog now. It's not only environment, but the social stability also. And also, corporate governance has itself turned to a different frame altogether.
Thank you, Mr. Bajpai. Mr. Gupta, you are now running a proxy advisory firm yourself, and you've been in SEBI. So what are the key changes? Because you keep a very close watch on corporate, listed companies.
See, Saurav, you have asked a very difficult question, that what are the key changes? So there have been thousands changes that have happened in the last 20, 30 years. So the one change that you say that what is still yet to be done, is still to be effective, that change is implementation of everything not in the letter but in the spirit. So that is still a big vacuum. The second thing, as Mr. Vajpayee said, that lot of changes have happened in the governance improved. So I would say that all the effectiveness that is coming, it is not coming only because of me and Amit. We are one small part of this ecosystem. The biggest change that happened was the new Companies Act, where e-voting was permitted, where participation by investors was facilitated. Earlier, the meetings used to happen in Timbuktu or Jhumri Talaiya, and nobody participated. Now, with the e-voting, participation has increased. The second thing is this, taking cue from the Companies Act, SEBI came up with LODR, listing obligation, and that has impacted. Not only that, the impact of higher voting has happened in such a way that now the companies fear the risk of rejection. Now that fear is causing them to follow what me and Amit or other people say. You will not believe, when we started in 2012, if we needed a clarification and call to the company, who SES what, and they will shut the phone down on us. Now they call us before the report what you are writing. So that significant change has happened. And again, I would say, repeat, the day the follow of the law is happening in the spirit, probably I would not be needed. Because then people will be following it, and what I need to do. It's like this, that we always say that we are like a pathological lab. We analyze something and give you a report. Now, when you're so healthy, you don't need a pathology lab to give a report.
No, that's a very important point. Amit, I'll come to you from what Mr. Gupta said. The letter being followed, but not the spirit. Now, that's a very critical and a very fine line, right? Now, as proxy advisory firms and as somebody who knows the innards of companies because of your background also as a ratings person, how would you differentiate that, and what are the guardrails you think which shareholders, the minority shareholders who really depend on your protection in that sense, or rather your, flagging off the problems, how would you look at those?
So I'll kind of just supplement what Mr. Bajpai and Mr. Gupta said, and then I'll kind of go on to answer your question. So when we look at it, we kind of see the changes in three pillars. One of them, which both of them alluded to, was the change in regulations. They're a lot tighter. So if you look at the Companies Act, which Mr. Gupta spoke about, one of the ways is that you did have e-voting, but you also introduced majority of minority. Over a period of time, SEBI's come up with their LODR, tightened it. They had the listing agreement, which kind of gave way to LODR, so it's kind of a lot easier to bring in some regulatory changes. And that has been kind of done by way of what are special resolutions, what are ordinary resolutions. And they're important because both of them have a different threshold at which resolutions get approved. With the ordinary, it's 50%. With the special, it's a higher threshold, so you need 75%. And therefore, there are a constant set of changes. The Kota committee came in, which kind of had its own recommendations. Mr. Gupta and I were both members of it, and one of the focus areas was that, look, there are some gatekeepers, which are the auditors and the independent directors, and therefore they should have a greater role and responsibility. So I'd say at one level, it has been the regulations. The second is, what is important is in this whole period, the ownership pattern of companies has also changed. And that needs a bit of emphasis, because if you go back and you look at the market, I'm looking at it in terms of market cap rather than the absolute number. If you go back to just before the financial crisis, the Indian promoters held about 60% of the equity and the institutions held about 20%. So for every 3 shares which was held by the promoter, 1 share was held by an institutional investor. Today that ratio is 35% with the institutional shareholders, 50% with the promoters. And therefore, it's 1.5:1 or 1:1.5, depending on how you're measuring it. So that equation has changed. So the institutional shareholders have started sitting on the high table, so to speak.
And do you think, just to add to what you're saying, do you think institutional shareholders are also becoming much more involved?
Yes, they're much more involved. And I'll just come to that. But you know what that 35% means, and the size of the market, which was alluded to in the earlier session, is that you've got investors with deep pockets. So earlier, when we started, an investor held 1.5% equity. So the promoters would say we can ignore them. Now you've got people with 8.5%, 10% equity. So it's not so easy to ignore. So that has also become a large part. So the whole fact that the institutional framework has changed and they're much, much more involved now. So I remember when we started, you did not have e-voting. We went, I remember we'd gone with an investor to a shareholder meeting where it was show of hands. And all resolutions got defeated through show of hands. What happened next day, what was filed was that all resolutions got approved. There was nothing you could do. Now with e-voting, each vote is getting counted. Not just that, the institutional investors are much more engaged. And that actually goes hand in hand with what is called stewardship. Stewardship is the fact that institutions don't own, it's not their money, they're managing money for their unit holders or policy holders, and therefore they have a responsibility. And you find that that is also a part of the regulatory changes is that stewardship codes have been rolled out. So that has meant that investors are much more engaged. So when we started off, soon after we looked at it, 82% of the resolutions were abstained, 18% were voted. Now, 82% are voted, 18% shareholders are abstained. Coming back to what is it that institutional investors should look at, the opening comment I would say is that there's a general improvement all along. But what investors need to focus on is, who are the other investors? The more institutional investors you have, the better you would expect the governance quality to be. They also need to focus a little bit in terms of what the systems and processes are and what the company's communications are. Those which communicate more and better tend to be better governed because they have better grips with their of what is happening. And those who are poorly governed, don't communicate that much. And sorry, I know I've spoken for a long time, but I'll just kind of walk everyone through a fairly interesting study which we've been doing pretty much since 2012. We look at companies and the timing of their AGMs. We find that those who have their AGMs in June June and July have better financial performance than those in August. Those in August have better performance than those in September. And if you're a loss-making company, you're more likely to have it in the last week of September than before. Back to you.
Those are very interesting insights. We'll come to that. Mr. Bajpai, you have been the regulator and then you have also been independent directors. You have sat on boards. Now tell me, the one thing we need to discuss at this forum also is the role of independent directors, including in the current scenario where a lot of, in that sense, problems or misdemeanors can be countered by the independent directors if they really become more firm. Do you think at this point that independent directors are really doing fulfilling the responsibility they have been assigned?
Sir, you'll have to give me some space to be able to come back to really answer this question. We are asking for the role of independent director into a very narrow concept. First and foremost, I was one of those initial votaries of the fact that the firm is not owned by the shareholders alone. The Friedman doctrine, which was created in the great Milton Friedman, that a firm belongs to only shareholders and its responsibility is masters, only shareholder. That has subsequently been, as late as 2019, 183 CEOs of the US Roundtable have accepted that there are other stakeholders. Right. Now, this is the first part of it. The second part, which is very important to understand, is that firms are not a charitable organization or NGOs. They are a commercial entity. And if they are a commercial entity, their purpose or their impact of their functioning should be different. The third and most important aspect is, and then I'll come back to replying to your question. The third and most important aspect of the function is that in an efficient market hypothesis, where the resources are limited, they should be allocated to one who can create the wealth optimally. True. Now you put all these contexts into the frame of asking what independent directors do. Well, I'm afraid, and I'm sure you won't mind.
Please.
I like to criticize media on their face in the presence of the...
We are used to it.
Okay.
Don't worry.
See, you have in fact been appreciating or understanding or criticizing the performance of a company from a narrow aspect, whether disclosures were adequate or not, whether accounting standards were followed or not, whether some minor, even without verification, some of the independent directors are consigned to media trial much before even anything is proved about it. But point I'm making is that first and foremost it has to be understood that independent directors represent more importantly the other stakeholders, and then the shareholders alone. There are too many people to take care of the shareholders. Total shareholders return, there is so many analysts and so many people keep on doing. But what happens to other stakeholders? And that is where, and I can say that because I myself probably couldn't succeed, that the boardroom practices, what actually happens to boardroom, hasn't significantly improved. It's not only a question of independent directors. Yeah, you're right. Independent directors have a role, but wherever I said, I felt I am an independent director not only for the minority shareholders, majority in any case take care of themselves, but also for the human resources, but also for the state, but also for the society, and but also for the customers.
So that is where media has been asking questions about these exact things, that how independent, first of all, are independent directors in many cases. So it is not that media has not asked.
We have asked, but then let me tell you what exactly I have been watching the boardroom issues are. There is a risk blindness. There is inadequate or inappropriate compensation. There is no accountability for any other stakeholders than the shareholders alone. And I would like you to kindly consider, and thirdly, which is more important and right now it is being discussed everywhere, is the environment.
Yes.
Is the social stability. Now these are the questions which have to be asked by independent directors on the board. But since the entire, now of course, as I said, SEBI has moved ahead of the curve by laying down the 6 principles, which are also, unfortunately, what happens, as Mr. Gupta was saying, yes, in filing the information, in trying to see that their performance on disclosure is better, accounting standards better, I would like to ask myself a question as an independent director. Why do I reckon only an accounting profit? What about the economic profit of the firm? If the resources of the society are limited, there has to be an accounting, both by the independent directors and non-independent directors, what happens to the economic profit of the company.
Mr. Gupta, taking off from the very important points Mr. Bajpai and you yourself also have made earlier, I want to ask you, in talking about the letter and the spirit which you raised, again, the role of independent directors may be, questioned on that count as well. How do you as a proxy advisory firm, and we will then come to the role of proxy advisory firms as well, how do proxy advisory firms like yours then view the role of independent directors? Are you really looking into each and every one of them, how independent they are, what are the kind of cross purposes they work at, and all of that, the entire gamut of issues?
So the problem with you is that you ask a question with 100 questions underlying there.
Because we are short on time, na?
Okay, so I will go one by one. The first is this: I feel that independent director is only for the purpose of appointment as an independent director. Once he is appointed as independent director, he amalgamates in the entire board as one of the directors. Because if I carry in the boardroom that I am different from 3 other gentlemen in the room, I become a different class. The moment I become a different class, there is either going to be adversity or feeling of superiority or feeling of inferiority. So I would say the class of independent director should cease the moment I am on the board. That is for the purpose of appointment. Secondly, even when I am not an independent director, I should be putting my mind as an independent person for analyzing the resolution that are brought or the discussion should happen. Unfortunately, what has happened, it is seen that independence means opposition. The moment I have a contrary opinion that I am independent of you. That is a very dangerous thing to say. The problem that again happens, I as a proxy advisor, I have no view what happens in the board. I don't know who spoke what or who speak what, I don't know. So it is extremely difficult, or rather foolish of me, to pinpoint a director that you have not performed or something like this. It is done. Having said that, what is our role is to say that what I, as a shareholder in ordinary course, would react when I see what is written in the notice or what is the agenda item. In the conference theme, you have written the 4 pillars of governance. I say there is no 4 pillars. There is only one pillar, that is fairness. Fairness encompasses everything that is there, the transparency and all the thing is the fairness. The issue is every director should examine the issue that is being discussed or proposed for the shareholder. Does it satisfy my fairness standard? Only one thing is to be remembered. If I was on other side, how I would take it. If I am satisfied that what you are throwing to me is a good food, I will take it. But if you are not ready to eat that food, you can't feed it to your guest.
True. Mr. Bajpai, I know you are passionate about ESG, and you mentioned this in the beginning also. Now, the SEBI has been trying to move towards, getting companies to comply more and more on the ESG front with BRSR and now BRSR Core. But recent studies have found only 27% of Indian companies are really, prepared for ESG. How do you view that? I mean, because now it is critical, as you said.
Well, Saurav, if you permit me 2 minutes, I want the assembly to know what exactly is the challenge now. Ladies and gentlemen, I'm sure you all must be reading the twin revolution of industrial revolution and innovation of joint stock company with limited liability, common seal, perpetual succession, etc., enhanced and speeded up the economic development of the world. Millions of people, because of these two inventions, have been brought out of the poverty. But also, incidentally, because there was no checks, this has led to the annihilation of the environment and also social inequity. Now, and since you asked the question, let me link it once again, Saurav. You certainly have a reason to ask an independent director, what did you do? How did you perform? But first, please help us to change the context of that person's role itself. Right now, you are asking whether all disclosures have been done. He will say yes. All accounting standards have been followed. Yes. But we haven't really still defined who the stakeholders are and whether they are contractual stakeholders or the residual stakeholders. Because residual stakeholder get from the residual. And then if he has to get something from the residual, how can you have only total shareholder fund? It will be stakeholders fund. So all I'm coming back is that environment has become very, very important. And let me give you some data. I'm sure all of you have been reading that we are already more than 1.5 centigrade above the industrial times. If nothing seriously is done, I don't seem to be. A lot of glib talk. I'm sure you have known what happened in Dubai today, the compromise that is reached. By end of this century, will be 3.5 centigrade above, and by middle of next century, 4.5. And this will lead to migration of 500 million people and just a simple loss of 5 trillion annually to the economy of the world. But if you take the loss of productivity, etc., 40 trillion is going to the loss. I'm giving you this data because this must be brought to the focus by the media that the environment in the corporate governance is not just a fad, it's a very, very serious issue which has to be addressed immediately.
But companies aren't able to conform.
That's what I'm saying. Now comes the question. I mean, I'm sure you are aware, today's newspaper says that even HUL, I mean, not HUL, the original company has been accused. I'm using the word deliberately accused. Still not confirmed that they have been doing greenwashing. Because broad standards have not been developed. And which is what is important for all of us today is to get really serious with the scientists and develop the broad standards of how to become carbon neutral. in each company. Level 1, level 2, I mean, I'm sure you are aware, they have already been definition by the scientists. Level 1 is what you pollute. Level 2 is what the services that you take. Level 3 is the one who buys your product and what kind of pollution he creates. Now, unless you have a reckoning for a company, I mean, right now, SEBI's regulations also talk of only level 1. And rightly so, because we don't have those standards available. So my suggestion to you and including to the regulators is, now let's get serious. Because the greatest polluters of the world are the firms. I mean, why Dubai, no compromise could be reached? Because all the petroleum companies were up against arms.
True. We are running out of time, Amit. The final word to you. What are the 2 or 3 things you would like now Indian listed companies to do? Of course, one of them clearly is the ESG front, which Mr. Vajpayee referred to. What are the things you think is the unfinished agenda in terms of compliance on the governance front from somebody who's tracking these companies so carefully?
I think it's much more on the regulation side, and that's something which was alluded to, which is that companies don't actually seem to pay the consequences of not adhering to regulations. And that is the big thing. So if we look at it, we've got regulations for everything, and they're pretty comprehensive. It's something which Manisha referred to earlier. If you kind of look at Indian regulations, they kind of match with the best in the world, and in some instances, I would say globally, they're catching up with where our regulations are. How are we with regard to enforcement? It's not where we should be at this time. And the one consequence of that, and which people keep complaining about, is that, look, if you kind of then bring in another regulation because one is not being complied with. That's not the solution. The solution is pick up those who have not complied and have punitive damages so that there is much more adherence to that. So I would say that is the big unfinished agenda.
So the regulator must act tough, and there should be consequences for not adhering to it. Mr. Gupta, I have many more questions, unfortunately, but we have run out of time. But if you, yes,
give
please.
One word. See, my interaction with many people, whether it is the company, whether it is investors, say they have a concept that compliance is a cost. And this mindset had to change. How many of us say that medical insurance is a cost? Medical insurance is a necessity. Similarly, treat compliance as some sort of a medical insurance for well-being of the company. That is the final word.
On that note, I think it's been an absolutely fabulous discussion. We could go on and on. Thank you very much, gentlemen. Yes, please.
Because there is an assembly of the representatives of people from BT500. May I request you, ladies and gentlemen, don't look at corporate governance hereafter from the narrow prism of only enhancing the shareholder value. Please look for corporate governance from environment protection, from social stability, and economic value add that you do out of the resources that you use.
Last word from the regulator, really well put. Thank you very much, gentlemen, and a warm round of applause for them.
Thank you, gentlemen. Thank you, Saurav, for that very insightful session. And we're all set with the next one. That's how it's going to be here at BT500 Wealth Creators Summit. The next session is aptly titled The Cult of Equity Investing. We'll actually be delving into the dynamic world of equity investing, exploring the shifts, strategies, and emerging trends that define the cult of equity investment. Our panelists for this one are Vijay Kedia, Managing Director, Kedia Securities; Nilesh Shah, MD and CEO at Kotak Mahindra AMC; Vijay Chandok, MD and CEO at ICICI Securities. And this session will be moderated by Shail Bhatnagar. A huge round of applause, please.
Good evening once again, ladies and gentlemen. कुर्सी की पेटी बांध लीजिए, अब बहुत मजा आने वाला है. And may I request you to open your notepads in your iPhones or Samsung phones. If you are the old world kind like me, take a pen and paper. And over the next 25 minutes, we are going to discuss what to do over the next 5 years. Okay. The panel is very well known. केडिया साहब हमारे बाजार के किशोर कुमार हैं. Nilesh ji, among the top 3 people that New Delhi reaches out every time to understand how markets are reacting to its macro policies, and Nilesh bhai gives wonderful feedback. And of course, Mr. Chandok, one of the biggest platforms as far as retail brokerages are concerned. What a pleasure to have you all, gentlemen. Okay. Let me start with Nilesh bhai because he manages so much of money that he's lost count. And we were just having coffee and discussing where markets are headed. All of us know 21,000 on the Nifty, 70,000 on the Sensex. There is no IPO which retail gets hold of, gets listed at about 100% premium, and then goes up 20%, 20%, and then 10%. Nilesh bhai, my first question to you, sir. Is this true? I mean, everything that you can think about in terms of goodness is getting reflected in the markets. This is truly an Amrit Kal. You've seen markets for 30 years. How do you feel?
So, Shell, thank you for having me over here. And I'm feeling like I'm in Pakistan, Multan 2004. समझदार को इशारा काफी है. On 20th March 2004 in Multan, Sehwag started betting and hitting Pakistanis out of stadium. If I remember correctly, he scored 300 runs, first 100 before lunch, next 100 between lunch and tea, and next 100 between tea and end of the day. And 294 से छक्का मारा जब तेंदुलकर ने उसको जाके बोला कि भैया जरा संभाल के खेल, ट्रिपल सेंचुरी होगी, तो उसने नेक्स्ट बॉल को छक्के पे मारा. तो बस अपने भी ऐसे ही फील कर रहा है कि हम भी सहवाग है, पिच मुल्तान जैसी है और बॉलिंग पाकिस्तानियों जैसी है, कहीं पे भी मारो रन बन रहे हैं.
क्या बात.
Now, there is one note of caution. On that day, on that pitch against that bowling, Rahul Dravid played uncharacteristically fast. वो 10 बॉल में 6 रन कर दिया. पहली बार उसने 10 बॉल के अंदर चौका मार दिया.
क्या बात.
एंड फिर आउट हो गया. तो डोंट प्ले लाइक द्रविड ऑन मुल्तान पिच, प्ले लाइक सहवाग ऑन मुल्तान पिच. एंड दिस इज टू गुड टू बी ट्रू टाइम.
Okay, what we'll do is, ladies and gentlemen, at the end of the session, we'll try and list out things to do over the next 1-2 years so that you can all make supernormal money. We are talking about the cult of equity investing, and perhaps the finest gentleman to my left is sitting with us who will tell us what to do. केडिया साहब, बहुत ही बढ़िया समय चल रहा है और मिड कैप्स में नीलेश जी हर वक्त खरीदते रहते हैं. जो भी सिप्स आते हैं पूरी दुनिया यहाँ पे खरीद रही है. आप मेरे को बताइए, इज द मार्केट ओवरहीटेड? यू आर प्रोबेबली द बेस्ट पर्सन टू टॉक टू whether investing in small caps and mid caps from this level, does it make sense?
I will tell you, when we are talking about small cap and mid cap, that means we are talking about some 4,000, 5,000 stocks. Okay. So there is a quote of mine that there are large cap, there are mid cap, there are small cap, and there are bhangar cap also.
Ji.
So out of those 4,000 or 5,000 shares, 80-90% come into that category, 80% shares come into that category of bhangar cap. So if you avoid those bhangar cap, तो जो क्रीम जो बच गया, समझिए जो 1,000, 1,500, 2,000 जो शेयर्स बच जाते हैं, हम उनकी अगर हम बात करें तो हो सकता है कि कुछ जो पॉकेट है वो ओवर स्ट्रेच्ड है जो आप बता रहे हैं. तो मेरे को लगता है स्टॉक मार्केट इज लाइक एन ओशन. ये कहीं पर काम है, कहीं पर रफ है, कहीं पर टफ है. वो वैल्यू आपको ढूंढनी पड़ेगी. वो कहाँ पर ओवर स्ट्रेच नहीं, ऐसे अभी भी है. मेरे को ऐसे लग रहा है कि देयर इज स्टिल सम पॉकेट्स इन द मार्केट वेयर यू विल फाइंड वैल्यू. सो वो रिटेलर के लिए हो सकता है मुश्किल है, लेकिन वो फंड मैनेजर के लिए हो सकता है ईजी है वो करना. तो ये नहीं है कि पूरा पूरा मार्केट ही ओवर वैल्यूड हो गया, ऐसा मेरे को नहीं लगता है, और वे एक्सुबरेंस चलते रहता है, इसी का नाम शेयर बाजार है. अदरवाइज व्हाट वुड बी द डिफरेंस बिटवीन ए फिश मार्केट एंड स्टॉक मार्केट? टेल मी.
Well, in the fish market, you don't have a singer like Kedia Saab, but we'll come to that a little later. Let's get Mr. Chandok into the conversation. One of the earliest online platforms that Dalal Street was blessed with came from ICICI Securities, sir. I just want to understand what has been the change in dynamics when it comes to the retailer. Are they now trading much more than what they were 6 months ago? Of course, F&O is the big game for you, and that's where most of the brokerage comes from. But granularly, what has changed over the last 24 years as far as the retail audience is concerned of ICICI Securities?
Yeah, thanks for having me here. I think lots has changed in the last, not just 24 months, but if you trace it a little longer, I think going back a little bit more into time than just 2 years, culturally, we have evolved. The behavior of investors has massively changed. Earlier, in the olden phase, it used to be considered, okay, bhai, this is like a casino. There are big risks involved. I think today there is a lot more respectability. I think that's one big change that we have seen. It's not just about the big cities. We are seeing a lot more. I think even in the earlier session, I was hearing a lot more investors coming from smaller towns. I think that trend is also very palpable. It's not just mutual funds, it's also direct investment into equity, which is exploded. And what is really intriguing, and you just alluded to it, कि भाई ये जो F&O has exploded. Last 2 years में जो हमने देखा था, equity cash, the volumes have actually gone up by 2.5x, whereas F&O has gone up by almost 10x.
Absolutely.
So it's something that I really can't understand, the excitement around F&O. And while you said that that's where most of the money is made, that may be true in the industry, but that's not true for
the retailer.
Like us. We focus on long-term investment, we focus on value creation, and that's where our investors tend to make money, tend to have longevity, and that's where even our firm tends to focus on and make.
Let's now throw this question to Nilesh bhai. Nilesh ji, one, is this bull run here to stay? Two, if all of us in the audience haven't participated as yet, 21,000 Nifty par, 70,000 Sensex par, what should we do? Invest piecemeal, buy in bulk? Because there is this feeling of missing out. कोई भी आपसे मिले, the first question he asks, मैं क्या करूं? तो on behalf of the audience, बताइए ये क्या करें?
सुशैल भाई, आप अपना पेरेंटल ट्री चेक करिए.
जी.
तीर्थ स्थान में जाए तो आपका वो पोथा खोल के बताता है आपके पुरखे कहाँ थे. कहीं पे अगर आपका पुरखा कुंभकर्ण से लिंक है तो लमसम इन्वेस्ट करिए और 14 साल के बाद उठ के देखना इन्वेस्ट करना है नहीं करना है, क्या हुआ. ऑब्वियसली सबके पुरखे कुंभकर्ण तो हो नहीं सकते, तो फिर सिस्टमेटिक ट्रांसफर प्लान कर दीजिए, SIP कर दीजिए. मतलब नाउ दैट वी हैव 20-30 इयर्स ट्रैक रिकॉर्ड, हम बोल सकते हैं SIP मतलब सब इच्छा की पूर्ति.
क्या बात. ये बात तो सही है, systematically put in money, but now where should fresh money go in? Nifty hasn't done much, although we have 21,000 on the peak. But if you see the 18-month performance, it's completely flat. Earnings growth has come in. Where is fresh money? Where should it be deployed, even if it is going to be invested piecemeal SIP wise?
So आज ही मेरे को किसी ने सिखाया, तो आई एम शेयरिंग इट विथ यू. विजय भाई दाद चाहूंगा इसके ऊपर, बहुत अच्छा किसी ने सुनाया. एक है क्वालिटी एंड वैल्यू और दूसरा है मोमेंटम. मोमेंटम में पैसा कम बनता है बट खुशी ज्यादा मिलती है.
क्या बात है.
और क्वालिटी और वैल्यू में पैसा ज्यादा बनता है बट गम भी ज्यादा मिलता है। तो अब आप चॉइस करिए, आपको पैसा बनाना है या खुशी बनानी है। अगर खुशी चाहिए तो मोमेंटम खेलो, और अगर पैसा बनाना है तो वैल्यू खेलो, क्वालिटी खेलो।
हमने दोनों को कंबाइन किया
जी,
तो खुशी भी मिलेगी और पैसे भी मिलेंगे मोमेंटम क्वालिटी पे।
क्या बात। So, I'm sure all of us are watching how the IPO markets are behaving, and for all those who are unsatisfied with the allotment, the little allotment that Salil Bhai gives to people like Nilesh ji and Vijay Bhai, they buy on the first day, and that's the fabulous rally that's unfolding on Dalal Street. Vijay ji, आप अपना पैसा किस तरीके से मैनेज कर रहे हैं? क्या आप भी मोमेंटम के खेल में हैं? और आर यू बाइंग इन बल्क एंड देन गोइंग ऑन अ हॉलिडे, प्लानिंग योर नेक्स्ट सॉन्ग एल्बम, डूइंग योगा? आई नो ऑल दिस बिकॉज वी शेयर अ लॉट ऑफ कॉमन थ्रेड्स. हाउ आर यू नेविगेटिंग दिस बुल मार्केट?
तो पहले तो जैसे आपने मेरा परिचय कराया, क्या किशोर कुमार हूं या मैं जो भी शब्बीर कुमार,
आपने बहुत बढ़िया गाना गाया है फ्यूचर्स एंड ऑप्शंस पे. आखिर में द शो विल एंड विद मिस्टर केडिया's वॉइस.
मेरा आवाज खराब, क्रॉसिंग लेके आया हूं इस प्रोग्राम के लिए. तो मेरे सिप की बात कर रहे थे, तो मेरा एक गाना था सिप पे. मेरे को क्या अर्ज होती है ना, आदमी को टेम्पटेशन होता है, वो रुक नहीं सकता है. जैसे कोई को पान खाने की होती है, किसी को सिगरेट पीने होती है, मेरे को गाना गाने की अर्ज रहती है मेरे को. तो वो चार लाइन सुनाता हूँ सिप के ऊपर में, जो मेरा एक पुराना गाना कि सिप सिप करके मैंने कितनी ये पूंजी जुटाई, हाथ लगी पूंजी तो घर में भी खुशहाली छाई, घर खुशियां हाथ आई तो, खुशियां हाथ आई तो बस यही प्रॉब्लम हो जाती है.
कोई बात नहीं,
खुशियां हाथ आई तो क्या, फिर ऐसे है कि टूटा ट्रेडिंग का ऐसा भरम, अब ना खुशियां हाथ आई तो हाँ चेंज हुआ, खुशियां हाथ आई तो चेंज हुआ मेरा पूरा जीवन, टूटा ट्रेडिंग का ऐसा भरम अब ना करूं. तो ये तो है सिप के ऊपर में कि ये जो मेरा गाना था वो सुनिएगा, आप लोग यूट्यूब में हैं. और अब आप जो बताए कि मैं क्या कर रहा हूं, तो मेरा तो एक ही है सिद्धांत है कि सदा दिवाली संत की आटो पहरानंद. तो अपनी धुन में रहते हैं, और जो गाने की आप बात की है कि वो बराबर हमेशा दिमाग में कुछ ना कुछ मेरे तो चलते रहता है
जी.
मैं मार्केट को देखकर कभी इन्वेस्टमेंट नहीं करता हूं कि ये बुल मार्केट है या बेयर मार्केट है. मैं कई बार बोल भी चुका हूं कि वी आर नाइदर इन अ बुल मार्केट नॉर इन अ बेयर मार्केट, वी आर इनटू स्टॉक मार्केट. और मेरा सीधा प्रिंसिपल ये है कि कोई भी कंपनी, कोई भी जो प्रोमोटर है या कोई फाउंडर है कंपनी का, वो आपके बुल मार्केट और बेयर मार्केट को देखकर अपनी कंपनी को एक्सपेंड नहीं कर रहा है. वो इकोनॉमी की चाल को समझकर और अपनी कंपनी की चाल को समझकर वो एक्सपेंड कर रहा है या अपनी कंपनी को बढ़ा रहा है. आपके बुल मार्केट और बेयर मार्केट उसको कोई फर्क नहीं पड़ रहा है. अभी धीरू भाई, मुकेश भाई को आप पूछोगे तो उसको मालूम नहीं होगा बुल मार्केट क्या होता है. बुल मार्केट, बेयर मार्केट उनको पीछा करता है उनको, तो वो लोग मार्केट को पीछा नहीं करते. तो मैं वो सब ज़्यादा ध्यान नहीं देता हूँ. और मेरा चूंकि इन्वेस्टमेंट का जो लॉन्ग टर्म इन्वेस्टमेंट रहता है, तो मेरे को कोई फर्क नहीं पड़ता है गिर गया या बढ़ गया या क्या हो गया. तो मैं तो वो मेरा वो गाना भी है ना कि लॉन्ग टर्म की सोच और रेस्ट कर, तो मैं रेस्ट मोड में रहता हूँ
जी. तो आपके हिसाब से बाजार ठीक है, यहाँ पे कोई ज्यादा गर्मी नहीं है, और अगर 3-4 साल 5 साल का निवेश का माइंडसेट और व्यू है तो ये ठीक बाजार.
हाँ, गर्मी हो सकती है मार्केट के अंदर में, ये हो सकता है कि अभी ये ठंडा हो जाए, कल से ही हो जाए. एक एग्जांपल के लिए बता रहा हूँ, क्योंकि क्या आप देखिए 2 साल के अंदर में जो मार्केट का आप देखेंगे तो कितनी सारी अनसर्टेनिटीज थी. यूएस का रिसेशन था, इन्फ्लेशन था, इंटरेस्ट रेट था, वॉर था, 2 वॉर अभी भी चल रहा है, इंडिया में ये सब था, इलेक्शन था. अब ये सब चीज पॉजिटिव हो गई है, तो हो सकता है मार्केट यहाँ से रिएक्ट कर जाए. ऐसा भी हो सकता है. तो ये नहीं कि जब सब चीज अच्छी होती है ना, मार्केट डर में ज्यादा बढ़ जाता है. जब सब चीज अच्छी होती है लगा अभी क्या अभी करने के लिए. तो ये लेकिन अलग मुद्दा है, इसका उत्तर कभी मिलेगा नहीं. लेकिन अगर आपका 3 साल 5 साल और 10 साल का व्यू अगर है, तो फिर हम लोग अमृत काल में है, जैसा हम जो बात कर रहे हैं, फिर हम लोग गोल्डन ईरा के अंदर.
बिल्कुल. विजय जी, माय नेक्स्ट क्वेश्चन कम्स टू यू. The brokerages have, undergone such a dramatic change when it comes to coming out with products, even for the points that KDS have mentioned. You can do a daily SIP, you can do a weekly SIP, you can do a monthly SIP, a basket of SIPs across indices. Tell us how brokerages are adapting for the next 2 or 3 years so that life for retail becomes even more easier to trade or invest, whatever they might want to do.
I think इंडस्ट्री में अगर देखा जाए तो डिफरेंट ब्रोकरेजेस आर गोइंग इन डिफरेंट डायरेक्शंस. एक तो I think people are realizing that broking is a damn tough business, more glamorous than the ability to make money. And prices have come rock bottom, brokerages and other charges have come to rock bottom. So they are looking to expand into adjacencies. तो एक तो वो ट्रेंड हमको देखने को मिल रहा है. म्यूचुअल फंड में जा रहे हैं, नीलेश भाई के साथ कंपटीशन करेंगे, ETFs में जा रहे हैं जी, सम ऑफ देम लेंडिंग में जा रहे हैं, तो डिफरेंट एडजेसेंसीज में घुस रहे हैं. हम फोकस्ड हैं एज अ फर्म. वी हैव टेकन अ डिसीजन टू रिमेन फोकस्ड विद द इन्वेस्टर एंड लुक एट 3 पिवट्स किए हमने. एक तो जो टू हेल्प द इन्वेस्टर, वेरी सिग्निफिकेंट डिजिटल पिवट. उसमें ईज ऑफ एक्सेस, हमारी बात हुई थी कि बहुत सारे डिफरेंट स्मॉलर सिटी से आ रहे हैं. जिस प्रकार का आपको फिजिकल डिस्ट्रीब्यूशन की पुरानी पहले ज़रूरत थी, अभी यू डोंट नीड दैट. एक्सेस बहुत कन्वीनियंट हो रहा है. दूसरा, हम एनालिटिक्स और टेक्नोलॉजी को कंबाइन करके वी आर ऑल्सो लुकिंग एट हाउ वी कैन इन्फ्यूज आर्टिफिशियल इंटेलिजेंस इनटू दिस, so that we are able to make tools for investor to easily convert what he believes, उसको जो यकीन है उसको ट्रांसलेट करे एक ट्रेड में, एक स्ट्रैटेजी में, और एक बटन क्लिक करके वो इन्वेस्ट कर पाए. सो दिस काइंड ऑफ कॉम्बिनेशन इज व्हाट वी आर लुकिंग टू डू. वी ऑल्सो थिंक टेक्नोलॉजी में यूज करते हुए वी कैन ऑल्सो मैनेज कस्टमर रिस्क, बिकॉज फाइनली दिस इज अ गेम ऑफ इंश्योरिंग रिटर्न्स, नॉट जस्ट इन्वेस्टिंग. रिस्क मैनेजमेंट हमारे लिए बहुत इंपॉर्टेंट है. तो हमने कस्टमर के कन्वीनियंस के लिए एक इंट्रोड्यूस किया, समथिंग कॉल्ड आई अलर्ट्स. तो वो आई अलर्ट से क्या होता है कि यू गेट टू नो व्हाट आर द रिस्क्स बिफोर यू इन्वेस्ट. सो बिफोर यू डिसाइड टू इन्वेस्ट इन अ स्टॉक, इफ देयर समथिंग अबनॉर्मल अबाउट इट, कि प्रमोटर ने बहुत सारा प्लेज किया हुआ है या कंपनी इज एक्चुअली लॉस मेकिंग, इट पॉप्स एन अलर्ट so that you are taking a conscious decision. Right. तो इस प्रकार टेक्नोलॉजी कस्टमर सेंट्रिक ब्रॉड बेस किया है. हमने बहुत सारे वेल्थ मैनेजर्स के साथ टाई अप भी किया है जी, ताकि उनके प्रोडक्ट्स, उनके पोर्टफोलियोज हम डायरेक्टली कस्टमर्स को स्मॉल बाइट साइजेस में ऑफर कर पाएं.
Wonderful. About 12 years ago, Nilesh Bhai wrote a wonderful book on how to make money in the longer term. 10 or 12 easy steps. Unfortunately, that book is not into publication, but there are steps which remain traditional and which are true over any bull run or any bear run. Nilesh bhai, a large number of people who are in the market now are young people. The platforms that are accessed by ICICI Securities, by HDFC Securities. What are the 5 things that you would want to tell them how to navigate this bull market with ease, the least amount of pain, and of course, the best amount of money?
So one, please follow the motto of income minus expenses equal to savings को मत follow करो. Income minus savings equal to expenses. थोड़ा थोड़ा पैसा बचाना चाहिए हर बार. Second, बूंद बूंद से सागर बनता है. Regular investments will ensure that you reach your financial destination. Third, jaldi ka kaam saitan ka. So be a long-term investor. This is test match, not T20. If you stay on the wicket, you will get many half volleys to make money. And fourth and finally, be a disciplined investor. Don't put all eggs in one basket. India is a rising tide. As long as you are sitting in the boat, boat will get lifted. Just ensure that there's no hole in your boat. बस ये 4 चीज करने की है, बाकी ऐश करो.
क्या बात है. और ये जो छेद है नाव में, वो क्या हो सकता है?
ये हमारी आगे वाली पैनल ने बताया, गवर्नेंस का.
अच्छा.
So we have to invest in companies and management who will respect minority shareholders. Otherwise पैसा तो बनाएंगे, but वो सारे अपने घर ले जाएंगे, हमें कुछ नहीं मिलेगा.
क्या बात है. I just wanted to ask, we are now sitting in 2023 December and we have a major event.
Just tell by, just to give you how governance can create a problem, I was reading आज today morning मेरे कचरा साफ कर रहा था ऑफिस में से, तो 2013-14 का एक स्पिरिट कंपनी का एनुअल रिपोर्ट मैंने पढ़ा. And anyone can guess which spirit company and which annual report I am talking about. Just go and look at that annual report and you'll realize what governance is all about.
चलिए, मैं एक बात और पूछना चाह रहा था. We are sitting in December of 2023. We have a major event in April and May of 2024, जिसका ट्रेलर हमें अभी पिछले हफ्ते देखने को मिला. बहुत अच्छा ट्रेलर था. Given that background, how do you see the Nifty 1 year from now and 2 years from now?
So, शैल भाई, 30 साल तक अपनी करियर इसीलिए चली है कि हमने कभी निफ्टी कहां जाएगा बोला ही नहीं है.
क्या बात?
एंड जो लोग ने बोला है उनकी करियर खत्म हो गई है. बट ऑन अ वेरी स्पिरिचुअल बेसिस इट लुक्स लाइक नाउ ऊपर वाला इंडियन हो गया है. सो वी हैड वरी ऑन इलेक्शन, वो दूर कर दी. वी हैड वरी ऑन ऑयल टचिंग ट्रिपल डिजिट, वो खत्म हो गया.
6 महीने के लो पे.
वी हैड वरी ऑन मॉनसून स्पेशली इन सदर्न इंडिया, वहां पे रिजर्वियर लेवल ठीक कर दिया. वी हैड वरी ऑन ग्रोथ, वो अबव एक्सपेक्टेशन कर दिया. वी हैड वरी ऑन एफपीआई सेलिंग, तो डोमेस्टिक को खड़ा कर दिया. तो मुझे तो लगता है कि वी जस्ट हैव टू गो एंड प्रे टू द गॉड कि सर ये प्रॉब्लम दिख रहा है, सॉल्व कर दो. वो वहां से तथास्तु बोल देता है.
क्या बात. We'll keep the last 1 minute of the session for Kedia Saab to give his views on F&O. But between then and now, Vijay ji, when you look at the whole universe of investing, and you are a mid cap and small cap picker, आप क्या 5 चीजें देखते हैं कंपनी में जो आपको लगता है कि आपके रडार के ऊपर आएगी और आप वहां पे शायद पैसा लगाएं? प्राइस की बात अलग है. और क्या 2 चीजें देखते हैं जो बिल्कुल उससे दूर रहते हैं?
तो मेरे को इस पर मेरा गाना याद आता है, जो मेरा वो पहला गाना था, है मार्केट उसी का, मुनाफा उसी का, लेके भूल जाए शेयर अच्छी कंपनी का. तो उसकी क्या क्वालिटी है कि मैनेजमेंट हो ऑनेस्ट, एम्बिशन ना कम हो, चैलेंजेस से खेलने का बाजुओं में दम हो.
क्या बात.
वरना वो बजा देगा बैंड कंपनी का. और उसका दूसरा लाइन ये है कि ईपीएस है झूठी, कैश फ्लो है सच्चा, लोन जितना कम हो उतना ही अच्छा, ब्याज ही बजा ना दे बैंड कंपनी का, लेके भूल जाए शेयर अच्छी कंपनी का.
क्या बात है. बस अब 2 कंपनीज के नाम बता दीजिए जिसमें ये सब है.
मेरे पास तो जितने भी कंपनी उनमें ये सब ही है, सब इसी समझ के मैंने लिया. कल अगर चेंज हो जाए तो मालूम नहीं है. तो लिव फॉर टुडे, आज तो ये सब उनके अंदर में है.
अच्छा, चलिए. तो केडिया साहब का पोर्टफोलियो इज अवेलेबल ऑनलाइन. बहुत आराम से देखिए उसको और बहुत इत्मीनान से केडिया साहब बैठते हैं उसमें. ज़्यादातर समय अपना बिताते हैं कि अच्छा गाना हो जाए, अच्छा योग हो जाए, और बहुत बढ़िया किताबें भी पढ़ते हैं ताकि ट्रेडिंग की तरफ ज़्यादा ध्यान ना रहे. आपने बहुत अच्छी बातें कही हैं F&O के बारे में भी. काफ़ी सारे रिटेलर्स इस चक्रव्यूह की तरफ बढ़ते हैं इस उम्मीद में कि बहुत ज़्यादा पैसे बनाएंगे. चंडोक साहब का बहुत फ़ायदा होता है, लेकिन दिल से वो भी नहीं चाहते कि ऐसा हो, क्योंकि बिल्कुल. केडिया साहब, 2 बातें, क्यों ये एक गलत रास्ता है और क्यों इससे घर का पूरा जो जुटाया हुआ धन है शायद वो भी हट जाए?
नहीं, ये मृग तृष्णा है, क्योंकि सबको जल्दी जल्दी पैसे वाला बनना है, सबको जल्दी जल्दी करोड़पति बनना है. और आपको मालूम है मैंने इस बारे में कितने गाने लिखे हैं, इस बारे में कितने कोट्स लिखे हैं. तो ये ह्यूमन साइकोलॉजी है ये, कि जिसके पास में पैसा नहीं है वो सोचता है मैं जल्दी से F&O कर कुछ कैपिटल जुड़ा लूँ, उसके बाद में इन्वेस्टमेंट करने लग जाऊँ. तो और कुछ एजुकेशन की भी कमी है, और तो ये उसका मिला जुला रूप है. तो और दूसरा क्या है ना कि वो आदमी मरने के बाद ही स्वर्ग पहुंचता है, उसके पहले स्वर्ग जा नहीं सकता. कोई आदमी स्वर्ग आप किसी को पहुंचा नहीं सकते हो. तो सब आदमी वो टेस्ट एंड ट्रायल करके कि ये 100 में से 99 अनसक्सेस हो गए, मैं उनमें से एक हूँ, तो मैं शायद सक्सेस हो जाऊंगा. तो ये जो कॉन्फिडेंस वो रहता है उसके अंदर में 99 आदमी भी बेचारे अपनी कैपिटल से जाते रहते हैं. तो ये एक साइकिल है, ये आज से नहीं है, जब से स्टॉक मार्केट है तब से साइकिल है. वो पहली पीढ़ी जब नए नए लोग आते हैं वो फिर अब वो एफएनओ करते हैं, फिर वो उस पर पैसा कमाते हैं तेजी बाजार में। वो पहले जो नया नया आदमी आएगा फिर वो माइग्रेशन होकर वो ज्ञानी बन जाता है, ध्यानी बन जाता है, फिर इकोनॉमिस्ट बन जाता है और बाद में फिर वो वापस वो जीरो पे आ जाता है। तो वो पूरा साइकिल है। सेकंड साइकिल में वो थोड़ा समझ जाता है कि हाँ शायद ये मेरे बस का काम नहीं है, तो फिर वो सिप से चालू करेगा इन्वेस्ट। तो ये साइकिल है, ये आप समझ लीजिए सीता मैया की परीक्षा, अग्नि परीक्षा है ये सूनर लेटर सबको देनी पड़ती है, ऐसा ही समझ के चलिए।
चलिए समय समाप्त हो गया, लेकिन उतना समय है कि आप 4 लाइनें सुना दें।
तो मेरी आवाज़ खराब है, आपको मालूम पड़ रहा है। तो मैं जो लास्ट जो गाना था वो मैं आपको बताता हूँ, उसको रिसाइट करता हूँ कि सोच कर समझ कर इन्वेस्ट कर, रूमर पे टिप पे न टाइम वेस्ट कर, नॉलेज और पेशेंस का बिजनेस है ये, अनुभव से सीख और बेस्ट कर। तो यही मेरे को लगता है ये बाजार का ये पूरा सार है। और एक दूसरा मेरे को याद आ रहा है कि किसी को भी तू ना समझ में ये आए, ये चढ़ता चढ़ता क्यों गिर गिर जाए, ये 90% लोग क्यों पैसे कमाए, सोचा समझा खूब तो समझ में ये आए, ये जो लेके गए बैठ वो ही तो है कमाए, ये 90% लोग बैठ नहीं पाए, थोड़ा तो समझो भैया, थोड़ा तो सोचो भैया, वरना तो डूबेगी ही तुम्हारी नैया।
We'll call it a day for this particular panel. Thank you so much for listening and a warm round of applause, please.
Can we all pose for a quick group photo before we move on to the next session? दे देना। Can I request everyone to settle down as we proceed to the next session? The next session has been titled The Business of Risk. In this session, we will explore the intricate dynamics of risk in the corporate landscape, understanding how successful organizations navigate uncertainties, turning risks into opportunities. Our panelists for the session are Dinesh Kanabar, CEO, Dhruva Advisors, and Sandeep Parekh, Managing Partner, FinSec Law Advisors. This session will be moderated by my colleague, Sakshi Batra. Can we have a huge round of applause, please, for our next session?
Good evening, everyone. Well, the bar was set high with the previous panel for sure, and we are going to be ensuring that all those things that were talked about, that the Indian economy is perhaps at the high point, in a sweet spot, and this is perhaps India's moment, and this is perhaps India's decade. But you know, at the same time, Indian sectors and also the companies, they have a lot to navigate through. Starting from political, economic, technological risks. There are a lot of risks that companies are going through. So on this panel, we are trying to understand how can companies be better prepared for such risks. So Mr. Kanabar, let me begin with you. Help our viewers and all the audiences here understand how has the risk landscape really evolved for organizations in India, and today, which are the biggest risks that companies face?
So first of all, good afternoon, everybody, and thank you, Sakshi, for having me here. It's a pleasure to talk to this group. But I was just wondering, you know, here is a group of investors. They are looking to maximize returns. Talking about
risks and conservatism is the most boring thing that one can do. So let's try and see how we can make it more interesting than make it boring. So just as a background, when you talk of risks, I think Harvard Business School really did a good study, and without being too academic about it, it just put risks into 3 buckets. It said there are risks which are preventable, which are internal to the organization. An employee going rogue, somebody acting outside the ethics, doing something unethical, non-compliance with rules and regulations, whatever else. Those are things which every organization has to and will engage in. That's one part. Second is a strategic risk. And strategic risk is, I think, this what this audience understands. You know, the previous panel was speaking about high risk, high reward. Are we staying invested? Are we for overnight, whatever? That's not something which that is what organizations discuss at a philosophical level, not something which is day to day. And the third and the most important risk, which has these days become very critical, is the environmental risk. So a political, geopolitical, a war breaking out, things which are beyond the control of the organization, how do you manage? And the way the world has become complex today in all these spheres, so we primarily talk about the first and the third category of risk. Every organization has to deal with both these risks. Internal management of preventable risk, and then we are talking about risks which are beyond the control of the organization and which need to be addressed on a day-to-day. And the way I see it is that the regulatory framework is evolving very much substantially. We have new things on technology, artificial intelligence, cyber security and threats around that. And we have also the political environment going. So organizations really need to put something of risk as a top focus. If they have to survive, they have to thrive. And then finally, we have what we call as black swan events, which is what nobody can ever predict.
Absolutely. Mr. Parekh, help us identify some of these challenges and, in this changing and fast accelerating environment where risks are changing by the day, by the month, how do companies really navigate through all of them?
Sakshi, I think just to kind of give, let's just start with 30,000 feet. Yeah. I think this is divide risk into 2 parts. Like I think Dinesh Bhai mentioned, I think one is the expected kind of risks. And, I think companies have fairly set procedures to kind of identify them, map them, have a strategy around it. And then, of course, combat it to the extent possible. You can't, oil goes up, it goes up. You can't, you have to prepare for it, but at the end of the day, your company may become unviable. So there are certain risks which you can't avoid, even though they may come. And the second area is kind of the black swan events. And, we've seen so many of them. We've lived through it in the last 3 years. I don't think anybody in the last 50 years could have expected COVID to...
4 countries going to war in a span of 1 year.
Yeah, every 6 months or 1 year, we've got some new war coming up, and large wars So I think identifying those itself is a huge challenge, and therefore, for companies to prepare for it, there are of course some exceptional people who have been able to, Nassim Taleb, for instance, predicted an epidemic in the next 10 years. He said that in 2016. But identifying the extreme, the extreme events is itself very, very, very difficult. And therefore, it's next to impossible to plan for it. And therefore, I think to build in the resilience for things which you cannot predict is, I think, equally important. But there's only so much you can do. So I think the first part is probably going to be 90% of your business strategy. Just kind of to take a little tangential point, because I think you have senior decision makers here. I think it's really important at the board level to have kind of a strategic direction when you're looking at risk. Because, whenever a regulator is looking at a board of directors' duty to the company, they will always look at, were your policies sound? Did you act reasonably? And beyond that, they don't want to penalize the company. And that goes back to the point that, businesses are based on imagination. They're based on risk taking. If you kind of
invest all your money in government securities, you can be the most riskless company out there. And that's why, its board of directors are the only fiduciaries in the world who have a protection called the business judgment rule. That if you go ahead, make mistakes, you are not going to be liable for those mistakes. So long as you're loyal, so long as you're careful and diligent. So it's a legal principle called the business judgment rule, and that is specifically meant only for directors and not for any other fiduciary. So I think it's important to not run away from risk, but to try to, you to control the storm really when you see it.
Absolutely. Mr. Kanabar, let me come to you now and understand, are companies both domestically and internationally feeling comfortable when it comes to investing in India? Because that itself is being seen as, on a risk parameter. Of course, we have jumped the ladder when it comes to ease of doing business, but are they really confident? Because, the one thing that economists are noting these days is that while the government spending is picking up, it is the private investment that is still lagging. So is there a risk factor there?
Sakshi, your question in some sense is a contradiction, because you're talking about domestic capital expenditure and how is the world looking at India. And it is tried to say today that the world is looking upon India as a very, very bright spot. No question about it. I think every time you talk to international investors, there is such a lot of moroseness when it comes to the Chinese investments, when it comes to returns from other markets. Two things have happened in India. One is, of course, there is that level of confidence, there is that level of entrepreneurship which has come in, there is new development which is happening. For the first time, global investors are seeing that India is building to scale and not just wanting to chicken out as we reach mid-tier. So Indian companies are becoming global in size, etc., etc. To say, for example, that a 5G can locally be developed and implemented in India, the way infrastructure expenditure is happening, both on the private side as well as the government side, is huge. The challenge which I do see, you spoke about ease of doing business. India, of course, moved up several ladders, and then the index itself was scrapped because it was found to contain certain inherent deficiencies. Where I see a challenge is that while there has been a considerable improvement in actual implementation of ease of business, we have a long way to go. If I may give you one statistic which indicates this. So in 2022, a study was done that which were the large MNCs which either moved out of China or did not move out of the China but took another option to go. And we identified 76 large companies which had created either moved out of China or created an alternate base. Out of that 76 companies, 26 moved to Vietnam and 6 moved to India. That just shows where we are. Now, in terms of potential, we have a huge potential. Ultimately, it all boils down to execution. Is our bureaucracy adept at what the political will is, which is absolutely a great will? Are people still taking myopic view? Is there still an overhang of enforcement directorate? So I see those as being challenging factors, and that's where, so I do get called in, for example, a very recent example, an Indian company with overseas holding listed on NASDAQ, and the board calls up to say, we need to have a session with you. Our company has received notices for reopening of tax matters. We are visited by enforcement directorate for things which we never thought was a possibility. And is this real? Are we having some real threat or no? So I think India needs to manage that threat perception. So if I had to summarize, I would say the potential is so huge and immense. As Nilesh put it, the tide is rising, all the boats. Question is, will we grab the opportunities which are our way? And that's where we need to focus on execution.
Fair enough. Mr. Parekh, now tell us and our viewers, so you've also been with SEBI, so all the companies that have listed on the exchanges, we're talking a lot about IPOs that are coming up as well. Now, some of the new age IPOs, of course, their founders are, very sound promoters. They have been in this industry for a fairly long time. They also hire people with are top-notch from most, reputed organizations across the world, educational institutions across the world. They pay the top dollar to have the best management, and yet there is the issue of corporate governance that steps up. How does one manage that risk then?
That's a difficult question, because I think ultimately the pool of people is kind of our existing set of people. I mean, people ask me the same question about the judiciary. How come we have such a problem with the judiciary? Because they come from us. They've not kind of torpedoed in from some other kind of first world country. So our people come with their own kind of baggage, if you think about it. And you know, it comes with the kind of shortcuts that we see on the road outside, you know, people going on the wrong side. We don't need to do it, but we still do it. The same person goes to America and they never do that. They never dream of doing that. So part of it has to do with enforcement, I think, which is, of course, getting stricter and stricter by the day. But still, I think there is kind of this attitudinal problem that we have, that we think chalta hai. And you know, I think I'll tell you what has changed really. I think 2 panels back, you had 2 proxy advisors here. That's changed the entire, you know, scenario of companies. Even the largest of companies are scared of what they're going to write. What has changed is private equity has come in and they hold promoters to account. So a lot of things, I mean, if you'd asked me the same question 10, 12 years back, I would have been cynical. I mean, that's the only word. Today I'm not. I think we've progressed hugely over the past decade. And given the interest of India, given the ability to scale, in fact, I was looking at your magazine, and if you see the difference between the profitability of the number 1 company, which is over 70,000 crores, look at the profitability of the 500 company. It's just over 100 crores. We have a long way to go, and it's very easy for us to catch up. You know, Vietnam shouldn't be on that list Dinesh Bhai mentioned. We should definitely be there. But I think I'm very extremely hopeful that we're definitely the next place to invest.
You know, if I could just supplement what Sandeep said, I would view governance, ESG, as really being a big opportunity. There will always be bad apples, and I think the unfortunate part about law is that the law always focuses on bad apples, and laws are meant to prevent that. But there is a huge portion of people out there who want to be compliant, and if we are able to bring that ease of business, make our regulations, one of the important good things which have happened in the recent past is decriminalization of several laws. So Companies Act had offenses which were very, very silly, non-compliance which was inadvertent, and you could go behind bars. The decriminalization has been a very, very good thing. But I do see people wanting to follow the best practices, and when you look at valuation and the multiples, it does get factored in and you get a far, far better value. Most global investors, private equities, etc., look and value different companies with the same profitability differently, only depending on that ESG factor.
Fair enough. And, you know, let me just shift gears and ask you, Mr. Parekh, again, on the kind of digitization that the companies are going through, businesses are going through. There is the emerging cybersecurity threat that everybody is going through. With no proper laws in the, you know, offing as of now. Of course, things are in the process as of now. How does a company really deal with all of that? Unprecedented.
No, I think it's extremely should be extremely worrying for almost all organizations. You know, I think, again, I sit on the board of a large private sector bank, and, you know, 92% of all transactions are happening digitally today. Nobody goes to a bank. If you actually, any of you have gone to a bank branch recently, you will see people are kind of, you'll usually see retired people there because it's a good place to meet their friends and stuff like that. Broadly, I think earlier you could, you know, go to an ATM and loot it, right? That was the risk. Today you can go into the bank server. And, you know, we saw what happened with the Central Bank of Bangladesh. You know, thieves stole $2 billion or some figure like that. From the Central Bank of Bangladesh. So the scale is, instead of looting 10 lakh rupees, you can loot billions or maybe tens of billions of dollars. And, you know, the risk has become just magnified thousands of times, really. So I think the kind of challenges, of course, many companies are up for the challenge. Many have to be, like banks. But many are not. And I think the whole concept of cybersecurity for banks, you know, RBI mandates board members to attend a cybersecurity session every year or 2 years. So I think people are getting more aware, but I think people still don't appreciate how much bigger a risk it is with things digitalization. And I think, of course, India is kind of the leader in digital payments and all kinds of stuff which has had a virtuous, created a virtuous cycle for the economy as such.
Fair enough. Mr. Kanabar, the other form of risk is related to human capital, not just actual capital, and that is, when it comes to talent and managing human capital, which is integral to business success as well. These days, we see even top blue chip IT firms dealing with top level exits, just bunching up in a 1 year's time frame as well, as high as 10 exits for some of these companies. How does a company of that stature really manage the talent management and, of course, for family businesses, succession planning kind of risks as well?
So it's a very broad question, and probably one could speak endlessly about talent and talent retention. But if I could just put it simply, there are three parts. Are you retaining the right talent? Are you training them right? Do you have a work environment which allows people to be retained? And what are you doing about that retention? And a few things happen. One is, given the way the churn is happening, and the churn keeps on happening, one of the things you mentioned, for example, about IT and senior level exits in IT, while it's not a desirable thing, a large part of that talent moving out is because of entrepreneurship and the new opportunities which come up. And the question is, can IT companies afford that opportunity within the organization to those people who are entrepreneurial in nature? And not everybody thinks that way, because people have different mindsets and different skill sets. And how do you put those skill sets to absolute use? Second point is, really within the organization, are you walking the talk? If there is work discrimination, if there is sexual discrimination, are people empowered to speak about it openly? Is dissent sort of permitted, encouraged? Do you really allow people to think outside the box and come up with different solutions? And I think organizations need to go on reinventing themselves. Today, the youth in the workforce is enormous, and the youth is restless. There was a point of time when you waited for 20 years to prove yourself until you reach wherever. Today, people say that if we are capable, we don't want the hierarchical organization that it takes us 5 years to reach other 5 years to reach here. If we are capable, do organizations keep on reinventing themselves? The corner room in the organization is no longer restricted to those who are 50 plus. And the final point I would put is succession planning, which becomes one of the most important things for every organization. So if somebody is moving out, is there somebody else ready to move in and take that place and move further?
Fair enough. Just 1.5 minutes remaining, so I'll give one word to both of you towards the end. Tell us, how does an organization really anticipate future risks, which is a big challenge, and how to identify it and prepare well in advance? Mr. Bari.
No, so I think it's at least in large organizations, it's a specialized role, and I don't think it should be kind of done by amateurs, really. I think there are experts who are looking at, again, it doesn't have to be just a business risk, cyber risk that we spoke of. We have legal risk, for which you should come to me, of course. So I mean, there are specialists out there who are looking at various types of risks, and you should be able to at least know that you have an issue of cyber risk. If you're not large enough, you outsource it, but at least have that courage of going out and kind of trying to get the talent, map the resources, think of executing that mapping, and finally kind of take calls, because like I said, being risk averse is probably the kind of the worst thing to do. I mean, going with your eyes open and taking risk is the name of business.
Fair enough. Mr. Kanabar, for all the tax-related risks, you have to go to Mr. Kanabar. That is the given. Apart from that.
No, let me put it slightly differently, maybe a little bit of a different perspective from what Sandeep mentioned. Far too long, risk within organization has been relegated to compliance. And it is not, compliance is of course very important, but that's the least of the issues. It's something which has been relegated to a department which is going to look at whether it is law, whether it is tax, whether it is finance. I think in today's date and time, risk is something which the board needs to be concerned with, because the level of risk today is very different. technology risk, obsolescence risk, war risk. How are you looking at each one of these on an ongoing basis, evaluating and responding to it in the best possible manner? It is no longer a function of those people down below doing that risk fiction day out or consulting somebody like us to provide. That may be one of the important aspects, but it's really a board level matter, and independent directors, as Sandeep rightly mentioned earlier, focusing on risk for the organization.
Well, wonderful. Thank you so much, gentlemen, for speaking to us and making all the people aware about what are the potential risks one needs to be aware of. Thank you so much for being a wonderful audience and listening very, very carefully after that intense conversation that we had. Thank you so much.
Thank you, Sakshi, for moderating that panel. Now, the next one is a session where I've got my notepad, I've got my pen, because this is a session where I'd be wanting to jot down a lot of notes, as should you, because we're going to be talking to a very special guest about the sustainable path to profits. In this session, Professor Vikram Gandhi from the Harvard Business School will share his insights and expertise on the emerging field of sustainable investing, which aims to generate positive social and environmental impact alongside financial returns. We'll explore different approaches and strategies that investors can use to align their portfolios with their values and goals, as well as the challenges and opportunities that they face in this rapidly evolving market. Can we please have on stage Professor Vikram Gandhi, Senior Lecturer, General Management Unit and Entrepreneurial Management Unit, Harvard Business School. This session will be moderated by Siddharth Zarabi.
As always, one of the defining things when you talk about Harvard is the fact that you have people of Indian origin in all manner of wonderful positions who have contributed to business education all across the world. And some of the finest businessmen, you would agree, Professor Gandhi, have been trained by people like you. So a round of applause for people like who represent brand India, brand Bharat. Thank you very much for...
Thank you so much, Siddharth.
I was looking at how to introduce you to the Indian audience, and you're a senior lecturer in the General Management Unit and Entrepreneurial Management Unit. So entrepreneurship, he teaches that in some ways. You developed a new course, Sustainable Investing, which is an important point. And because the session is Sustainable Path to Profits, and through the course of the afternoon, when we started, we are talking about wealth creation. And the big question that our audience here and those who are tuning in across the BT Meltverse would want me to begin with is sustainability crucial to profitability, especially in the Indian context? Because globally, I think there is a sustained move towards that, but there is a bit of a doubt as far as India is concerned.
Sure. Thank you, Siddharth, and thanks again for having me. While I appreciate your introduction, I also want to say I'm from Mumbai. I grew up here, so this is my hometown, and I'm very happy to be here. So I would say that maybe give you a little context of what's going on globally, and then maybe talk a little bit about what that may mean for Indian managers, Indian investors. So sustainable investing, and it can be defined very broadly. The first key tenet is that when we talk historically, and sometimes even in India, when we talk about sustainability, the immediate mindset is, oh, CSR, this is trying to do good for the world, this may come at a cost of profits. And I think it's important that at least all my comments are going to be on the basis that sustainability is not about sacrificing profits. Sustainability is not about doing the impact, maybe that they may be good for the world, but it's not about that. It's about good business. And since we are at Business Today, and I keep on seeing at the back over here this little bori with rupees and all that in there, this is about increasing the size of that packet in the medium to long term. So that is the basic tenet that I think has been kind of now established internationally. Nearly about 35 to 40% of all investors, and this is nearly $35–40 trillion, if you look at the equity market, about 100 trillion plus, but 35% of it has some sort of a sustainable angle. And just to take, a supplement to the previous panel, which was focusing on risk, a lot of that is around risk. But I want to talk about the fact that investors see this as an enormous opportunity. If you just take one aspect of sustainability, which is climate, I mean, there's, as you know, ESG is environment, societal, and governance. But if you take one sliver of that, which is the environment and climate, the energy transition investment opportunity for investors is one of the biggest wealth creation opportunities, the title of this conference, that the world sees. And it comes and manifests itself in various ways. And I think investors are starting to see that, appreciate that. It's a huge source of alpha. And I think it's going to start trickling it down to India as well. I think Dinesh at the previous panel, towards the end, I just heard that our company is being rewarded for that. We've done a lot of studies at the Harvard Business School over a period of time, and this is for publicly traded companies, where while there may be some near-term profit hit, because it's like an investment, you're making an investment in the future, that the multiples of companies that have a sustainable glide path, if you will, trade at a much higher multiples. And I'll give an example of utilities. So, utilities, the power generating companies are some of the highest polluters because historically they've been based on thermal power, coal power, gas power. And if you look at the utilities which have proactively moved from sourcing their energy to create electricity from coal-based or gas-based to renewable-based, even though the near-term profits over 5 years may be less, their stock prices have significantly outperformed the ones that have not. And I think you're starting to see that in India as well. I would say that in the interactions that we've had with companies over here, especially the larger ones, I think kind of get it. The smaller companies will say, well, we've got so many other problems in India. What is this ESG stuff and why do we need to bother? I mean, I totally get that. But I think about it in the context that this is, when we talk about sustainability, it means that your company could actually go out of existence if you don't do something about it. And particularly in the context of climate. I'll stop there for a second if you have follow-on questions. Yes. But climate particularly is an issue which maybe we want to focus on in this session. Climate is a slow burn. While we have here also in India, and I'll give a macro setting, in India people talk about, well, the West created this problem. All the carbonization emissions have been created because of the industrialization of the West. We've just come from this COP28 in Dubai, which is a big debate. And all that is true. But the fact is, and some of that should be paid for by the North to the global South, clearly. But I think what we have to recognize, and you as citizens, senior leaders of business, is that the actual biggest negative impact is going to be on places like India. I mean, Mumbai is viewed as one of the top 10 cities to be submerged in the next 25 years because of a combination of cyclone intensity, water level high, and the concentration of the monsoon compared to other cities in the world. So while we can talk about it, every citizen here and business have to do something about it.
And on a planetary scale, 25 years is not even an instant. You give me several points, but I just want to quickly take COP, the conference. Do you think it delivered on the expectations in terms of moving the world towards more climate sustainability?
So the thing is that COP28 kind of final declaration still is being debated. I mean, as we speak, it was supposed to have been done on Sunday, and then some countries said, well, we wanted to take out the word of, reduction or the fossil fuels. So that debate is still going on. But I think there was some good progress made on this whole issue of how do we raise the finance and climate, financing this climate transition. I think that was very good. I think these conferences help moving people in the right direction. I think there's been a lot of criticism about the conference having, being in the UAE, being the CEO, being head of an oil company, the person who's the chair of the conference, that what are all these oil companies doing, the lobbyings are there. But the fact is, it's like you can put your head in the sand that I don't want to deal with oil companies and I don't want to do this and I don't want that. They're here to stay.
And it would make sense for them to make the transition because...
Absolutely.
One of the other points, and this is something that the Indian policy establishment has pretty much a bipartisan consensus on, is that you can't simply force India and Indian companies to frog-march them towards a sustainable future when the West and developed countries are not even willing to put up a fraction of the money that will be required to do so. And in the more recent context, after the Ukraine energy crisis, people are saying, look what the West is facing. So do you want Indians, 1.4 billion people, to also be put to similar risk, Professor Gandhi?
Yeah. So I think there are going to be some market again in terms of investing. I'm very hopeful of one market mechanism which is being discussed at the COP28. So yes, there has to be some transfer of, wealth or payments from the north to the south, as I said before. But also India has to come up with its own innovations. So for example, as an investor, I think one of the most interesting or potentially interesting markets to think about, which is still nascent here, but it will develop, so I'd keep an eye out on it, is the whole market of carbon credits and carbon trading. So what that does is that if you look at all the countries, including India, which is around net zero 2070, which is so far away, no one kind of even thinks about it probably, but it's important to kind of have that benchmark, is that all these companies and countries that have announced net zero, there are two ways of achieving them. One is that you're actually working towards reducing your emissions in your own business, in your supply chain, in your customer base. The second is that to the extent you can't do it, you go out and buy carbon credits from companies and projects that generate those carbon. So there's a huge opportunity. So if you look at the West, most companies now off the top, Fortune 500, S&P 500, 90% have announced some sort of net zero target. That they will not be able to achieve it without buying carbon credits. And that's a huge opportunity for India, and I would recommend that a lot of you all look into this, of coming up with carbon sink projects. So projects which actually reduce carbon and people pay for it. And I think that's a big mechanism of transferring kind of capital from the north to the south. And I think that market is still very, very early stages, but it's something to focus on.
Well, I certainly hope that takes off, because one of the sides of the argument is that the West transferred its polluting industries to countries like China and India. It also transferred labor-intensive businesses to countries like India, and we certainly benefited from it. And the reluctance of Western nations to now put up
So I think that needs to happen, but I do want to emphasize that, for example, another course, apart from the sustainable investing course, is that what I realized at Harvard Business School and at the campus generally is that a lot of the climate and ESG kind of work is very much oriented towards what's going on in America, North America, OECD countries. In a place like India, things are much different. I totally like to your earlier point.
Yeah.
If you are, I sometimes we forget about it, us Indians, like 70% of India has still not been built. Now think about it, 70% of India has still not been built. And what do you need to build it? You need more power, you need steel, you need cement, you need a whole variety of things which currently are some of the most polluting industries in the world. So how do you balance that development growth agenda with a climate agenda? Because at the same time you can say, well, I need to grow, so forget about climate. At the same time, you need to think about, like I said before in Mumbai, if you map heat zones, some of the biggest heat zones where people will not be able to live are in India.
No, I completely take your point. Yeah. And it's not to argue against the importance of it. And in the more recent context, I know everybody in the audience is aware of those visuals were horrifying. An entire Heidel project was washed away by a flood, and that's absolutely horrifying. And apart from the loss of human life, you're seeing what is happening, for example, in certain tunneling projects. We have a kind of geography and geology which is also adverse. So it's very important for India, but you made this point. What do Indian companies do from here? What can Indian companies do to sort of face up to the ESG challenge and yet remain profitable? Because they are answerable to shareholders, sir.
Totally. So that's exactly what I started with, that if you go with a mindset that if I do something in ESG, it's because I need to save the world, as opposed to that this is good business, then that in itself is a not sustainable mindset.
Can I interrupt you here for context?
Yes.
Many years back, when the government and certain bureaucrat decided that corporate social responsibility now needs to be built into statute via parliament, and a certain percentage of profits needs to be earmarked for it, corporate India couldn't digest that in the initial years, and ultimately, since it became a mandate, we saw innovative sort of stretching of the concept of CSR in the deployment of funds. So Is it required by mandate to frog march Indian companies towards ESG, or do you think it's a shareholder task?
So, a very great question. So, I'll tell you the framework we use at Harvard, and you may want to think about this. Any company, whether it be big, small, whatever size, doesn't matter. You can cut it down to you basically have 4 stakeholders. And who are those 4 stakeholders? Your investors, like you said, your customers, and without them, you don't have a company. Your employees, without them, you don't have a company. And the community that which you operate in. You know, you are actually operating in a community, in an environment, and that community, and that part of it is the government and the regulation, but just the community that you're operating in has to give you the license to operate, because if they don't give you the license to operate, you won't be able to run your business. So if you think about stakeholders in that 4 contexts, investors, now yes, if you are short-term oriented, I want to trade, which is the best stock to sell here, there, then sustainability is not an issue. But I think more and more investors, especially foreign investors, and I think a lot of the institutional investors here, have a longer-term time horizon. I think that if you have a longer-term time horizon of 3 years plus, sustainability, even if it comes at a near-term profit thing, because of the multiple growth and because investors are smart investors, they understand, these are not inconsistent. Kind of focusing on ESG issues and creating long-term value are not inconsistent. It's good business, so 1. 2 is, I find, and I don't know whether it's happening in India yet, but at least in the West, people actually, if you look at 5 companies in one industry, same industry, and you know, the talent is saying, well, if companies that are more ESG-oriented, climate-oriented, better kind of a place to work in from an environment standpoint, like a kind of a community standpoint, I'd rather work there than company A rather than company B in the same industry. So you're finding that the actual demand for talent is creating a huge push. So that's 1. 3rd is customers. I think right now there's a lot of talk when customers say, I want this green product, that green product, but they're not willing to pay for it. So that's great. You can say that, but if you're not willing to pay for it, why bother? But I do think that over time, there'll be this so-called green premium, that companies that actually have more of a green product will say. And then the 4th is regulation. I think having some degree of regulation has pushed the West, and I think some degree of regulation here is probably needed to kind of help accelerate the kind of decarbonization agenda. Because without that, it kind of, you say that there is inertia because you're just thinking about the next year, the next quarter, as opposed to...
Well, you are right. Since you said that India is still being built, India is still being sort of, the laws and the regulatory framework are still evolving, and they, most of the time, try and play catch-up. They end up playing catch-up, but sometimes we have regulation that is forward-looking. I want to turn this conversation, because this is something that a lot of people ask, and this is, how is China doing it? Because it's clearly the manufacturing capital of the world. We are now again having a fresh wave of manufacturing, perhaps the 3rd since our independence, and hopefully it will go well. How has China done it, and are there any lessons for Indian companies and policy makers to take from how China has done? And I really don't know what they have achieved in this regard.
So I think, again, if I focus maybe on the climate issue, again, there are different silos, but climate issue, and you just look at aggregate emissions, China by far is the biggest emitter in the world. The 2nd is the US, and the 3rd is India. If you take it on a per capita basis, then India and Europe, the US and Europe are far bigger, and then in China, then India is very minuscule actually in terms of per capita, as you can imagine. Just the
and our emissions are not industrial emissions. They're a lot to do with, for daily life, consumption based.
Yeah, well, still, so 40%, 30% plus of Indian emissions are because of power generation.
It's almost all coal.
Coal, yeah, exactly. Obviously, there's a huge growth of renewables and all that, but it's all coal. Another big 20-25% are the hard-to-abate sectors like cement, steel, aluminum, and then agriculture and others. But I think in terms of China, again, they're bringing, I don't know whether they're doing enough. I mean, I think they're kind of pushing towards it, but they have the same, to a lesser extent, the same issue like India, which is they're growing, they're trying to get people out of poverty. I mean, people don't recognize that, China, from a historical standpoint, in a 20-year time period till say this last decade, have taken more people out of poverty than in any stage in history in mankind. And so they've done a lot to do that, but they still have a long way to go. So I put India where China was, I don't know, 15, 20 years ago. But that glide path of growth and by balancing sustainability, I think that's where India is today. I mean, people don't like to compare India and China. I'm not sure necessarily you should. But keep in mind that while China is the biggest polluter, they also have last year, in fact, either last year or the year before, the aggregate renewable capacity in China, the new renewable capacity in China, just to take one example, was more than the entire world put together. So new renewable capacity coming on in China was more than the entire world put together, one. Two is, if you go now to the cities and the EV revolution over there, and the big companies like BYD and others are going global, it's phenomenal. I mean, they've already got, like, electric vehicles is the thing. Gas vehicles are a thing of the past, right? The competitive advantage, I mean, I would say again, just to keep this out there as a strategic thing, in my view, that 20 years from now, the new oil, right? Right now we talk about dependent oil and gas, and there's a transition, so it's going to be needed for the next 20 years. But the new oil will be batteries, will be things that power. And all battery technology and production capabilities are all in China. Even the US, some of the EV companies, I mean, I don't know whether you saw Ford had to tie up with a Chinese company for their energy, their EV. And then because of the geopolitics, they had to cancel the whole thing, and they're trying to figure out what do they do about battery production.
Absolutely, and China has also sort of taken the dominant share of the rare earths and minerals commodity market also for this. And that's, since you spoke about batteries being the new oil, I am reminded of often repeat statement that data is the new oil. And India's largest conglomerate, Reliance Industries, made that bet many years ago, a massive $25–30 billion bet, and they moved to data, and that network, along with other telecom networks, is driving India's digital. Do you see India and Indian companies being able to make a dent in batteries as the new oil?
Again, it's a longer term thing. I know a lot of the large Indian companies, some of the ones which we are interacting with. As I said, I'm developing a new course, which I'm actually bringing 45 MBA students here to Mumbai next month from Boston. We're 5 days in Mumbai, 5 days in Bangalore, to actually witness climate change and what companies are doing about it as an opportunity. And there's risk factors, but as an opportunity in the context of growth. And there we are visiting a lot of the EV companies and battery manufacturers potentially. So I think a lot of the large companies here are trying to focus on battery technology, battery thing, but it's going to be a long slog. I mean, it's not going to happen overnight.
Absolutely, and there are many companies who are giving this a shot. Professor Gandhi, when you talk about going organic for farming and for food in India, one of the feedbacks that you get is, "Arey, wo to mehenga hai." Does this apply to ESG also, कि ये सब करना बड़ा महंगा है यार, इसमें मार्जिन नहीं है और ग्राहक नहीं है, पैसा नहीं देगा, कस्टमर नहीं है?
I think there is some of that near term. But I do think, so give me one more study, right? So we have done a study over looking at publicly traded, again, and this is in America, but publicly traded companies in the US and Europe. I just trying to give you data examples because I think a lot of that will translate, has starting to translate here, is that you look at the correlation between stock price performance and focus on material ESG issues. One of the problems with ESG is that, if you go on a Bloomberg terminal or anything, since you were there before, there are like 750 ESG metrics. Well, what company is going to sit there and focus on 750 ESG metrics? But if you think about the fact, you think about your own companies, there'll be 4 or 5, depending on the industry you're in, or even the sub-industry of a broader industry, there'll be 4 or 5 key things which actually drive the performance of your company, right? So if you're in the consulting business or legal business like we had before, talent management, pay differential, gender diversification, those things are ESG factors, but if you do them well, it's actually going to create value in the near to short term. If you start focusing as a consulting, a law firm on what your emissions are and all, it's completely pointless. right? And so the same thing, if you're a large manufacturing company, the production process, the emissions around the production process, the supply chain, the water management, the circular thing, those 4 or 5 things are much more important than some of the other ESG factors. So actually, I would you should do this. There's a thing called the Sustainable Accounting Standards Board. It's a non-profit which was set up 15 years ago. It's all online. You can go, they've done by industry and sub-industry 4 or 5 things that matter in an ESG thing to the performance of that company or that industry. And so what we did in the study was track the performance of companies in those 4 or 5 ESG things which were material to that company. And the stock price performance over time has been phenomenal in terms of beating the market and beating companies that have not done it in the same industry. There are a lot of asset managers globally now who are focusing on this topic. I mean, there's a couple of them we read case studies at Harvard on where there's alpha generation that's happening in terms of because of this issue. So ESG is not like this broad thing like you go on Bloomberg, Hare Bapre, ESG, like I got to do all this and what is all this nonsense. Think about your business and think about, go to SASB, Sustainable Accounting Standards Board. Look at your industry. They have a whole kind of a very interactive dashboard. And look at the 4 or 5 things that matter to your industry and focus on them. Just like if you were focusing on revenue growth, margin, profit, the same thing. Those translate into margin and revenue growth. And that's where there's actually what I call a collinear. These are not like you were saying, organic food, so it's like in conflict. These are actually collinear. You do those things well, you will make more money and you will get more sustainable.
I think that's very important. Thanks for that tip. As we wind down this session, since you're from Harvard, I want to ask you, how much hard work did you have to put in to reach Harvard, Professor Gandhi?
So I'm a little kind of a different animal as far as, because I'm teaching at the business school. So there it's, I actually am from industry. I mean, I was a executive at Morgan Stanley. I spent time, 25 years on Wall Street. I set up Morgan Stanley's off, I was part of the Morgan Stanley team over here in the mid-90s. So, but I've been working there. So basically about 25% of the faculty at Harvard Business School are like my kind of person, which are what we call practitioners. That's why it's senior lecturer. Well, I don't know what that means, but that's what it is.
Is it true that Indians, people of Indian origin are amongst the larger ethnic group when it comes to Harvard faculty?
Yeah, definitely. I mean, you look at this. We've had 2 deans in a row who are Indians. The current dean is Indian. The previous one was also Indian. You have this practitioner, so that's 25% of the. We have about 300 professors. So 25% are like me, and then 75% are academics, PhDs, and things like that. But yeah, I'm a graduate from the business school there myself. I graduated 35 years ago. When I went there was like 4 Indians in a class of 900. Now there are nearly 50, 60, which is like the actual. It's great. I'm very proud to say this. I think the #1 international community at Harvard Business School outside Americans is Indians. And it's
round
fantastic.
of applause for that.
Yeah. So, so I think, yeah, so it's kind of interesting. Because it's all case study method. Why the students, I think, enjoy having people like me that I'm just not trying to blow my own horn here. But the fact is that it's all case studies. I would not teach if I had to stand up there and do a lecture. But it's a real case study. You have 80 students debating an issue. And I think for them, for people who bring real-world experience, who've been out in industry and then bring it to the classroom, particularly in the context of a business school program, is very welcome. And that's why Harvard kind of goes out of its way to make sure that they have people like me there.
Professor Gandhi, more power to people like you, and thank you for all the hard work that has taken you to Harvard. Thank you very much.
Thank you so much, Siddharth. Appreciate it.
Thank you, Professor Gandhi. We've taken down notes from that one. Thank you, Siddharth, for that amazing session. And I see people already getting up. I'm wondering where everyone's going, but you're on the right track. We are taking a short tea break so you can refuel, recharge, and come back for the second half of BT500 Wealth Creators Summit. Picture abhi baki hai.
warm welcome to all of you here, here in the hall, and those who are tuning in live across various Business Today platforms, the multiverse as we call it, and a wonderful panel here. And since Ayush has introduced the topic as the secret source of wealth creation, some of you might be wondering at the choice of the panelists, but this is a deliberate choice. You have one of India's largest companies when it comes to tractor finance, for example, who is here, so they know the pulse of Bharat. You have one of the most storied names when it comes to electronics, manufacturing, a whole lot of control systems, multinational corporation with a very strong set of IPs, stable, solid stock, if you were to say in stock market parlance. And we have somebody who understands who are the wealthiest people in India. So I'm going to try and keep this as interesting as possible, and Ramesh is my choice to start today's session. You sell tractors, but I think you sell dreams in rural India for going up the value chain. I want to ask you, have you met a farmer who has purchased a tractor or two from you who also wants his children to do the same thing? Or have you met more farmers who aspire not for tractors, but Mercedes and Lamborghinis for their children?
Good afternoon, and thank you for having me on this panel. We all the time meet all kinds of people. Have you met is not the question. How many have you met is the real question. When we first went into the rural market, traveling from one location to another location by itself was a challenge. And now if you go there, you sometimes get a feeling, have you reached an urban center? And some of our urban roads are making it look like Arvind rural market. But the fact is that, tractor plays dual role. One, of course, it meets the farming requirement. But I don't know, I'm sure most of us are aware, 40% of the cash flow in a tractor comes from non-farm application, which is haulage application. So it's a misnomer sometime when we think that only farmers buy tractor. It's also Mercedes owners buy tractor because they are contractors who are doing extremely well in life, and therefore they add tractor for their contracting business.
Or because of their tax returns to show farmer status.
That's not the direction I may want to go, because they are our customers and they make us be in business. But the fact is that you will, as you asked, the aspiration is always to progress further. So if you really look at what initially used to be just a tractor purchase, today it's substantially increased to a very different level. They actually buy with harvester, with various other equipments. And therefore, the overall project cost of buying a tractor itself has gone very high, right? And the children, whether they want to come into farming or otherwise, I think they're all very educated, and they are actually bringing in what are the other ways of doing farming, right? And not just depend on the traditional way of doing it. And that's the contribution the youngsters make into that industry. And therefore, they are continuing to be very interested in wanting to be in farming. It does not stop them from being aspirational to wanting to do more things. But again, my belief is that while they're educated, they may be even employed elsewhere, etc., etc. But I've seen many of them take leave and come during that harvest time or the sowing time and participate in farming. Because they don't look at it anymore just as a profession, it also in some form an excitement for them and regain their energy to probably go back and do their work.
Absolutely. I'll come back to a couple of pointers that you have given in your first answer. Ashish, I'm coming to you, and just to further explain to our viewers and the audience here, you do stuff that most ordinary folk perhaps don't realize. You are behind so many things behind the screen, and many touch points in our lives as consumers would have a Honeywell product somewhere. You have a long history in India. You are a listed company. What, according to you, have companies like yours done when it comes to India and its economic progress? And I ask this from the point of view of the value that you have created in the high-tech space.
Sure. First of all, thanks, Siddharth, and hello everybody. I represent Honeywell here, as Siddharth introduced. And Honeywell is in the high-tech sectors. There are essentially three things, if I have to really simplify this highly diversified organization. One, we are focused on aerospace technologies. So everybody, nowadays takes flights. Any flight that you take, Airbus or Boeing, the avionics and the pilot assistance electronics is from Honeywell. The second area that we are working on for many years now is automation. And this automation goes into the infrastructure and building side. So airports, malls, metro stations, you take hospitals, stadiums, etc., all the automation. And then also the same kind of automation in the manufacturing industries like oil and gas, refining, petrochemicals, pulp and paper, minerals, metals, mining, etc. And then the third one, which is really becoming big now, is energy transition, because of the climate change factors, etc. Of course, Honeywell used to be very much a name in the conventional fossil fuels, but now with the whole aspect of we moving towards renewable fuels and the whole circularity that we want to bring in for saving the planet, I think that is another area that is a big part of our technology. Now coming back to the question, Siddharth, you asked, a lot of companies in the past, let's say a couple of decades ago or even more, came to India with the purpose of leveraging the cost arbitrage, the labor cost arbitrage. I think that is one thing Honeywell did not do, and I'm glad they did not. And Honeywell has been in India now for almost 9 decades, so which is a long period. It didn't happen overnight. But the thought process always was not just to look at the lower cost of labor, but also to establish itself as a local company, not as an MNC. That's important. It's subtle, but it's important because that's when we started investing into people development, taking people from here for global assignments, bringing those people back, a lot of churning that happens. And this is the thing behind the curtains that makes the value that you see getting created, because that sort of fuels innovation, that instills confidence, that makes it seamless whether you work here or in, let's say, Des Plaines in Chicago or in Houston, etc. So I believe this is a big factor of not looking at India for only the low cost. And also nowadays people look at India as a consumption market because of the 1.4 billion population. But again, that may be a mistake because you need to leverage India for its holistic advantage and not just the captive market or the lower cost, right? So that's what is different.
Absolutely, and Honeywell is a listed stock. You can go and see the kind of value that they have created, and it's very important to take into account the fact that employment also leads to wealth creation, and for a country of the size and nature of India, this is a very, very significant aspect. I'm coming to you now on your understanding, and I'll request you to give us the sort of summary straight away. Who are the wealthy in India? And from all the data that you keep rigorously collating and then analyzing, what is the shape of the wealthy in India? Is it Baap Dade ke zamane ka paisa, or is it being generated by knowledge, by new sectors? Give us the crux of that.
Thank you for this opportunity. It's lovely to be here with all of you. I think from a rich list is all about promoting transparent wealth creation. And India is just a fantastic story from a wealth creation perspective. And over the next decade, you would, based on our data, you would see a lot more wealth creation happening specifically from 4 categories of people. The first is, of course, traditional family businesses. I mean, they would continue to grow well, they continue to consolidate. That's going to continue to create a lot more wealth. Second category is professionals. And I'll tell you why professionals. If you look at who are on India rich list, almost 65% of the who are on India rich list is age 60 and above, which means the next...
that number once again, you said
65%.
65% of the Hurun India rich list, 2023 rich list, is
60 and above.
60 and above. So this is a good data point. 60 and above constitutes a significant majority of the rich list in India.
So next,
and what's the size of people when you, that would be how many?
The rich list is about 1,300, 1,400 that we know of.
And so only 1,300 people are rich in a country of 1.4 billion people?
That we know of.
That you know of. Ramesh, you wanted to interject before he goes?
I just wanted to ask, is 60 a criteria? Then we can hope to become rich.
No, I'll tell you the...
Ummeed ki kiran baki hai.
No, I'll tell you the importance of that number, which means next 10 to 15%, India is going to witness possibly the biggest intergenerational wealth transfer in its history, which means two categories of wealth creators will happen. One is, of course, the next-gen entrepreneurs, and second is professionals. Because professionals are going to definitely play a huge role in terms of creating wealth, like the likes of Sundar Pichai or the CEO of DMart. You would see a lot more of people who are sitting on the dais who would possibly feature in the rich.
As long as you exclude me for that, you can point your finger everywhere else.
Then of course the third category of individuals is of course startup entrepreneurs, because wealth creation for startup is very much required for an exponential wealth creation. So a lot of founders from startup ecosystem will continue to create. Of course, there's a funding window right now and so on, but then a lot more interesting sectors and founders will come from that side.
So I want to interject here. Startup founders becoming wealthy, mostly paper wealth, right? Or just notional wealth?
No, India is a very young country, right? I think our first unicorn came in 2012, right? Unlike most of the other established economy. So what would happen in the next, possibly, I also run a venture capital fund. So what would happen now is you'll see a tapering or more reasonable valuations or some of these sectors which are hyper valued coming down. But once the liquidity becomes even more available in the next 2 years, when the Fed lowers the interest rate, you would see a lot more super amazing startups coming from India.
So what are the top 3 sectors which are currently maximum wealth creators from the list that you do? You know, there are various ways to measure it, but from your perspective, what are the top 3 sectors?
So just to add one more segment of people, and then I'll go to that question.
Sure.
The last category of people who generate wealth in India is also capital providers, the fund managers, private equity fund managers. You would see a lot of them coming into the list as well. So that's broadly the 4 category. This year's rich list is very interesting because for the first time, the top 3 sectors who contributed to maximum amount of wealth creation in the country was from manufacturing. Before there was software and services and so on. There were chemicals there, pharma is there, industrial goods is there. So you would say very heartening to see a lot more manufacturing based entrepreneurs creating significant amount of wealth in the country.
So are we going back to the 60s and 70s in a way? And Ramesh, I'll come to you with that question, because IT-enabled services, 25 years, fantastic run, and now it's manufacturing, which is old. I mean, its techniques are modern, but manufacturing is age is old.
I did not say IT came down. I said manufacturing went up.
Okay.
So I think it is not. It clearly shows the potential and the growth path that India as a country have. It is next 10 years, just to give you a number, when we put out the list in 2012, when the GDP was about 1.9 trillion, we had about 50 billionaires. Now, we are at GDP of about 3 trillion. We have about 260 US dollar billionaires, right? Number of startup founders in 2012 who were in the rich list was 0. Now it's more than 100, right? So number of individuals who were born after 1990s, let's put it this way, the youngest in the list in 2012 was 35 years old, now it's 19. So you could really see wealth from across all the sectors, and this indication that the manufacturing is really controlling, it really shows the growth potential that India as a country have. And for India to hit 10 trillion GDP, the number of billionaires or billion-dollar companies, or number of companies, the overall valuation of BT500, all that will at least double or triple in this next few years.
Ramesh, I'm coming to you. This is a very interesting perspective of how India is changing. And, you know, it's said that compounding is the real secret sauce behind long-term wealth creation. But from you as a financer's perspective, what is the transformation that is happening all across India in this regard?
So, you know, when we started, if somebody bought one vehicle, that itself was thought to be, how is he investing 25% buying such a high-cost vehicle? Today, if you see the number of fleet that is getting added in the transportation segment, it's because infrastructure is doing well, logistics is doing well, and therefore the fleet operators are going up, and substantially going up. I mean, if those days we used to think if somebody had 25 vehicles, he was a very large fleet operator. Today at 500 vehicles, we think, is he large enough? Right? I was yesterday there in the construction equipment exhibition in Bangalore. If you see the range of cranes and excavators and things like that that have been displayed, that tells you what's the future of infrastructure in the country is likely to be. Right? And to use that kind of an equipment. Now, each equipment is costing some abnormal value. And if people are willing to invest in that, look at the bet that they take into future and then correlate it to that he's saying, what's likely to be the wealth creation in the next 3 or 5 years. All this comes from on-ground reality of what's happening. Right? I mean, you travel across rural, you see how houses have transformed. From a kacha house in the past, what we used to call, have all become beautiful looking houses. People are willing to invest. I think what we see over a period of time, people are sensibly borrowing. Earlier, people borrowed for a very specific need that they have shifted further to say that, you know, if I can repay this loan, I'm willing to borrow. So the need plus some sensible method of borrowing for a better future is very clearly emerging.
One quick follow-up, Ramesh. A lot is said about the K-shaped recovery. We'll leave that for the macroeconomists. But there is also this statement that one hears कि गरीब गरीब हो रहा है, अमीर अमीर हो रहा है. From a financer's perspective, what do you see really happening? Because if this is the level of aspiration in rural India, something else must be actually happening on the ground.
No, so the fact is, the first-time borrower or a first-time buyer of vehicle is not declining. See, while the large fleet operators are adding further fleet and becoming bigger, that nowhere tells you that the smaller ones are not aspiring. Right? So we are continuing to see 30% of people even today are first-time borrower or first-time buyer of vehicle.
It's also because companies like yourselves have actually enabled and taken finance and put it in the hands of people. 15 years back, the accessibility to finance, and today must be...
So let me add a very quick perspective. You go 5-7 years back, we could lend only to people whom we could reach or people who could reach us, right, in the branch. Now with the digital intervention, this has been bridged. Now a credit decision is still to be taken. Just because you're able to connect to somebody digitally doesn't mean you have to lend to that person. Now add to that the kind of data that's available on everything, including proxy data. One is an individual data of about individuals and also proxy data available. The credit decisioning is becoming much, much easier. The third is, with the same digital enablement, the ability to repay and recover is also improved. Now, this is what provides the strength to any financial banks or anybody to be able to participate in that. And therefore, what started off as a financial inclusion maybe a few years back as a coined word, today truly playing that role when that expansion has substantially improved. So therefore, you add it back, and I mean, you look at the number of people even from the semi-urban rural market who are going out to get educated. Now, they may not be investing their own money already. They must be borrowing against it. But this borrowing comes with a very definite purpose written around it and the confidence and capability that they can service this. So I think the overall level of confidence on every individual's ability or belief in themselves that they can do something to be able to earn to service these loans is actually expanding the overall market, and which is where I'm able to correlate. I still don't know the definition of wealth. who he calls as wealthy. When he says only
why don't you
1,300 people, that's a challenge. But then if it defines wealth means minimum 1,000 crore, then I can understand. Is that the number? Okay, great.
So Mike.
Then I would never come in that list. Don't
No,
worry.
just elaborate on that. What is the definition of wealth as per the Hurun India Rich List?
Ours is basically a wealth of 1,000 crores at an individual level. That's the definition of wealth.
No, there will be a lot of people who will say even crorepati is wealthy. But Ashish, I will take the point about manufacturing. I have a follow-up later on for Ramesh on cost of capital, because India still remains one of the highest cost of capital countries, and there's an enormous compliance burden as well. But on the manufacturing, can you offer us a perspective for all those who are tuned in of how different or sound is India's manufacturing story? Because, we have seen cycles of it. The industrial clusters from the 60s and 70s, the activities driven by public sector undertakings, and now once again, especially in electronics and other high-tech areas. What is this manufacturing story all about, according to you?
Yeah, that's a very good question. And sometimes we quickly compare ourselves with the already developed countries. But we don't take into account the time it took for them to get there, right? So if you compare the time and the expertise and the rest of the ambience for manufacturing, my personal opinion is that we are very good. And why I'm saying that is today...
So I'm sorry to interrupt you. When you say we are very good, what is it? Are our people good, or are we able to access the best technology? What is it? The Japanese talk about their total quality management, Zen practices. What is it that makes us good?
So if I have to pick one factor, we are extremely good at adapting and quickly learning and therefore scaling it up. Where is the largest oil refinery in the world today? It is in India. Which country produces the largest number of tractors you just talked about? It is in India. Which country produces the largest number of two-wheelers? It is in India. There are many such surprising things in the manufacturing sectors which have not been highlighted in the past, in my view, right? And we need to make that more and more prominent and underline them as we go forward. Also, we have been extremely good at backward integration. So I was talking to a few colleagues, and some people are happy about the way electronic manufacturing is coming to India. Some people are criticizing it by saying, oh, but this is just the assembly line. So for example, we don't make chips. But how many people know that a lot of chip design goes from the Indian minds? How many companies are involved in the very basic aspect of the value creation? So where is the value created? Value is created when you are designing a new chip. Then you go through the value addition. So you make circuit boards, you make, let's say, a cell phone, and then you go towards the service end of it where you add applications on top of it. So at the two extreme ends of the spectrum, which is the design of the chip and then the applications, is where the maximum value is created. And where is that getting created? A lot of that in India, I would like to argue. Right? So you have to change the perspective a little bit. And if we start doing that journey towards a backward integration, today we start making the assemblies of the high-tech gadgets of electronics. I'm sure it will lead us to the path of getting into the chip manufacturing as well. So, and that's how I genuinely believe India can move, and much faster leapfrogging than some of the other countries which have done in the past.
This is a good perspective, because we all end up comparing ourselves with China. We get compared with China, and last year when I was interviewing someone at Davos and I said China plus one, he stopped me there. He said, you shouldn't be asking this. You should say India plus. You should not say China plus one, and that's the kind of confidence people have. I'm coming to you, Anas, and why is it just 1,000 crore? Because not to sort of go on a socialist point of view, but even 10 crore would be very, very wealthy. If somebody were to generate 10 crore of wealth and aggregate that over a lifetime in India, that's pretty wealthy.
So if my company is VC funded plus I have 100 employees, definitely I could do that research here long. But I think this could be, from our perspective, we kept it 1,000 crores to do a benchmark on a year-on-year basis. And We believe that story of these entrepreneurs tell the story of modern economy. And this number is more like a sane, rational number for us to do a benchmarking on. I mean, that's about it.
But the sort of more serious question, for a country of the size of India, can you approximately, top of your mind, just say how many people are actually wealthy? What's as per a global benchmark, how much of India is actually wealthy?
We did publish a macro study on India's wealth, and we found out that about 700,000 millionaire households are there in India.
Okay, let's get that right. 700,000
millionaire
households.
Right?
That means 10 lakh rupees per annum and more.
No, US dollar.
US dollar.
Yeah, based on assets, not on income.
So 700,000, and that's 1 million US dollars.
It was an assets. Not the,
complete,
not the, and this number, we tried to corroborate that with some of the real estate players asking, look, this kind of number, one in every X number of households, does it make sense? And they kind of made sense to us. But then, from the way I look at this whole thing is, it's even the rich list, right? What we say is for every one person we found, we would have missed another 3. So size of the rich list with 1,000 crores net worth and above should ideally be around 5,000, but we could only find 1,300, 1,400.
And why do you miss them?
Lack of data. For us, we need to be sure.
Legacy of excellence. And honestly, I can't do such a good job at explaining what that really is. We have a little presentation for you over here, so let's have a look.
100 listing is one of the most prestigious business rankings in India. Since its inception in 1992, Business Today has consistently ranked the nation's top 500 companies by market capitalization, earning its reputation as a leading source of credible corporate information. A compass for corporate excellence, the BT500 has set the benchmark for success and inspiration in the business community. From witnessing the rise of titans, the birth of unicorns, the game-changing strategies, the BT500 has become synonymous with success, inspiring generations to dream bigger and achieve more. From the boardrooms to the factory floors, from the stock exchanges to the innovation hubs, the BT500 has been more than just a ranking. It's a legacy of excellence, a testament to the power of innovation and a beacon of hope for the future of Indian business.
All right. With a quick show of hands in the audience, since everyone is recharged, how many of y'all have been at some point advised or intended to grow your wealth via mutual funds? Quick show of hands. All right, this is the right audience, and that's what we do in the Business Today Multiverse. Get the right message to the right set of people. The next session is titled Growing Your Wealth with Mutual Funds, where we'll be exploring ways to create and build wealth via mutual funds and SIPs. Now, if I speak a little faster, I might sound like that announcement at the end of mutual fund commercials, so I'm going to slow down and tell you about our next guest. DP Singh, Deputy Managing Director and Joint CEO at SBI Mutual Funds. Welcome, sir. And this particular chat will be moderated by my colleague, Sakshi Batra. Now, we want a huge round of applause because you've had a nice little break there.
Good evening. Good to see a full and packed house because this is the conversation that you really want to hear. You know, we are talking about mutual funds, and throughout the session you've talked, you've heard about SIPs, and this is the best session that you want to really listen to. So the mutual fund industry, as we all know, is at a very, very sweet spot. We're seeing SIP flows at record levels, 17,000 odd crore rupees flowing in on a monthly basis. The assets under management for the entire industry at 50 trillion. We've set the eyes now at 100 trillion as well. And now, the bigger question here would be to find out, when we talk about the journey from 50 trillion to 100 trillion, how is the growth of the retail investors going to pan out to be? How many are we going to add into the journey as well? And that is really going to be the focus of this discussion. And how do retail investors really, at large, grow their wealth with mutual funds? So let me first mention a few numbers, sir. You are the data guy here, and you can correct me if I'm wrong. When we talk about a population of 140 crores, there are only 4 crore investors of mutual funds in India. 10 crores are investors of stock markets, and we have about 25 crore FD accounts in India. Now I want you to tell us, despite being a very well-regulated industry, everybody understanding the importance of creating wealth with mutual funds, why are the numbers so low even now?
So I think first of all, see one big trend I have seen in the last 15 days, especially after this number of 17,000 crore plus came, all those wealth managers who were talking about the AEFs and PMSs and everything, everybody has started talking only about SIPs. Okay, that's something I'm amazed. Even the other day I was talking to one wealth manager whose ticket size used to be minimum 5 crores to 50 crores category. They are saying now we have started getting the SIPs of 10 lakh rupees. So on the one side we are talking about 250 rupees SIP, and the other side we are talking about 10 lakh minimum SIP. So the country is giving such a diverse number. I think the mutual fund सही में सही हो गया है, बट अभी उस सही को कैसे कहाँ तक लेके जाना है वो हमारा काम शुरू हुआ है. I think it's a great journey which has just started, but I think this SIP story is a global success story. Anybody from abroad, whosoever is visiting India now, and by the way, a lot of people are coming to India and they are feeling missed out from all across the globe, that we have missed out the journey in India. And today also we had one AMC coming from Tokyo and talking to us, how can we participate in this journey? And when we tell them about the SAP journey, there's a wow thing, because nobody across any geography has been able to do this. So in this background, I think the people who have not participated, as we said, the 4 crores, these 10 crores people will definitely join the bandwagon. See, today, especially the millennials, for the last 6-7 years, they have seen only one side of the story. But the strong research, the strong analysis of the company, which is driven by mutual fund, will force everybody to come through the mutual funds. And I am very, very optimistic that this journey of 50 trillion to 100 trillion will not take even that much time as you were talking about.
How long will it take, sir?
It cannot be 2030, it will be much earlier.
Oh, wonderful. Yeah. Okay, so then, sir, tell us, you talked about a little bit that you're getting 10 lakh rupee SIPs also, and you just heard, in fact, SEBI chairperson Madhavi Buch also talked about the 250 rupees sachet mutual fund SIPs on our platform in the previous event, Most Powerful Women itself on Business Today. Tell us your thoughts about it. Do you think that could be a great way to get all the other people who have so far stayed away or maybe on the edge and not invested yet through mutual funds for growing their wealth can now be onboarded? Because we are talking about 80 to 90% of Bharat there. Is that a great way?
No, that is agreeable, but easier said than done. Because getting so many number of people with sachet 250 rupees SIP, because today the operational cost is very high. For any transaction of at SIP, the minimum cost for the SIP is minimum 50 to 70 rupees. And on a SIP of 250 rupees, the actual expenditure itself, the earning will not be more than 8 to 9 rupees per year. So that in that background, I think the regulator, the government, everybody wants that in last 10 years, whatever has happened in India, now this is the movement of from Jan Dhan to Jan Nivesh. All those people have to do, and once they announce some dispensation on the KYC, on the operational cost, I think this is absolutely doable. But this 4 crores then will not be 10 crores, then it will be 20, 30 crores. If we talk about the Jan Dhan accounts, and in an average balance in those accounts is more than 4,000 rupees. So all those people who are getting direct benefit, all those people, they will get it. But yes, it will take some time. It's not as easy, it's not going to happen tomorrow. It will take some time because regulators will also do something, government will announce something, and of course, all those things will happen post the elections. And I'm sure this will happen, but we have to wait and watch.
That's a wonderful, phrase that you've said, Jan Dhan to Jan Nivesh, and perhaps that could be a campaign from the mutual funds industry and from stalwarts. You've been into this industry for a far too long time. You also said one thing, that, by now most of us, a majority of the people in this room also would agree that mutual funds sahi hai. But कौन सा वाला सही है is the
कौन
question.
से वाला
Because
सही है, कितना सही है और किसके लिए सही है?
1500 से ज्यादा स्कीम्स है सर. लोग कैसे समझेंगे कि कौन सी स्कीम में निवेश करना है?
No, that's another point. वो किसमें निवेश करना है उसके लिए एक्चुअली ये जो हाइब्रिड की जर्नी है वो बहुत ज़रूरी है. You can't just take everybody to straight to the equities. There are so many beautiful products like multi-asset allocation fund, like your balance advantage funds, and so on and so forth. So people have to start from there. Since anybody, I mean, some tadka of equity is a must. So that is definitely required for anybody. So this 4 crores to 40 crores, forget about the another 4 crores. But then 8 crores above, they have to start their journey through hybrids only, because hybrids the way, because we don't want, what we have seen, see, our fund house is 35 years old. We have seen 3-4 cycles. The generation which burns their fingers doesn't come back to the industry at least for a decade. Then we have to look for another generation. So we don't want this to happen, because market is cyclical, it will go up and down. We don't want anybody to burn their fingers in a big way. Let them come through hybrid mode. At least they will have good experiences. And they should graduate from hybrids to diversified equity funds, to thematics, to PMSs, and so on and so forth over the period of time. It should not happen. And that's an issue. When we look at the distributors, mutual fund distributors, one number is so low, very, very low number of distributors across the country. And second, most of them, especially in tier 2 and tier 3 cities, they feel that the equities is the only way. They are not selling the hybrid funds. So that is the way, that is where we have to educate, we have to reach out to them, tell them, educate them. The more than investor education, distributor education is also equally important.
So in your experience, have you also seen, heard about how 10 crore demat accounts, we have crossed that figure during COVID-19 period. A lot of them really entered into the fray. Have you seen that kind of growth even in mutual fund numbers? And is this a sustainable growth at large as well? And are you also looking at participation coming in from, say, tier 2 and tier 3 cities now?
Yeah. No, see, if we look at the growth, actually we sometimes, we must look at the numbers also critically, right? See, we always say that banking industry is growing by 10% and the mutual fund industry has grown by blah, blah, 18%, 16%, 17%. We are doing so well. But we have to understand the capitalization of deposit happens at 5 to 6% only, because that is the cost of deposit of banks. And our industry has given a growth in the equities of 14-15% of the last 3 years. So it's a natural. If you factor that and realize that we have not done a great job, we have so much else to do. I mean, numbers are not that great as we look at, and if we look at this year's number also, we are talking about 17,000, looks very good. But if you look at on an average 14,000 till now, 9 months, our net sales are much less than half of it. So what is happening? The people who are putting lump sum, they are booking profits. The people who are running their SIPs also, they are also taking the money out. So we have to go deeper into the numbers. We should not be very happy about the numbers. 50 trillion looks good optically, but actually depth is lesser. We need to be seriously working towards investor education of having a disciplined investment. That's very important.
So what could be the plan in action to tap those untapped people? Say many of the people even in this room may not have had an exposure to mutual funds until now. Are they really?
I don't think so. I don't think so. Everybody in the room will be having that. Let's
have a show of hands.
Yeah, show of hands.
Is
Who is
everybody
not
investing
having
in mutual funds? Oh, that's 90%. That's a good number. That's a fabulous number.
Old investors have really, everybody is there in mutual fund, but we have to, this is not in Bharat.
But for all of those who have still not started, what would you say? How will they come on? Are they really missing out on one of the best ways to create wealth, if not the best?
No, this is the best. Actually, this is the best. Why I'm saying so? Because on the other things, we are taking a lot of risk. Actually, one thing is, this is too liquid a product. Perhaps we have sold liquidity too much, more than required. Everybody feels as it's a bank account, tomorrow I'll take it. So actually there's a structural issue. Till the time the inflows are more than outflows, things are going great. But the day when our outflows are more than the small caps and mid caps, there is an issue which even regulator has raised. The issue, we have to be very conscious of the fact that liquidity always remains an issue. We should not sell everything T plus 0 kind of thing. So that's something which we need to be very conscious of.
Okay, so the stock markets are at record high levels, and everybody is just wondering about whether it's an overheated space right now. Are the valuations too stretched? When it comes to the mutual funds as well, would you still hope to see similar amount of the money that's coming in the previous 1 year time frame when we saw this journey of 10% of a surge on the markets, even going forward, even at record levels?
Yeah, it will. Because see, even just before coming here, I was sitting with one of my analysts. So I asked him the same question, that there's just concern about the valuation. He said the ideas are much more than the number of stocks. Even today, when businesses are booming, when there are so many businesses all across the country, we know even in India, every district will have so many good businesses who are turnover is in hundreds and thousands of crores, but still running in the partnership firms. They have not even seen the phase of the corporatization. There are so many ideas. I think things are very, very good for us. We are at the sweetest spot at the time. Things will definitely be better. Don't look at only the Sensex numbers, because this is for 50 stocks only. But and depth is there, in the businesses depth is there. May not be in the listed side, but we have to look at that side.
Right. So you were taking a few names. You were saying that at least a newbie should start off with a hybrid fund, move on to a balanced advantage fund. There are overnight funds, then there are target maturity funds. I take all of these names, and a lot of people will get confused with the kind of nomenclature that you have also in the industry. Is there a need for simplification? Because people will say, "ये तो सब मुझे समझ नहीं आता, मैं FD में ही पैसा डाल देता हूँ."
No, I'll give you an example. We are a company promoted by State Bank of India. They are having 23,000 branches all across the country. Very simple. The most risky product which we sell there is the equity hybrid fund, aggressive hybrid fund. From our side, okay, somebody is coming and asking for something is different. Starting with conservative hybrid, only 5 schemes. Starting with money market fund, going to conservative hybrid fund, going to balanced advantage fund, and hybrid equity hybrid, aggressive hybrid fund. That's it. 5 funds are being sold, so that and sometimes like funds like arbitrage funds, so that they can park their money there. We have given a pitch book for 5 funds for this small, simple investor, so that they get into the summer. And if you look at it, that's evident from a fact. The largest fund of the country is our SBI Equity Hybrid Fund, which is 63,000 crore fund. And out of that 63,000 crore, 42,000 crore has been distributed by SBI branches. Simple. Returns are less, everything is less, but people are not having the bad experience. They are having simple double-digit return, 9%, 11%. And the majority of the people are like those only. We should not be selling very high return fundas into the market. Some money coming into the equities is good enough for the first timer. That is something that is the thought process which is there. And it's not, I'm not saying SBI is one distributor. And we lack more number of distributors like this who can, if we want to make it from 4 crores to 10 crores, there should be at least 3 to 4 crore investors in the hybrids only. That's our thought process. That's what we want to take it to the
Fair enough. Sir, I'm reminded of one film, Akshay Kumar film, which talked about 25 din mein paisa double. That is the psychology a lot of people in India also have. We want to get rich, but the problem happens when we want to get rich quickly.
Yeah.
But in mutual funds, क्या पैसा डबल होता है 25 दिन में नहीं, कुछ तो साल में डबल हो जाता है.
पैसा तो डबल क्या ट्रिपल होता है, बहुत जल्दी भी होता है. 3 साल में 3 गुना वाले फंड्स भी हैं, फंड्स में हुए, आइडियाज हैं. But it's not, we can't say it कि 3 साल में 3 गुना होगा तो 6 साल में 6 गुना होगा. Right? It can happen like 6 साल में 6 गुना, जो 3 साल में 3 गुना हुआ है. Actually, if you look at the compounded return, we are not talking too big. It's 25-30% only. हो जाएगा. तो हम कहते हैं कि 10 साल में 10 गुना होता है. That's possible. But it's not everywhere. You should not look at it 3 साल में 3 गुना. We have a fund which has actually grown 3 times in 3 years. I'm not here to pitch any fund or something. Absolutely. But this is there. होता है, but you have to be, some portion you can put in there, 5%, 10% of your, which are high risk, high return funds. You can do that. If the going is good, it will happen.
तो अभी तक किसी ने नहीं किया तो सिर्फ शुरू कर दें.
बिल्कुल करना चाहिए. इस रूम में तो बैठे हैं, वो सारे हाई रिस्क वाले बंदे हैं, वो सारे कर सकते हैं.
All right, wonderful. Well, thank you so much, Mr. Singh, for being with us on this special chat, and thank you so much for sharing such wonderful insights. Many thanks, everybody.
Thank you, Mr. Singh. Thank you, Sakshi. Now, the next conversation will focus on a mix of broad themes, including the current global macroeconomic situation, the state of the Indian economy, inflation, a weak global growth, and a lot more. The next session is titled The Shape of India's Economic Recovery. And our panel for this particular session includes Dr. Aurodeep Nandi, India economist and Vice President, Nomura India; Indranil Sengupta, economist and head of India research at CLSA; Dr. Sachidanand Shukla, Group Chief Economist, Larsen and Toubro. This particular session will be moderated by my colleague Siddharth Zarabi, Managing Editor at Business Today TV. Can we have a huge round of applause for the next session?
A very warm welcome once again and to this wonderful panel here. This is a conversation on wealth creation, but during this session, we want to correlate wealth creation with the broader economy. And our panel of experienced economists has a pulse both of Bharat and of India. And the big question that is being debated, and the data also points towards that, is the shape of India's recovery. Because the shape of India's recovery, all of you who are here and our viewers, is very significant to this debate. Post the pandemic, the shape of India's recovery, some people argue, is a K-shaped recovery. Some others say it is a W-shaped recovery. So with this panel, what we are going to try and first understand is the shape of the recovery, and therefore in terms of wealth creation, investment ideas. I'll not ask the economists for ideas. For that we have a wonderful panel that is going to come up next, and we have speakers like Sunil Singhania here for that. I'll start with you first, Aurodeep. What is the shape of India's recovery, the post-pandemic recovery?
I mean, Siddharth, you make a very important point that you should not leave economists alone in the room with alphabets. But look, so here's the thing. I think the headline growth numbers look really nice. And they've in fact surprised a lot of us on the stage. And two things are really driving that. One is very strong urban consumption. The people there in this room are driving much of this growth that you're seeing. And the second aspect is that the government has gone hammer and tongs on public investment. So we've seen a huge surge of investments by the center across states. And the question that one has when one looks at, say, a 7.6, 7.7% growth is, well, if you take the government out of the picture, how does the growth scenario look? I guess the place where the unease kind of starts is that consumption growth is actually slowing. We've seen it go down from 6% to around 3%. We also have elections coming up. So the question is how much this public capex surge and how much the private capex that is linked to the public capex. If the government says builds a lot of roads, sure, there are some pockets of the private capex landscape that will react to this, but what happens when that slows down for a bit? And then the global growth situation next year is going to be quite worrying. I mean, the way I think about it is 2023 has been the PAP and 2024 is going to be the Prayashchit. Right? 2023, we saw interest rates being raised across the world by 500, 550 basis points. That's the action. The reaction is going to happen next year, possibly in the second half. And we really don't know how that will pan out, whether we'll have a soft landing, a hard landing, recession. And those are going to be headwinds for the Indian economy in the near term. Medium term, we have a positive outlook.
Well, when COVID happened, we were told 2 months. Then we were told 6 months, 1 year, 2 years. I'm wondering that every time we have conversations like this, a new, stretch goal comes out, but you're not to blame for that. I'm going to come to you, Indranil, and before I do that, I just want to share some data for all of you here in the audience. We've just put it together. What is the way to describe the current status of the Indian economy? Various people say it is a binary economy, where there is a divergence between the rich who are getting richer and the poor who perhaps are getting poorer. Let's look at these two divergent trends in terms of rural India. Rural India accounts for 40% of overall FMCG market. We have seen a noticeable drop due to inflation and monsoon. But pre-pandemic, Bharat was growing much faster. Mobile phones, 30,000 plus mobile phones flying off the shelves. Below that, the so-called affordable budget segment, not. Now, the argument could be that premiumization is happening in the Indian economy. But when you take this argument to the real estate sector, there you see affordable housing. I don't know how many of you have seen affordable housing advertisement in the last 2 years. The Delhi Development Authority has come out. The most recent auction is an auction. It's not an allotment, and it's a 5 crore home in the outskirts of Delhi. Not a big price point. I could keep going on. 500,000 homes this year, and most of them are premium. The same could be said about travel and hotels. It's impossible to get a decent room for a decent rate. So that was the context, really. Sorry for setting that long context. Do you agree with this, that at the macro aggregate level, it's perhaps a V, could be a W, but when it comes to sectors, different sectors are showing a different growth trajectory?
Yeah, I mean, that is always the case, where you have different sectors growing at different, paces. I think right now, rural is clearly seeing a slowdown. When you look at the Kharif crop, which just went by, we are looking at farm income contract by 3.5%. You are seeing Narega, demand at a peak, if you take out the COVID years. So a lot of the consumption demand is being borne by, coming from urban India. And it is true that, there has been a K-shaped recovery. This is just not in India, it's all over the world. We do these surveys which clearly show that, the recovery has been much faster at the higher levels of income than the lower levels.
And sorry to interrupt you, are saying this is a global feature and nothing unique to...
It's a global feature. It's happened across the world. I don't think there is any country which has not seen a K-shaped recovery, because that's been the very nature of the recovery that we have seen. So I would say that, there are three challenges that we face. Because the US has been raising rates, lending rates in India have shot up. And because the repo rate and the EBLR are linked, rates at the lower end and the weaker sections have gone up more. If you look at housing demand that you said, normal mortgage loan growth is very high, but when you look at affordable housing loan growth, that is almost close to zero. Now, linked to that is the fact that external demand is weak, and then the rural issues that we spoke about. Hopefully, the Fed is done, and, I think that the rate cycle can start to turn, pretty fast. We are calling for RBI rate cut in February. If the Fed tonight or on 31st January says that it is done, so maybe we start to see relief as we go forward.
Sachidanand, what are the implications of what the two speakers before you, and I'm sort of paraphrasing for them, soaring high end and a falling low end? What are the implications going forward? Because we are on the cusp of 2024, and he referred to how next year is likely going to be. What, in your view, are the implications?
So, Siddharth, I think if you look at people who don't know which port they're headed to, no wind is favorable, right? You look at the global economy and the way things are, multiple shocks to the system. That is the backdrop. That remains the backdrop. But even as I say that, global VIX is at less than 12, which is, I think, Jan 20 levels. And the point I'm trying to make is the backdrop is such that the Indian economy or the story is going to be a standout one simply for the reason that you need to look at the next 5-year growth projections, right? This backdrop that provides us. At the current juncture, global economy is going to grow at less than 3%. Now, that sounds like a decent number, but it is down from 4.9, which is way higher, and this is the lowest since 1990. In the same time frame, India has been one of the fastest growing economies for at least 7 odd years, and if IMF projections come true for the next 5-year period, India will be the fastest growing economy in 11 out of 15 years since 2014, for which the IMF has that data. So I think you need to look at how the economy is doing in midst of these global shocks. So once in a century shock, COVID, and the digitization story comes into play. You have people attacking the Capitol building in the US, for example. And here in India, we've had 9 state elections and all these transitions are so smooth, right? So this is a complete contrast. We have growth with stability, political stability, and certainty. Now, what this does, and you're talking about India and Bharat, mind you, the definition of Bharat has changed now, right? So please be careful how you use it. But the point I'm making is the denominator makes a hell lot of a difference. And if you were to look at, say, just 6% growth for the next 5 years, which the IMF is talking about, add 4 or 5% inflation, 11% nominal growth is a huge number. And if you use that rule of 72, this is an economy that's going to be doubling every 6.5 years. And that is massive. And that's just the denominator. And there will be sectors and companies which will grow much faster than this. So I think this is the global backdrop. And even the rates, for example, the Fed might do whatever, as Indrajit said. In India, the rates are still back to where we were just before the pandemic, right? So they're not restrictive. And therefore, we are probably in a Goldilocks period where whatever the rest of the world does, that 6 to 6.5% real and 11% is going to do wonders going forward.
So imagine, and as he put it, 6.5 and maybe even 7% is something that most countries across the world, the developed economies, would give an arm and a leg for. Now let's come to another much more pressing concern, and this is not just an Indian phenomenon, this is inflation. And we'll try and demystify it for a broader audience and not just talk about the dry numbers. First question, and I'll try and do it as quickly, I'll request you to do a rapid fire. Will prices ever come down in India? Cheezein sasti hongi? Is there any possibility of that happening?
The big difference is price or inflation.
Okay.
Because inflation is the growth of prices, right? For prices to actually come down, that's deflation.
Okay.
Will deflation happen in India? Very unlikely.
No.
If you're talking of 7% growth and 11% nominal GDP growth, we are a growing economy, and neither should we aspire for deflation. So as much as people like cheap things aren't great for the economy. Will inflation come down? Now, here's what really puzzles me, Siddharth, is that we are supposedly growing at 7%. Yet our core inflation, right? This is the demand-driven inflation. This is the inflation that comes when you go to buy a refrigerator or when you're buying clothes, etc. That core inflation is tracking at almost multi-year lows of 4%. And I think
is that a data issue?
I don't think so. And it can mean two things. One is that input costs have fallen quite a lot for Indian manufacturers. And second is maybe growth isn't as strong as we believe, because firms don't have that pricing power. But I think the bigger risk for India and for a number of emerging markets is actually twofold. One is food, And I think we are increasingly seeing the impact of climate change on food inflation. Inreen just mentioned, Kharif production this year has been really low, right? We've had the El Nino impact. So food inflation is a risk. And the other one is oil. And I know that oil prices are low now, but geopolitical risks are very much now part of base cases. And when that happens, food and oil, especially for an emerging economy like India, I think are the biggest risks.
Well, the fuel price impact is being managed. It is being borne by the center and the oil marketing companies, and very clearly till the election, and perhaps beyond that, that might be so. And in fact, it's a separate subject, but perhaps the daily price movements regime may have been soft abandoned for the time being. But I'm coming to you. And on that point, really, the first faint signs that corporate profit margins are coming under pressure seem to be emerging. It's not a broad-based trend, it is selective. Is that something you agree with, and does that add to the point that he is referring to in terms of corporates and their pricing power?
Yeah, I think to some extent, as inflation comes down, this is bound to happen. You can see it either way. You can see it as a loss of pricing power, you can see it as a overall phenomena of inflation coming down because the RBI has a tight monetary policy. I think inflation is last year's story. This year inflation will come off. Core inflation is, obviously 3.5%, which is why I think that, if the Fed is done, the RBI can start to cut rates.
Okay, so the cost of money is likely to go down perhaps
It
6
should.
months later?
It should start going down, the moment the Fed says it's done. And if you look at the Fed, core CPI inflation is somewhere around 3.5%. They're sitting at 5.5%. 2% real rate in an economy whose potential growth is 1.8% is very, very high. So it remains to be seen how long this sustains. And once the Fed is done, there is no reason whatsoever for the RBI to sit at 6.5%.
This feature of our economy today is not fully appreciated, the linkage with what the US Fed does, and barely a handful of Indians would know what that creature is all about. Yet, most ordinary Indians who consume anything at a certain level and above are impacted by such decisions which happen very far away, happen in the dead of Indian Standard Time. Do you buy the argument that he has?
So I would probably argue that the sensitivity that we've had typically over the last, say, 30 years with respect to, say, global prices of three essential things: crude oil, the dollar, and the US treasuries, right? This economy has changed and transformed in ways which has lowered the sensitivity of each one of these. So just to give you an example, we've had...
Paisa hai, kharcha karenge. Is that what you're saying?
Yes and no. So I'll just come to that. Slightly more nuanced. If you look at what's happened in the Middle East, right? A Six Sigma sort of an event. Crude oil prices went up for a bit and then came down. Last year we've had that Russia-Ukraine war. Crude oil prices went to 130. Nothing really changed to Indian growth story in terms of growth, the rupee dollar rate, or even the interest rates. Typically, if you had told me 20 years back, 10 years back, that this is what's going to happen and the US Fed is going to raise rates by 550 basis points in just about 12 months, crude oil going to 130, two wars and stuff like that, rupee would have tanked dramatically, right? Interest rates would have gone up dramatically. Our growth story would have suffered, but it hasn't really played out.
So who do you credit for this?
Multiple things. I think the first thing I would say is the denominator story, right? I mean, we don't really understand the power of compounding. We've heard that in the market parlance. But when it comes to the GDP, which is the aggregate of all our incomes, right, all of us, 10-11% nominal can do wonders over time. And we are seeing this. So our oil sensitivity, for example, has gone down over time. Similarly, the way the Fed reacts, it's the marginal provider of liquidity to the world, rest of the world. Now, 5.5% in 12 months, and the RBI has not had to follow them like they would have had to otherwise. And similarly for so many other things. So while, yes, we are linked to the rest of the world, but the sensitivity has changed dramatically. And just let me give you one statistic. We are conditioned to think that China is the larger economy and export story of the world. If I were to ask you, in 2022, for example, or the last couple of years, which has been the largest, say, exporter to the rest of the world? I think many of you would be surprised to know that India overtook China in terms of export to GDP. And I'm combining goods and services, right? 22.5%. And not many people notice this. So there are multiple things that have changed. And this is just one statistic that I want to highlight. So our sensitivity has changed fundamentally, and it will change further as well.
How much credit will you give to policy stability, policy certainty, the fiscal side, and how much to the monetary side as far as India's economy is concerned?
I mean, Sachidanand mentioned how the rupee doesn't react. And that's because we have, Mahendra Singh Dhoni type of wicketkeeper in the name of the RBI. It's hardly let the rupee, go. It's been intervening very aggressively. So, okay, so I think there is a big role of policymakers in all of this. First, on the government side, a few years back when the pandemic struck, most of the Western economies panicked and ran huge fiscal deficits, saying that, oh my God, this is the apocalypse. We are going to let our fiscal go loose. And the Indian government has actually been far, far more prudent. And a lot of people at that point said, hey, why have you not spent so much? People are suffering, etc., etc. But what's happening now is that those chickens are coming home to roost. And say in somewhere like the US, they are battling high inflation because essentially households just took that money, kept it in their pocket, and so now they're sitting on excess money, and inflation isn't going down, and now it's become a monetary policy problem. So to that extent, I mean, the fiscal discipline that this government has shown, I think is absolutely fantastic. And even things like, for instance, Prime Minister Modi recently announced the free food scheme, right? And it might sound populist, but if you open Excel sheets and do the math, spending 0.7% of GDP odd per year is roughly what we normally also spend on food subsidy. It might be marginally a bit higher. So this is an instance of how, while the face might be populist, the fine print is actually pretty prudent. On the RBI side, I think the governor appreciated, and I won't really blame RBI for this, because all central banks had this problem. They didn't realize how permanent inflation is going to be. So they were all very risk averse, and then they started hiking, right? And then again, RBI it stopped at a point, and it said, look, 6.5% I think is fine, because I don't want to kill growth in the process of killing inflation.
Right. Indranil, if Modi-nomics has worked as far as the fiscal side is concerned, would it be fair to say that the RBI governor has written a new chapter of Das Capital?
Well, I think that, I would credit three men in the RBI. I myself worked in the RBI at the beginning of my career. So I think it was Bimal Jalan who began the policy of building FX reserves. In 1998, I was a part of the team that raised Resurgent India bonds. So that is number one. Then came Dr. Reddy, who advanced that policy, and we began to build very, very high FX reserves, which stood us in good stead during the GFC. And I think after that, Mr. Das has again, been building almost, I think, $150 billion. So I think these three wise men have a tremendous contribution, in what now I call the Bharat story.
Okay.
So I would really say that, see, when you have FX reserves, you are protected from global shocks. So, we used to say that like you have an army for external aggression, you need high FX reserves for external stability. In 2013, you saw what happens when you don't have enough FX reserves. And when you don't have FX reserves, you try to sell, you look even weaker. When you have FX reserves, no one comes to mess with you, and you can do things at your own pace.
That's a very interesting take, and comparing a standing army with a massive sort of war chest in terms of forex reserves is a good point that you make. I'm coming to you, Jazanan, and on the point that is enough credit being given to RBI Governor Shaktikanta Das, not only for what the others on the panel have said, but also bringing a sense of calm to how the RBI is managed in public perception, and also the relationship between Mint Street and North Block?
So I would think personally that Mr. Das has done wonders in terms of what was expected from him. I mean, everything works in relation to the expectation, and when he came in, you know how things were, and the discord between the finance ministry and RBI was probably at a peak, and therefore the set of expectations were very, very different. Looking at that, and also what really transpired later on, I mean the COVID shock and multiple global events, I think he's done a phenomenal job. But I think we must also give credit to the governments and the fiscal arms. Things like Monetary Policy Committee, the IBC, some of those reforms really have institutionalized the practices of the developed world, which are now leading to a point where inflation has been under control remarkably. So I gave you those instances.
Right.
But look at our headline inflation, or even core for that matter. Typically, the bugbear of any emerging market, or India typically last 20, 30 years, has been any global shock and your rupee goes for a toss and interest rates really shoot up. And that raises the hurdle rate for investments, right? So you are a very, very volatile economy. What the governments have done via these reforms, and these are not the only reforms, multiple other reforms, they have brought in a sense of calm, that the phrase that you used, in terms of our interest rates, currency movements, and things like that. And that makes us a far more stable economy in a VUCA world. And that makes us a standout story.
Absolutely. I won't say oil on troubled waters, but perhaps jasmine oil on troubled waters. Okay, we are running out of time, so I'll take 30 seconds with each of you. This is the big worry. We are now heading into the general election. And in the run-up through state elections, we saw fears and the debate around the Revdi culture. How big a risk is that to our overall macroeconomic and fiscal stability in the year ahead, including, for example, the demand for OPS, the old pension scheme? Very quickly.
Left unchecked, it's a huge problem. But the fact that the BJP has managed to win the state elections, see, the major differentiator between the opposition and the BJP seems to be that, I'm going to give a little more Revdi. And if you look at the manifestos of the BJP in Madhya Pradesh, Rajasthan, etc., it's almost, if you put that manifesto and the Congress manifesto, they're almost similar, right? So there is that push. But the point is that given that they have won these elections, and hopefully that should give them a sense of self-confidence that, you don't really need to appease as much. I think this government has a good track record of fiscal prudence to not do an overkill there.
Okay. The same question to you.
So I think that, I will take you back to 2019 when the opposition had announced universal basic income scheme. And the Prime Minister did not, follow, right? I mean, he took a political risk. So I think there is, an inherent commitment to some kind of fiscal discipline that, the Prime Minister has demonstrated despite having an election fight just in front of him. It's but natural that before elections, there will be a step up in welfare measures, especially at a time when, you have a rural stress, but that's fine. I think that as long as our fiscal deficit is somewhere around 7% or so combined, and growth is 11%, there is no problem of debt sustainability. The fiscal deficit is now somewhat higher, but these are, stressful times.
The same question to you.
So I think when it comes to the defined versus undefined pension contributions, it's empirically proven, and we have enough records globally, that it's a recipe for disaster, typically, right? But I think we need a far more nuanced debate on the rest of the things. What the sovereign at the national level does and what the sub-sovereigns or sub-national level. In a democracy, this needs to be debated, especially when we are going from 3-4 trillion to 10 trillion size. I think this needs a far wider, nuanced debate, wider debate. And I think the monetary policy and the fiscal side and the states, we need a much deeper debate on this. And there is this concept in economics called merit versus non-merit goods. So you can't say that, hey, I can do this, I'm entitled to do this as a sovereign at the national level, but you at the state level cannot do so. So I think we need, at this size of GDP, we need to do this. And mind you, we are 29 nations put together,
Absolutely.
30 people quarreling over this. We need a much nuanced debate on this.
And perhaps another session, another debate on that, especially the point that you are ending this debate today, which is the different economic strengths of each state. If every state were to come under pressure from those states who can afford more giveaways, for example, on pension, it would mean that states who are not so strong economically would suffer more. And the point that the central government, the union government and its finance and its ability to raise resources, that's a completely different framework. But we'll leave that for some other day, for perhaps the next BT500 debate. Thank you very much to my entire panel for their time with us today.
Our next session is titled The Road Ahead for Indian Markets. In this session, we'll discuss the future of Indian markets, explore emerging trends, challenges, and opportunities that will shape the trajectory for business and investors alike. Our panelists for this session are Navneet Munot, MD and CEO, HDFC Asset Management, Chairman, AMFI, Sunil Singhania, Founder, Abacus Asset Manager, Swaroop Anand Mohanty, VC and CEO, Mirae Asset Investment Managers, India. And the moderator for this particular session is already on stage with me, Shail Bhatnagar. Shail, we look forward to this. A huge round of applause, please.
Good evening, ladies and gentlemen. I'll again request you to take out your pens and notebooks, and if you are very familiar with smartphones, then please the notepad. And the reason is very simple. I'll start with the youngest and the nimblest. Mr. Singhania, at 23,000 crore rupees, manages two of the best mid-cap and growth funds. He was just telling me, एक fund 4 साल में 4 गुना हो गया, एक fund 3 साल में 5 गुना हो गया. To his left is a gentleman who runs Mirae. He's had a very hearty meal. He's just digested Sher Khan. And at 1.4 lakh crores in terms of funds, most of them in equity, his voice matters. To my most immediate left is probably the biggest AUM that we've seen so far, 5.4 lakh crores, and a very well-known name in the world of funds that have given phenomenal returns over the last 30 years. Navneet. Chali. Let's begin the discussion, and the discussion around this table was kiski SIP book sabse badi hai. So let's start with the biggest man on the panel. So what is your SIP book these days?
So I'll talk about the industry ka SIP book, which is 17,000 crores. And to put that number in perspective, 3 years back, it was half of what it is today. It took us like almost 25 years for the industry to reach $1 billion a month. And in next 3 years, we have doubled it. Actually, if we go back in 2017, that was 4,000 crores. So wow. 4,000 crores in 2017, 8,000 crores in 2020, and we are at 17,000 crores in 2023. And in our entire career, Sunil and Sarup, in our entire career, we were always told, rather we learned it the hard way, that if global economy sneezes, India gets a fever, or if US markets sneeze, then Indian markets will get a fever. This time, there are large parts of the world which have got fever. Touch wood, we are yet to sneeze as an economy, as markets. And I think that's the power of the domestic investors. I think it's the collective work of the entire industry. There are 3 or 4 major factors I would say are responsible for taking this number to where it has reached. But of course, we have a long way to go. I think one is the track record. You talked about like funds delivering the returns that they have delivered. I have the honor of being part or privilege of being part of a fund house where we have track record going back 29 years. Our Balance Advantage fund will complete 30 years in another 2 months' time, or a FlexiCap fund which is around for 28 years. And funds have delivered like 18, 19, 20% CAGR for 25, 30 years. Somebody who did an SIP of 10,000 rupees per month in HDFC FlexiCap fund, the amount today is almost 15 crore rupees. Now, of course, that was a different environment in terms of inflation, in terms of interest rates. I'm not saying that next 28 years a similar story is going to repeat, but it just shows the power of compounding. It just shows the potential that India has got, and we believe that now more and more people are looking at that track record. The second is the transparency. The Indian mutual funds are one of the most transparent financial products or investment products, not only in India, but even relative to any other part of the world. The third is the technology, which has made it easier and easier for investors to understand this product, invest, transact, so on and so forth. And last but not the least is the training or the investor education. The campaign by MFI of mutual fund Sahi Hai, and the individual effort by all of us to spread that word in every nook and corner of the country. I think some of these things have played a big role. But all said and done, while we can pat our back for reaching 17,000 crores SIP, we can pat our back for reaching an AUM of close to 50 lakh crore rupees. The fact is there are only little over 4 crore unique investors at a PAN level who have invested in mutual funds, so we have our work cut out for next several years.
Okay, so the growth path is not only long, but it's also aspiring to look upwards. My question to you, Sunilji, is fairly simple. We are looking at maybe the next 5 years in which this kind of an environment will only get better. How do you navigate the markets from now on? What are you personally thinking and looking into over the next 60 months when it comes to equities?
Thank you. So, when the going is good, we all believe it is going to continue, and I'm very sure it will continue. But at the same time, I think we have to be also cognizant of what we are in and where we are heading. So first, a disclaimer, I have always been positive all my 25, 30 years of managing money, so please take my view with a pinch of salt. But having said that, I think, things have worked out pretty well for the Indian economy. In a period like 2022 and 2023, when the world was debating whether there will be a recession or 0% growth, in India we were debating whether we'll have a 6% growth or a 7% growth, and we ended up growing at 7.6%. Corporate profits June, September have been year on year up by like 30-35%. Even for the next 2-3 years, earnings growth is looking like 16-17%. I think political concerns are receding to some extent. And in India, inflation and interest rate actually is not a worry. So in India, interest rates have moved up from 6.25% to 7.25%, which is 15% increase. Vis-a-vis US, where they moved up from 1% to 5%, which is like a 400% increase. So I think in India, things are pretty sorted. There were headwinds on the global side. One was obviously outlook on oil prices. Second was macroeconomy, particularly US. And third was the geopolitical issues. I think oil has already come down from $95 odd when the West Asia conflict between Israel and Hamas started to less than like $70 to $73. We have been very clear since the last 1 year that medium to long-term outlook on oil is very, very weak. On one hand, you have increased production in US. So US is expected to produce like 15 million barrels a day, which used to be like 7-8 million barrels only 3, 4, 5 years back. Secondly, you have renewables like solar and all, which have become very, very attractive, even without subsidies. Third, you have the EVs, and then you have billions and billions of dollars being spent on innovation, particularly on the hydrogen and non-fossil fuel-based energy sources. And I think this can be the biggest positive for India for a long, long time. In fact, India is slated to be the largest exporter of hydrogen in the world when this starts. On the macroeconomic front, US had issues. In October, if you remember, markets corrected. And all of us were shouting that abhi to gaya hai, mid cap, small cap is over, this, that. 5% correction and it looked like as if there was a Lehman too. That is how we have all started to behave. But since then, inflation is clearly trending down. And it will trend down because metal prices are down, agri prices are down, energy prices are down, and real estate prices are also down. In fact, there are reports which say that if you remove the real estate, US inflation is already down below 2%. And I think that has led to the view that now there will be an interest rate cut in the US rather than an increase. And hopefully with a lag, I think first 6 months is going to be bad in terms of reported GDP numbers in US, but then it should stabilize. The last issue has been the geopolitical concerns in the world. You had Russia, Ukraine, potential China, Taiwan, and now the Israel-Hamas issue. It's sad that so many innocent lives are being lost, but hopefully, it will contain. The only good thing is that they have been localized issues, but we have to be aware of that. So I think we have a great India macro, micro. You have an improving global scenario. Fund flows in India are phenomenal. So even without foreigners coming in, with foreigners selling, we have this kind of a market.
Exactly.
Now imagine from a foreign investor's perspective, wo kahan paisa dalega boss? China mein dalega nahi because China has become the villain of the world. In fact, they are removing money from China. Russia mein to they lost 100%. Europe is almost certainly going into recession. Where is the growth left? And it is not that in India we are very expensive. I think on an FY26 basis, which is what people have started to discount, we are roughly around 17 times. So we are not cheap,
Nifty PE, right?
We are not expensive. So I think if your return expectation is 12-15%, there is absolutely no problem. But if you are expecting 50% every year, you will be very, very disappointed.
Okay. So continuing with you, Sunilji, the person on your right and the person on your left is hamstrung by rules which govern where money can go in terms of large caps, mid caps and small caps. You are the only one who has a lot of freedom. So the fresh inflows that are coming into Abacus, as a holistic picture, where is the maximum deployment coming in?
I think you are not right. I think both of them have 20, 30, 40, I don't know how many schemes which cater to micro cap, to the super cap and to hybrids and XYZ and multiple things. We keep it simple. But having said that, I think there is opportunity everywhere. And we get into a lot of discussion, ke large cap le, mid cap le, small cap le. I think there is opportunity everywhere. We have great mega caps, we have great large caps, some of the best known brands in the world, some of the best known companies, managed companies in the world, which even at that size are growing at like 15%. I don't think in the world you'll find too many places where large and mega caps can grow at 12-15%. And then obviously, India is a country of entrepreneurs. We have multiple thousands and thousands of entrepreneurs and budding entrepreneurs. We have almost 1,500 companies which are worth investing. And every day you have so many issues coming in. A lot of them are great companies. I think the only thing, at least at Abacus, we look at is fundamentals.
Okay.
And I think in this kind of a market, it is very easy to get carried away. There is complete FOMO. There is euphoria in multiple things, anything to do with railway, anything to do with defense, EMS, IPOs, penny stocks, turnaround stories. I think there is a lot of FOMO. So I think the only thing we bother about is whether what we are buying has fundamental basis or not. And irrespective of whether it is large cap, mid cap or small cap, there is return to be made. I always say this, that, markets are like cardiogram, they will always go up and down. As long as they're up and down, we are alive. So large caps, the ups and downs are smaller. The slope up is slightly more stable. Mid caps, the ups and downs are larger. The slope is steeper. And the small cap, the ups and downs are larger. And the slope is also more steeper. So if you have the heart to digest more ups and downs, you have to be in small cap. If you don't have the heart, then you will make returns even in the large caps.
Okay. Let's get Mr. Mohanty into this discussion. Sir, as we all know, the flavor of the market is mid caps and small caps, and many theories are there in the market कि 40% index बढ़ गया कोई बात नहीं, लेकिन अभी भी दम है इसमें. So what is your view? If you look at 3-4 years down the line, do the valuations and the prices that you see in frontline mid caps and small caps, maybe the first 50, are they justified? Are we headed for better days in mid caps and small caps? Because that's where the money is coming in.
Shailendra ji, actually problem mera kya hota hai na, when you put me on a dais with Mr. Munath and Mr. Singhania, these are two pedigreed fund managers. I have been a sales guy. I've sold funds, I have not managed funds. So ऐसे ही कभी जब मैं बैठ जाता हूँ तो बहुत स्ट्रेस में आके थोड़ा पढ़ाई कर लेता हूँ. I was on a similar podium few days ago with a very large fund manager of the country. So I did some studies. So I took out one of my older presentations which I was making in 2003. हम बात कर लेते हैं, okay. So 2003 my presentation heading was India Structural Growth Story. 2023 I'm making a presentation India Structural Growth Story. 2033 I will make the same presentation India Structural Growth Story. Because we stay in India, वो हम महसूस नहीं करते how lucky we are. That we are in an economy which is on a 30-40-year-old secular structural growth. Then echo on what Mr. Singhania said. It is not about mid cap, small cap, large cap. Opportunities are everywhere. The objective is to buy a good business at a good price. Yes, when you ask the question of the AUM, last year was a maiden over for us because we don't have a small cap. With markets flow almost 40%. And here's something which I'd like to really discuss, because when you look at the RBI data of 2021, okay, RBI data says 55% of India's financial assets is in banks. Post-demon, 13% of the money is in cash in hand. Post-demon, huh? So 68% of the person's money is in that category. And we have 40% of flows in small caps. Exactly. Is something which people have to reflect on their risk profile. If they're aware of the risk profile, fantastic. Because when we start investing, it is more about return chasing, which we are seeing. But as we graduate as investors, it is about risk mitigation. Last year or the last 2 years data says that people are selling core funds, which is large cap, flexi cap, to buy mid and small. Yes. Here, getting a fund manager is very essential, which they are doing. I mean, which is fantastic to see. But one has to reflect on the risk profile of the. If they are aware of the risk, not an issue. Because like Mr. Singhania said, the ups and downs can be high. It comes with both sides. And equity market is contra every day. Suppose you think the stock price is right and you are buying, somebody is feeling the stock price is wrong and is selling. That is how the deal goes through. Right? So that's how it is. So from a flow perspective, when you look at the next 10-15 years, I've said this in 2016 in print, redeem India at your own risk.
क्या बात है?
And I say this today, I will say this in 2033 also.
क्या बात?
2002-3 की याद दिला दी ना, तो आपने जैसे अभी इंडस्ट्री को कांग्रेचुलेट किया कि 50 लाख करोड़ का AUM हो गया. 2002 में पता है AUM कितना था इंडस्ट्री का? 1 लाख करोड़ रुपए का. क्या? It's 50x from there. एंड इंडेक्स था अप्रैल मार्च 2003 में करीब सेंसेक्स बता रहा हूँ, निफ्टी नहीं, सेंसेक्स वाज अराउंड 3000 and we have come where? And he's absolutely right. 2032, we would be discussing exactly the same. एक काफ़ी वर्षों पहले में एक बहुत बड़े लीडरशिप कोच जिन्होंने शायद विश्व के बड़े से बड़े स्पोर्ट्स सेलिब्रिटी, पॉलिटिकल लीडर्स, बिजनेस लीडर्स को कोच किया होगा. उनका एक बहुत अच्छा सेंटेंस था कि मैं लोगों से पूछता हूं कि आपकी सक्सेस का राज क्या है, तो कहीं ना कहीं वो इस तरह से बोलते हैं. अल्टीमेटली एक लाइन मेरे को दिखती है कि आई वाज एट द राइट टाइम एट राइट प्लेस. करेक्ट. तो आई थिंक इंडिया में वी आर एट द राइट टाइम एट द राइट प्लेस. एंड बफेट का अभी जैसे बहुत ही सैड डे था, चार्ली मंगर की डेथ हो गई. ही इज लाइक एन इंटेलेक्चुअल guru for several of us from an investing perspective. I think his words of wisdom have been kind of revered by everyone. Unka famous quote hai that, money is not made by buying and selling. It's made by waiting. That's a lot more important than buying and selling.
What Shailendra ji, just to take on from Navneet sir, is that it depends on bazaar kahin jayega, that doesn't matter. It depends on how you view the market. Are you looking at the market at 70,000 Sensex? Then your view is something. Are you looking at India at 7 trillion? Because 7 trillion जा रहा है.
ये बात तो पक्की है. This is something that I'd like to mention, that for at least a decade, India will be the only $10 trillion economy. हमारे पीछे कोई नहीं है, हमें आगे और काफी बढ़ना है. लेकिन once this economy doubles to 10 trillion, only we will be there. This is something that people perhaps don't look at when they invest into markets. But one of the major north stars is this, that over the next 5, 7, 10 years, the lone player who will be in the $10 trillion space between 10 and 20 trillion, it will only be the Indian economy. Let's get Sunil.
एक बात और ऐड करूं कि जैसे मैंने कहा 3,000 सेंसेक्स से 70,000 हो गया, बट एक चीज ध्यान रखनी चाहिए, वो लीनियर ग्रोथ नहीं थी हर साल. वो एफडी की जैसे क्रेडिट नहीं हो रहा था स्टेटमेंट में. इस दरमियान वी सॉ सो मेनी करेक्शंस ऑफ 10%, 20%. 2008 में तो 50% ऑलमोस्ट एनएवी गिरी होगी कुछ महीनों के अंदर एक बार. अभी देखा हमने मार्च 20 में, फरवरी 2020 में 12,000 का निफ्टी था और उसके बाद हमने 7,700 देखा अगले कुछ ही हफ्तों में. तो जब हम 2032 की बात करें, स्वरूप करें कि हम यही डिस्कशन करेंगे, इंडिया स्टोरी, इंडिया ग्रोथ एंड ऑल ऑफ दैट. बट ऐसा नहीं है कि यहाँ से लेकर के वहाँ तक हर साल ऐसा 15-18% या 12% कुछ ऐड होता चला जाएगा. That's the nature of the beast, right? It will be volatile for sure, and investors need to keep that in mind.
Right. And I think the Indian investor has also matured over the last 10 odd years, that they look forward to a dip to probably put in an extra SIP or maybe buy frontline blue chips via the ETF. Let's get Sunilji into the conversation. Sir, when you wake up in the morning, reach office, and after the basic study is over and markets are about to open or you're addressing your research team, what are the basic 4 or 5 things you look at on a daily basis which probably not only decide what is to be done in terms of stock picking, but also set the frame for the next 1 or 2 months?
सर, डेली बेसिस पे मुझे लगता है सिर्फ लोग चैनल ही देखते हैं कि व्हाट टू बाय एंड व्हाट इज द स्टॉप लॉस एंड व्हाट इज द टारगेट. आई थिंक फ्रॉम आवर पर्सपेक्टिव आवर थॉट इज वेरी क्लियर. Do all your research before you buy, not after you buy. And invest as if you're becoming partner in the business. And if you're becoming a partner in the business, you can't become a partner for 2 days or 5 days. Partner is perpetual till you're convinced about the company. So I think in the morning, obviously, we also have our morning meetings and we also discuss. But unless something is really, really executable instantly, I don't think there is anything which happens. Frankly, the mornings are very, very quiet, which might be surprising. However, see, the world is dynamic. On a daily basis, things are happening, and it is something which is changing in the sense that the world is actually flat. Earlier, what used to happen in the world maybe used to impact India after 10 years, then 5 years, then 5 months, then 5 days. It's now instant. So, if there is something which is very, very dramatic, like, you had the state elections, for example, it happened on a weekend and the market opened with a gap. You don't react on that unless, you find that there is over exuberance which is not justified, or on the other hand, there is something which is an opportunity also. So I think mornings are normally very, very quiet. Our analysts are very focused. And they also understand that we are here to create wealth from a longer term perspective. We are not traders. We don't intend to create income on a day-to-day basis.
So how difficult is it these days to find a good investment option?
So, I go back, I also started my mutual fund journey in 2003. I was in the equity markets before that, but, Navneet mentioned the day I joined, the first day, 10th April 2003, Infosys fell by 40%. There was this company called Mastech which fell by 50%, and the Sensex hit 2600.
Okay.
So my boss said, "Arey kya parnauti hai boss?" So I said, "Boss, इसके नीचे तो अभी जा ही नहीं सकते हैं." So we are starting with a very, very good base. But that time, actually things were easier. I am a balance sheet person. I still read 1,000, 1,200 balance sheets a year. That time, no one used to read balance sheets. And that was a big opportunity because there were so many companies which were like so cheap. And the other thing was mutual fund, no one even used to look at smaller companies. Broker to dur ki baat hai. Mutual funds also used to not look at even smaller companies. And I think we were on the highway of Germany driving at 250 kilometers with no cars inside. And that's why from being the smallest, we were like 100 crores in AUM in 2003, became the largest. We were larger, 50-60% larger than HDFC Mutual Fund at that point of time, which was the second largest. Now, people have become educated, which is good. People are becoming aware. And there are many more analysts, So there are genuinely a lot of analysts, and then there are lakhs of analysts on Twitter nowadays. So, ironically, जिसके 100 फॉलोअर भी होते हैं, वो कोई स्टॉक का नाम डाल देता है ट्विटर पे, वो स्टॉक भी 20% बढ़ जाता है आज.
बिल्कुल. Welcome to the bull market.
So it is challenging, but it is also an opportunity because in over exuberance, you get an opportunity to sell. And there will always be something which will happen, like March, May, when the Silicon Valley Bank happened and the Credit Suisse Bank happened, everything was down 30-40%. In October, the index was down 5%. There were so many stocks which were down 20-30%. So I think that is where experience and patience will come into play.
Absolutely.
I think in markets, you need only two things: liquidity at the right time and patience always.
Kya baat hai. And let me just assure everybody in the audience, while there might be hundreds and thousands of analysts in India, but there will be only one Sunil Singhania who reads at least 1,000 balance sheets a year. And that is something to be appreciated. Let's get Navneet ji into the conversation. The audience here, of course, is in their young 30s on average, and people who view us are also in that age group. Maybe 4 or 5 things you can suggest from now on till the next 5 years they can do to create wealth easily without staring at the TV screen or the monitor screen, and benefiting from your 30 years in the markets.
So सबसे पहली बात तो अगर आप 30s में हो, अगर आप बोल रहे हो, तो why to think about 5 years, like 35 पे क्या करोगे? मतलब पूरा पैसा रिटायर थोड़ी होना है, like you'll be working a lot.
ये इस तरीके का बाजार है, ये आपको 5 साल में रिटायर भी करवा सकता है.
But life बहुत long है, and I think when we meet people and say, no, I'm a very long-term investor, so at least minimum like a 1 and 3, 5 year. But 1, 3, 5, I mean, you're going to live for 100. When India got independence, the average life expectancy of an Indian was like 35 years or so. Now it's more than 70. Maybe in our lifetime it will touch 80, 90, 100. You are going to live on your wealth or on your accumulated savings for 30, 40, 50 years. I think the biggest thing we need to do in next 10 years as an industry with the help of people like you is that how do people think like that a long-term meaning I have to save for 20, 30 years and then I have to live on those savings for 40, 50, 60 years.
So what should one do?
And the longevity of life, I think the lifestyle inflation, we are going to have larger income and larger needs. That's very important. Wealth creation का एक ही formula है. Wealth creation का एक ही formula है. And ये मैं नहीं बोल रहा हूँ, मतलब जो स्टडी है सेबी की कि F&O में 90%, 89% to be precise, people lose money. I think I don't know how many, what they would have done in crypto and all the other things. Wealth creation का एक ही formula, and that is just to make it so that people remember that is STP. It's not the systematic transfer plan that we promote in our industry. S is sound investment plus time plus patience. साउंड इन्वेस्टमेंट प्लस टाइम प्लस पेशेंस, इसमें से अगर एक भी चीज निकाल देंगे ना, सही निवेश, समय और संयम, अगर एक भी चीज निकाल देंगे तो वेल्थ क्रिएशन नहीं होएगा, सिर्फ एक ही याद रखना।
चलिए, ये बहुत बढ़िया बात आपने कही. Let's get Mr. Mohanty's view in. So how, over the last 5-7 years, one thing that has happened very nicely is that mutual funds have been accepted as vehicles of creating long-term wealth. अब आपको किसी को SIP इतना दम लगा के नहीं बेचना पड़ता है जैसे 2017, 2012, 2013 में बेचना पड़ता था. What else has changed in this market which gives you hope for the next 10 years?
See, I think 2-3 things. One, I think the process started with demonetization, when the first awareness that, there should be a shift from fixed assets to financial assets. That got completely changed during COVID. India for COVID now is like a momentous time. For India, check any data point. It is before COVID, after COVID. ये WhatsApp generation में हमारा याददाश्त थोड़ा छोटा हो गया, but before COVID, both the fund managers are there. India had practically slowed down. Banks were, look at the data points that were there before COVID. It was as if, we were talking about Fragile 5 and everything, right?
Yes.
But post-COVID, things have completely changed. But as an individual, when I was put in my house for 2 years, scared for death, lot changed mentally. We have come out very differently, and it's given us a time to restructure our financial statements. And post-COVID, Navneet talked about a data of 4 crore folios. Before COVID, it was 2.3. 1.7 crore folios have come post-COVID. That is the change. Yeah. So first, the shift to financial assets has started. At 4 crores, we are nothing.
Absolutely.
Right? Demat accounts are double us. It should be the other way around. Acceptability has come when the product has got commoditized, and thanks to mutual funds through SIPs, our product is now beginning to get commoditized.
Right.
The problem, there are two sides to the story. Please. And think about it when I say this. SIP is a cash flow solution. Mera salary hai, kuch mahina main lagata hu. It is not a process of break down your lump sum to SIP. When I am breaking down my SIP to form SIPs, I am timing the market. And every person in this room will agree that timing the market is futile. In this whole process, we are forgetting the fact that you are in an economy which is going from 4 to 7 trillion. The later you delay your investment, the later your compounding starts. Don't break your compound lump sum to SIPs is my submission.
Right.
जितना लेट आप करोगे उतना आपका नुकसान होगा ये बाजार में. जितना जल्दी आप फंड मैनेजर को दोगे उतना जल्दी वो एक्ट कर सकते हैं. That's the flip side of the story. But investing has started. Financial advising has started. I wish a little more asset allocation happens, because like Navneet said and Sunilji said, asset allocation only happens on Twitter. In real life, 40% is being bought in small caps. So real life return chasing is happening. थोड़ा कम कर दें, अपने गोल पे ध्यान दें, तो बहुत बेहतरीन एक्सपीरियंस होगा इंडियन इकोनॉमी में.
Right. Sunilji, since you read 1,000 to 1,200 balance sheets a year, draw for us a picture of the balance sheet of India. The audience perhaps wants to know 5 साल में क्या-क्या मैक्रो तब्दीली होगी हमारी बैलेंस शीट में, which might impact the markets positively or negatively. Your view.
Sir, see, I think we have all talked about it. Swarupji mentioned, Navneet also mentioned, from 3.5, we are going to be 7. There's absolutely no doubt of it. But just look at the big picture. 1947, we got our independence. Took us 60 years to reach $1 trillion. Next trillion happened in 8 or 9 years. The third trillion happened in 7 years. After 76, 77 years, we are 3.5 trillion. So that is the wealth which we have created. So in 77 years, we have created $3.5 trillion of wealth. The same wealth is going to be created in the next 7-8 years. तो जिसको लग रहा है ना हम रह गए, हम छूट गए, वो जितना पैसा last 77 years में बना है, उतना अगले 7 years में बनने वाला है. And I think that is the story of India. I think बाकी आप कितना भी है ना उसको 50 पेज के प्रेजेंटेशन में 25 के प्रेजेंटेशन में दे दो, ultimate story is this. And I think we might get delayed by 1 year, we might prepone it by 1 year depending on the external environment. But बोले ना दिल्ली की तरफ ट्रेन तो निकल गई है.
क्या बात है, दिल्ली से मैं बंबई आया हूँ आपसे मिलने. Navneet ji, the last word goes to you. For us in the audience, please paint a picture 5 years from now where markets will be and where do you see the economy?
Discuss kara. Why are we discussing 5 years? We are in the Samrit Kal. We need to have this faith, unwavering faith. India is creating an economic miracle which is unparalleled in human history. I repeat, India is creating an economic miracle which is unparalleled in human history. Why do I say that? It's not about we going from 3.5 to 5 to 7 to 10 to 20 trillion dollars. It's not about $2,300 per capita becoming 5, 7, 10, 20. The difference between India and most of the other countries which have gone from an emerging economy to a developed economy, they were not as democratic, as inclusive, as sustainable as we are creating. Ours is very different. In last 30 years, our nominal GDP grew at like 10, 11%. Corporate profits grew at 11, 12. Market cap grew by 12, 13. It hasn't happened in many places. China grew much more than us in last 30 years. Their stock market delivered 1% per annum. 1% per annum versus what? Double-digit returns. An economy which can continuously grow at a higher rate, a corporate sector which can convert that growth into profits, and a stock market or a capital market which is so robust and deep, which convert that profit into the profits for the minority shareholder, and a mutual fund industry where even with 500 rupees you can participate in that growth. It hasn't happened in many places apart from, let's say, the sustainable part of the journey or inclusive part of the journey, equitable part of the journey, or the democratic part of the journey. We need to have this unwavering faith for next 25 years. And it's a young economy. We have to save for future. Given the starting level of public debt, India won't have the luxury. I mean, we have done a lot on social security, right from your Ujjwala to, let's say, a free toilet to free LED to whatever, variety of things, Sukanya Samriddhi and Ayushman Bharat and all. But I don't think in next 20 years also we'll have a luxury like some of the European countries when they started, they will take care of your retirement. We'll have to save for ourselves, right? 90% people are not in formal employment where money is not going into EPFO. So then it's pertinent that people have that faith and start investing, start early, invest regularly.
Right. With that, ladies and gentlemen, we draw to a close to this wonderful conversation. If you haven't been convinced as yet, then probably these three gentlemen would have by now. Thank you so much for your time.
Well, I thought I'd introduce the next session as all of you all settle in. But before you proceed out, do remember this is the MVP, the showstopper, the final, ultimate session of the evening. It's all culminating into this massive fireside chat. But in the Business Today multiverse, we like to do things differently. On air, on stands, and of course on web. And in these events as well. So I thought, let's not stick to my script. Now, sometimes I have a script, sometimes I don't. So we thought we'll just wing this one. And I was told that the title for this one is Funding the $5 Trillion Dream. That's all I know. But I do know that in this session, there'll be a little bit of cricket. There'll be something about marathons and Amitabh Bachchan. Can you imagine all of this in one session? Saurav Majumdar, editor Business Today, could you join me on stage and tell me what is the funda really with all of this? There's going to be marathon, cricket, and Amitabh Bachchan in one session.
All rolled into one guy who, when you see him, you know why. Because this guy he embodies the new India, the new resurgent India, which he has taken the entrepreneurial plunge. He has created a fantastic institution, which I'm happy to say is one of the key, movers and shakers in the market. I present to you none other than the MD and CEO of IDFC First Bank, V. Vaidyanathan. Welcome.
So Vaidya, thank you very much for coming, and we couldn't find a more appropriate person to do this as the last fireside here for wealth creators than yourself, because you really have sort of embodied not only the topic of this discussion, which is funding the 5 trillion dream, India's 5 trillion dream and beyond, but also created wealth in the process. As a wealth creator, you have more than 65% in our rankings. You have 65% growth in average market cap. That's just in 1 year, and it continues. The fantastic run continues. So I wanted to start off, and your story is so interesting. We will touch upon parts of that during the course of this discussion. But let's start off by saying, you as a career banker, and having then taken the entrepreneurship plunge and created this wonderful institution, also a merger. Tell us I wanted to get a sense of the then and the now from you. To start off this discussion, tell us about the economy then, when you were a banker and you were, starting off, and what the changes you see as an entrepreneur banker right now, and what are the pluses which are actually powering this dream?
Thank you. First of all, good evening, everybody, and thank you for inviting me. See, actually, if you go back a little back in time, if you see the bad, let me say, the villains of Indian movies, right, in 90s, 80s, etc., Pran, Prem Chopra, Danny, they were all businessmen. So businessmen were those material. Now, businessmen, nobody portrays business people as, So now business people entrepreneurship is accepted. Entrepreneurship is seen as a source of employment creation, excuse the way the government speaks these days, ease of doing business and all that. And entrepreneurship is the people recognize that they pay tax and they grow the economy. And so this massive shift of the lens with which we see entrepreneurship in a positive way, I think is the biggest change that has happened in the last few years.
And profit no longer is a bad word. Earlier, you used to, like you said, frown upon people who are making money. Today, it's an aspirational India, and it is something which everybody, every young Indian, even outside of the main metros, is looking forward to becoming.
That's absolutely correct. And profit is not a bad word. And institutions are getting created. You see, good quality, global scale corporations are getting created, which is a very, very big thing. Because India was a bunch of small scale industries, no company had a market cap more than 1,000, 2,000 crores, maybe 20, 30 years ago. Suddenly now we have market cap of 3 lakh crore, 5 lakh crore, 6 lakh crore, 10 lakh crore. And corporates are, governance is becoming a really big deal. Quality of people, number of people who are creating wealth. You talked about, our bank creating wealth in the last 1 year. Thank you for that. But it's still just the journey. The number of people who are participating in the process of getting wealth in form of stock options, etc., that has dramatically changed. Where was that even 10, 15, 20 years ago? I think lots of you talked about creating a good institution, but really so many people are involved in creating it. I really mean it. So all these things are dramatically changed in India. Governance, quality of leadership, quality of infrastructure, all of these things are dramatically adding value.
Let's talk about some of the engines of growth, Vaidya. Earlier, the then part of the story, infrastructure, after some experiments, became a sector which people used to literally run away from. And banks used to have burnt their fingers badly on infrastructure. Institutions have failed because of that. Infrastructure finance was a bad word. Today, we have a completely different setup, where infrastructure is being created at a rapid pace, and banks and institutions are actually, rushing to fund it. How do you see this change playing out?
It's a great question, by the way. Even our bank really was set up to finance infrastructure. It is called IDFC, Infrastructure Finance Development Corporation. And it just so happened that that window of India, somewhere about, let me say, the late 2000s, going up to 15, 16, 17, maybe 14, 15, there was a period when people would never be clear about, once an infrastructure is funded, whether they will get land clearance, whether they will get environment clearance, and things would get stuck. So one big difference, since you asked for the difference, is that most project financing that's happening now is happening after getting these clearances. So therefore, your projects don't get stuck, or that's the belief. The second big difference is that when institutions are financing it, they are financing it after, many of them are getting financed after project is completed. So as a bank, our bank, for example, we are not very much in infrastructure financing. We burnt our fingers very badly, so we're coming out of it. But as in India, I believe infrastructure financing is very important, and I think I'm beginning to see institutions doing it.
Not just about your bank, but as a general observation, Vaidya, your former boss, Mr. Kamath, he is heading NABFID, right, which is into infrastructure. Do you think banks will be more and more, banks and are we heading towards the, in some form, the era of development financial institutions, again in the form of NABFID and others? And are banks going to partner with such institutions in the future?
I think really banks have realized one thing, that project financing, where equity risk is taken by the bank, is not the business model for a bank. Okay? Because project financing has its sort of uncertainties unless, like I said, land, environment, every clearance is taken. Because we are dealing with public deposits, it's not my personal money.
Correct.
So we cannot put public deposits on the line for a business where your repayment is not certain. But what is the big difference now, Saurav? The big difference is that, one, like I said, many projects are getting done after, for example, the road is already laid, toll is already coming. So there is no problem financing that project because the cash flow is already throwing up, coming up. That's one difference, cash flow. Secondly, you are finding in India, large international players wanting to take a part of the India pie. I've heard of KKR, Cube, many of these guys are coming and they're wanting to take a big part of the play. So because of the narrative, rightly so, we have created about India, the 100 lakh crore investment is coming up in infrastructure in the next few years in the country. So because of that, there is a positivity about India, there's a positivity about governance, there's a positivity about completion of projects, and therefore international money is coming to India, which is a very big change.
That's a very good point you make, Vaidya. Do you think it's somewhat related? The question I'm going to ask you: do you think this international,
attention,
interest into India is also going to spill over in some form to asset monetization? Because that's also one area where the government is keen to do.
It's happening already. You see, with or without international, you see how roads are getting built. NHAI, they're completing the project, very professional. We have some residual projects that are being still completed by us, and they'll also wind down in due course. But we are seeing it, they're very professional. If they don't complete a project on time, they will acquire it back, they will finish it for you, and then lenders will get their share. I think it's massively moving.
I think this whole business of hard stops, clear decision making, I think that's what is one of the clear different
It's
points
a big deal. One is the governance. Plus, see, our minister, Mr. Gadkari, I don't know, there's not a single soul I've met in my life who's not inspired by him.
True.
Not a single soul. Man, can you imagine somebody putting up 56,000 kilometers of roads in 8 or 9 years, what India has put in maybe close to 75 years?
That's true. Let's come to the other engine of growth, which is being talked about a lot, particularly in the context of the recently concluded G20 meetings in India, Vaidya. That is the digital public infrastructure. India's DPI earlier, which used to be called the India Stack, is now the toast of the world. And we've been writing about it at length in Business Today, various parts of it. And it grows, it keeps growing. And Nandan Nilekani is somebody who's also at the forefront of many of these initiatives. How do you think that is also powering? And because you're a very digital savvy bank yourself, how do you think that is powering India?
So we are using this infrastructure extensively day in and day out. In fact, a large part of a bank is built on the new digital infrastructure. So let me just, for the context of the team, because the word digital India has gone around so many, so I'll just frame it for you as to what it is constitutes of. From a lender's point of view.
Yeah.
You see, for example, earlier, not long ago, 10, 15, 20 years ago, if you had to take a loan, what would you do? You will go to a bank, the bank manager probably appraise you, appraisal process, probably income tax returns, they'll take a signature from you, they'll appraise it, probably loan will come back after maybe, 8 days, 10 days, 20 days. Now, on talking of infrastructure, let me say KYC is digital. After KYC, let me say the agreement with the customer is digital, e-agreement. Mandate, by giving a debit instruction mandate to your bank account, that was PDC earlier, now it is digital. Then after the loan is booked, monitoring was physical, now monitoring is digital. For collections, if you remember, someone used to come to your place for collecting or somebody used to call you. Now, you send a UPI link. Agent is not going to customer's home. You send a link and the customer pays you on a link, UPI link. So every part of the process has now become digital. And even if you're doing a verification of a customer at home, somebody would come to the customer's place earlier. Now you can geotag the employee you visited, and you can geotag the fact that they indeed visited the premises, so controls have become better. So that is one ecosystem. Then when you click with the government point of view, Aadhaar is a massive, biometric. The fact that everybody in India has, identity itself is becoming a big deal. Then DigiLocker is a big part of the digital India infrastructure. The broadband connectivity to 550,000 panchayats, etc., or of the villages, etc. That's a very big achievement. BharatNet. So this whole ecosystem coming together and government getting involved, this is a key point. Government getting involved in making a digital infrastructure is a key point. RBI getting involved in innovation is a key point. It is not key, chalo, government stays out of business, tum kar lo. Aisa nahi hai. Government is actively creating all of these things. I feel that's a very big deal.
And also on top of that, you have the entire startup ecosystem using DPI extensively. All of this.
Can you imagine a startup ecosystem, 100,000 startups, DPIIT approved. And by the way, I saw the process by which they approve it. I went to the website and talked to some people. It's pretty elaborate. You can't just walk up and call yourself a startup. There's a proper process to it. So 100,000 startups, 1 million jobs. Okay, if I'm not mistaken, something like about, huge, I don't recollect the number offhand, but huge amount of dollars coming to India because of that, the startup. So basically, this is a massive, massive thing.
Let's come to the other engine of growth, Vaidya, the MSME sector. And, we have talked about MSME being an engine of growth, how so many of the MSMEs are, can actually potentially power the 5 trillion dream. However, MSMEs also face a lot of challenges, particularly post-COVID. Several of them have shut down. There is a problem of, financing, access to finance, corporate governance, and all of that. How does a bank like yours view that?
See, first of all, we all have to recognize, and I'm sure everyone in the room will agree, that MSMEs have a very, hard life. Very hard life. Yeah. It's not this life, right? So, if you're a plumber, or not plumber, if you're a welder, or even if you're making jewels, the sprinkling of the sparks coming at you, difficult working environment. If you're a small trader sitting in a shop and waiting all day for getting customers, and usually non-air conditioned, it's a difficult life. So, to top up this difficult life, they also had, difficulty availing finance. So you're mentally stressed, physically stressed. I don't know what bigger stress is than this. So we haven't been able to solve this issue of the physical difficulties, etc. But at least now financing has become digital. And I think that's a massive growth. For example, our bank has been heavily focusing on this. We finance typically small entrepreneurs of various sizes. Let me call it between 100,000 to maybe 1 or 2 crore rupees. And it's a big space for us.
And more banks, as they sort of get into this segment more and more, do you see that actually these problems being overcome they're becoming better?
See, it's already overcoming because like I said, now to give an idea, for example, you can see the cash flow. You don't need to only give income tax return, and you can give instant financing. All that is well known through the digital architecture. I won't expand on that. You probably know that, but our bank, for example, we focusing heavily on 3 things. What is well known as RAM: retail, agri, and MSME. To give you an idea, this company started in 2010. The loan book was under 100 crore rupees, retail. Then on NBFC platform, it grew to about 35,000 crores. 35,000 crore loan book in those 8 years. Now it has become 1,40,000 crores. So 100 crores to 1,40,000 crores in about 13 years. So we love this business. It's not, you can see it's a one-way path. We believe for the next 8, 10, 15, 20 years, assuming my successor continue with those theories, we will continue to build the book.
You spoke about retail, Vaidya. Retail is being seen as one of the key engines which can actually part of the services sector, which is very important in India's growth story. But retail also comes with risks. In the sense that, you have these also the fintechs coming in, buy now, pay later, unsecured loans, all of that. How do you see the retail story vis-a-vis the risks?
See, first of all, when we're lending business, particularly in retail, frankly, whether retail or corporate or infra, whatever, we have to be very, very, very conscious of risk. Because risk is there. Who can deny that? Okay, we have to be very conscious of risk. At least in our bank, we have a 10-step underwriting process, which includes the go, no-go criteria, scorecards, physical verification where ticket size is more, cash flow evaluation, identity checks, fraud checks, many of them. But frankly, every bank is doing that, but we are doing focus. Our experience in this business for like 13 years now, our gross NPA has always been 2% and net NPA has always been 1%. Off late, it is 1.5% and net is 0.5.
And how do you achieve that? What is the secret sauce?
It's not a secret sauce. Actually, we have to stay in the cutting edge of technology and respect controls. Because in this country, getting business is no problem. I mean, for us, we have, India demand. We all talk about India and people who... There is a lot of demand. You don't have to chase credit. A lot of demand. We have to, in fact, exercise discipline that I don't want so much credit. And we reject unfortunately, we reject 40 to 60% of the loans coming to us. 40 to 60%. So, discipline.
What about agri? You spoke about agri being one of the 3 areas where you concentrate as a bank. How has been your experience on the agri front?
Agri is phenomenal. I find it rather tragic to see that when we go to the rural market these days, and it's been 75 years of India's independence, even now we find it is completely unfunded. So unfunded, I can't tell you. The other day I went to a village called Gayazabad, and we met about 70 villagers. And most of them were taking money from us for buying a buffalo or buying a goat or buying a cow. Then we went to another village where we were financing another, category of products as specific to that village. You will not believe the typical ticket size loans are 2 lakh, 3 lakh rupees. The economics of a cow or buffalo typically comes back in about 7 or 8 months. They get the full money back. And after that, whatever the cow produces milk is for free. And our collection percentage is 99.7% in that portfolio. Gross NPA is 1.2%, net NPA is 0.3%. So that is a kind of, we just feel that...
so delinquencies are very low.
Very low, and I don't use the word God-fearing. They are, by the way, because I'm not saying fearing God is a good thing or a bad thing. But I can only say that they are so sensitive. For them to getting formal credit from our bank is so much better than taking informal credit from somewhere else at whatever percentage we know the numbers, maybe 100, 150%. So they really respect it. So I really feel that the more you can do financing in rural India, we are also changing lives. For example, we're doing water financing. We're doing toilet financing. It's fantastic repayments.
No problems on that front at all.
Yeah, we financed 328,000 toilets. So we are financing the, I don't know, you'll find it hard to believe, that we finance the hand pump, we finance the pipe that takes the water to the septic tank, we finance the septic tank, we finance after the water comes to the customer's home, we finance the water purifier, and then we finance then people want the toilet. So the whole thing, kit cost about 40,000 rupees. We are financing 50,000 rupee loans. We have given 328,000 loans, 1,200 crores, gross NPA of 1.3%, net NPA of 0.3%.
In that sector.
In that
segment.
Water. So I'm just saying, you have talked about rural. I think, this is really, India is changing, and all I can say is that, we've given 30 million such loans. Not water, I mean all of these segments put together. So all I can say is that we are practicing it. I'm not giving some general gyan. We're practicing and behaving really well. So I don't know, as the big thing that we're seeing in India is moving from this offline to online. And you can't imagine the power of moving a country from offline to online. And good thing is government is pushing it. They're making it happen.
The other point, let us come a little bit, from look at it from a bird's eye view, of the financial sector as a whole. Now you have, yours has been a bank which is now merged and it's a different entity from how you started off. There are also new NBFCs which have come up from storied business houses. For instance, Poonawalla FinCorp, there is Godrej, there are other companies, Piramals, all of them. And then there is, of course, the Bajaj Finances of the world. How do you see this whole competitive environment at a time when the regulatory arbitrage is more and more and more becoming narrow?
I got it. I'll tell you what, the key thing is this, that as of now, the demand is more than what the banking system can supply credit. Let me tell you, this is a fundamental point. For example, in our bank, we want to grow not more than 24-25%. Demand is coming like 35-40%. We have to say no, unfortunately, even to good business. So now we are saying, okay, how to restrict ourselves? Because at the end of the day, capital is limited. Regulator is conveying the message from time to time for the system to calm down. And we heed those and we respect that. So we are slowing down our bank. Okay, slowing down meaning we want to stay within the radar of what is acceptable credit growth. Because anyway, all credit is good, but we can't keep on putting out more credit all the time. So therefore, demand is so much. So I feel that actually it's good for India that more players come, including the names you talked about. I really wish more come. I really wish there are more banks in the country, because we should not get greedy. Okay, our bank is a bank. अब चलो और कोई नहीं आएगा. बहुत बुरा. अच्छा है यार देश के लिए. और लोग आए, right? और banks खुले. How will India become 5 trillion? How will become India 10 trillion? How will become India? Same 20 banks cannot make it.
So you hope that more and more.
I hope, I wish.
Do you see corporates coming into banking at the end?
I can't comment on that. It's it's a complicated thing because there are more angles to it, and those angles. But generally speaking, I feel that India, trust me, India needs more banks. India needs more NBFCs. India needs more foreign capital. Because we should not forget that, boss, apna per capita income is still very low.
Yes.
So, when we become, I'm raring for the day to become 10 trillion, 15 trillion. By 2030, you'll be $7 trillion economy.
Yes.
So who will finance it? So I believe that current model is good, but more is better.
We've run out of time, Vaidya, but I want you to tell us, sort of as closing comments, we spoke of what was then, what is now. The government of the day has sort of cleared a lot of the cobwebs of the past. Regulations are now stricter, stronger, and more focused. What are the one or two things you want further to see over the next few years, which will ease up the system further?
It's not system. Basically, see reforms. One thing is there that when government did, say, GST, people thought it is only GST, okay, your goods and services tax is great. Okay, of course it's great and very tough for the government to pull it off. Remember how many objections and this, that, etc. Upper house of parliament, lower house of parliament, states, very difficult thing. Government pulled it off. So that saved a lot. But the benefit is in terms of how the roads are working and there are no, tolls on the road, etc. So what I'm trying to say is that reforms we should continue to do. So GST was one big thing. IBs is a big thing because now promoters can no longer start businesses and, not pay a bank, right? They will have to pay because finally, what happened to many of those companies. So the good thing that India has done is that on the corporate side, it has brought a lot of controls now. I don't believe that what happened in 2000s, etc., at least in the near future or middle future, I don't see it happening again. Because people become conscious. I talk to all my peer banks. Everybody's become conscious. Nobody wants to give. We have spoken to many of them, both state-owned and private sector. Nobody wants to dish out money like this, to take this money, okay. That culture is not there anymore, as of now. I hope it stays this way. Now on the retail side, again, a lot of guardrails have come. Bureau has come. Bureau has 600 million records. Cash flow controls have come. You can see directly from... So basically, both retail and wholesale controls have come. It's a good thing. Risks. You haven't talked about risks, but I think two risks are very important. One is retail and wholesale lending risks, we should be very careful. But the big risks that we should be very careful about is cyber. Because there, it is unknown. Nobody can say they're a master. Even we can't. Kya pata what is going on behind the background, right? So we have to keep on controlling more and more layers and layers and layers of security by the latest technology, latest security controls, best people, best talent, invest in cyber. Number two is operational risk.
Right.
It's not credit risk. We have to be careful. But operational risk can become, tumse galti ho gaya, system mein glitch ho gaya, tum controls, velocity control. So these are two controls that come to mind.
So, one of the smartest banker entrepreneurs in the business.
No. Don't say those things. I don't agree with all that, but thank you for that.
A very, very clear and crystal clear view of India's growth story and what the future holds. Thank you very much, Vaidya. Really happy to have you with us this evening.
I want to leave one comment to the audience. Thank you, friends. One comment to the audience, that there used to be the American dream. Abhi tum dekhna, abhi Indian dream aayega. Okay, and therefore all the foreigners, हम लोग कहते थे यार इंडिया जाएंगे, अमेरिका जाएंगे, अभी तुम देखा, the great American dream will come 2030, 2040 के विंडो में आएगा, और तुम सब जो हमारे नीस, नेफ्यू जो अमेरिका में रहते हैं, मैं सबको कहता हूँ इंडिया वापस आ जा, तुम्हारी जिंदगी के लिए अच्छा है, this is a better place to be.
Absolutely.
Yeah,
on
thank
this
you,
note, thank you very much.
Thank you, everybody.
Thank you, Mr. Vaidyanathan and Saurabh, for that lovely session. Can I please invite on stage, ladies and gentlemen, our Chief Operating Officer at the Business Today Multiverse, Alok Nair, to express a token of our gratitude to Mr. Vaidyanathan. Mr. Vaidyanathan, we were still waiting for fitness mantras from you at this one. Saurabh, you're going to reveal the secret sauce. Is the man himself. A huge round of applause, please, for the absolute ultimate showstopper of our evening at the BT500 Wealth Creators Summit. I'd like to thank our sponsors, mutual fund partner SBI Mutual Funds, infrastructure partner Sidco, conglomerate partner Darwin. And I'd like to thank you for being such a lovely audience. A huge round of applause for yourselves. And thank you, I'm your host Ayush Alavadi saying, I'll see you next time.